Hello and welcome. A very good morning. You're watching India Market Open. It's been a good start to the month of December. Our markets have seen solid gains. Now, whether 25,000 happens is going to be what we'll all have to watch. But there's globally a lot of chaos, I believe.
Yeah. Another day, another regime or another government topples.
Yeah. But there's also some stability, guys. Donald Trump saying that, hey, I don't plan to remove Jerome Powell. So maybe that's...
He still has his job, is it?
Jerome Powell, whether he wants to stay on is another question altogether. But yes, I think most of 2025 or the first half of 2025 is going to be understanding what Trump is doing in his second term. But yes, a lot of chaos in Syria. But not too much impact on that on markets quite yet. Let's just have the global setup for you, which is not going to have too much of a bearing on Indian markets today overall, because it's been fairly tepid and timid in terms of US markets. Mixed close on Friday. S&P 500 rose to a record close on positive jobs data. Tech majors definitely aided that rally, and key indices, though, overall closed mixed because the Dow was down about 100 points on the other end. So overall, if you see tech great, so the NASDAQ was up about 1%, S&P 500 fine, Dow was down. Now, US November jobs data is what is in focus, and that was a good number. Non-farm payrolls increased by 227,000 in November. The estimate was 214,000. And remember, 36,000 figure in October was sort of a freak figure because of a whole host of reasons. So the number is good, but not that hot that you would have fears that the Fed will not come in and cut rates later on this month. So the unemployment rate was also up to 4.2% as expected, just right in terms of the kind of jobs data. So it has increased the hopes of a 25 basis rate cut from the Fed later on, and we'll of course see that possibly in the next few days. Treasury yields are dipping on jobs data. 10-year was at 4.14%. Oil has inched up. Remember, OPEC Plus extended its production increase timeline to April, and they will have that entire unwinding through 2026. So that's been some relief over there. Meanwhile, mixed cues for Asian markets as geopolitics obviously dominates, and we'll pull up the Asian markets completely flat on the Hang Seng, Shanghai up, Nikkei up right now. I want to quickly look at the implied open before we get to all of the details of what's happening in Syria. Yeah, about 50 points down on the Nifty. So you might have a little bit of a tough day. But just quickly to take you through what's happened overnight, or I would say over the weekend. Syrian rebels have ousted Bashar al-Assad's 24-year regime. Damascus has been seized by rebels. It would have been great if we had some pictures. Assad has now found asylum in neighboring Russia, and the US has said they could pledge humanitarian aid if the new government is moderate. You should look at this in the context of the Cold War constantly brewing, because the Syrian regime under Assad had great support from Putin's Russia. And for the US, now saying that let's see how moderate these rebels are is an interesting sign to see what happens next. But a quick word from Rahul Chadda. He's joining us this morning, founder and chief investment officer at Shikara Investment, on what the global view is. And Rahul, always great to have you here on NDTV Profit. So thank you so much for joining us today. Let's start by getting your take on the upcoming Fed meet and how big a driver it will be. I think a 25 basis point cut has now been completely priced in?
Absolutely. I think a 25 basis cut is likely to come here. Though pace of cuts from here to June, one can debate on that. So US economy has been surprisingly resilient. Inflation data cooled off, positively in the first 6-9 months, but it's been a bit sticky in recent months. And which is why this December cut definitely. And post that, one has to see more where does inflation head to get a better idea of the rate cuts.
Rahul, good morning. It's also Samina joining in. How concerned are you about emerging markets at this stage? Geopolitical chaos is not impacting equity markets, but I think the bigger impact that we might have to face is what Trump does in terms of policy action in a few months from now. Is this something that's on the watch list for you, and any sort of trades or deals in the emerging market pack would be dependent on what the outcome is in a few months?
Yeah. So Samir, like the way I said, we've got to get used to this geopolitical noise. I think what I did last 10, 15 years was completely unprecedented, and what we're going to see in the coming decade is going to be something which most market participants won't have seen in their lifetimes. So you were showing pictures of what's happening in Syria. We've got the same thing which happened in Palestine, etc. So a lot of these things, Ukraine, of course. So a lot of these things, one has to get used to it. As long as these conflicts are regional, local conflicts, I don't think it impacts markets. When these conflicts get broad-based, that's where the markets are going to get derated. What happened last week was in Korea, where first martial law was announced and then withdrawn, and they tried to impeach the president. That's not kind of gone through, but that's going to weigh on some flows into Asian EM markets for the coming quarter. From our side, see, the way we're looking at it is right now, everybody is comfortably kind of a position in the US. Most clients are of the view that let's see what happens on the tariff front before we increase exposure to EM/Asia. Now, we don't think the worst case on tariffs actually plays out. See, the effective tariffs US has on China today between 18 to 20%. I don't think those go to 60%, maybe 5% more, because the pain of these tariffs is going to be faced by the US consumers. So one reason why the previous government was kind of booted out was because of high inflation. So I think tariffs are more of a negotiating tactics, but till the time market gets confidence that these are pure negotiating tactics and you have some bit of a rate cuts playing through, I think markets will remain range bound here.
So just to drill down on the point on emerging markets, Rahul, and right now, I think a wait and watch before allocations to emerging markets improve or increase. How is India being seen in that context, considering that it could be a relative safe haven from tariff wars, from all of the geopolitical crisis that we're seeing?
So if you look at India, again, clearly everybody liked India, everybody liked the structural story, the work Prime Minister Modi's government had done over the last 10 years, and the continuity and recent Maharashtra elections victory, which was fairly emphatic, is a positive vote of confidence. All that is like what was not comfortable, palatable for most investors was the high valuations and more in line with the growth slowdown. And look, to be fair, this has been part also orchestrated by RBI in terms of controlling this big growth in unsecured retail credit. So it's good from a medium-term perspective, though is a short-term pain. What we saw was government capex slow down post-elections, which were but natural. So as these things pick up, again, I think growth should pick up. And we've been kind of advising investors, our prospects, to look at India around the downticks because that's the best time. That's the best time to enter to Indian equities or add to Indian markets whenever the exuberance is much lower or contained.
Well, you said you've advised your investors to look at India on downticks. How do you define downticks? We are 6% off our recent lows. You want to quantify this for us? Because qualitatively, it's extremely tough to say what is a downtick and what isn't these days.
Absolutely. So I think in a long-term structural bull market, you will have shallow corrections, and that's where one's got to look at. So let's say we find more value in large caps over mid caps. Mid caps, one is fairly cautious, and look, some of these mid caps may even lose you. They've lost 30% from highs, and I won't be surprised if they're down another 20-30% over the next 6-9 months. So one's got to be particularly mindful of mid small caps, but large cap there is value. They never really participated in this rally. Particularly large cap banks are interesting. I think there is still interest or value in large cap or technology names, particularly large cap names. See, our view is for soft landing in US. And with the Trump administration, you're going to see the biggest deregulation in the financial sector, which is the key clients for all these IT service industries. What we are seeing is a lot of these pilot projects on AI likely to fructify into large-scale projects in the coming years. So that should give them a demand uplift. So banks, IT, pharma, they kind of stand out for us in this in India at this point of time.
Rahul, morning, or rather good evening to you. Just one question, Rahul. While a lot is anticipated in terms of Trump bringing up tariffs against key countries, China plus one, etc. This Biosecure Act, quote-unquote reversal that is coming. I don't know if you know the news, but apparently this Chinese companies, 5 Chinese companies has been left out. The proposed law has been left out of the key defense bill. Are these developments before Jan 20th when Trump comes into office? Or could this actually happen because it has a material impact on non-Chinese pharma firms, including Indian pharma firms?
Yeah, I did see this news needed. So we had, I think if I'm not mistaken, 5 Democrat kind of senators who had voted against this. So that is something going to be a near-term negative for the Indian contract manufacturing companies. But look, what was happening also was if you talk to these contract manufacturing companies, particularly the Indian companies, there was a sense that the Chinese companies were offering huge discounts, huge rebates, because there is a timeline for transitioning out of these Chinese companies, and that was 2032 under the Biosecure Act. So similar to what we saw in the chemical space, where you had huge supplies from the Chinese companies ahead of this China plus one, and that impacted pricing. That was the risk for the contract manufacturing company. I think over next 3-6 months, whatever dips come because of this, one would like to increase exposure to the sector because look, the valuations are not so cheap here. It's a bit overheated. But the longer term trend is clear that look, China over between 2005 to 2020 became outsized share of global production. And a lot of these things are going to move away. And look, let's look at it logically. You would not source 80% of your production from one supplier. So I think that diversification is but natural.
Yeah, but Rahul, quick 20 seconds. But you believe this is pre-Trump quote-unquote shenanigans? Things could be materially different. There could be a Biosecure Act post Donald Trump coming to power, right?
Absolutely, absolutely. So this doesn't rule out the Biosecure Act, but
Got it.
I think this just makes it difficult before the hearing.
Before the year. Okay, fine. Makes sense. Okay, great.
Yeah, well,
guys,
that's of course.
Thanks, Rahul. Thanks for joining in today and giving us your thoughts. Really appreciate your time.
Thanks for having me, as always.
Yeah. You know, I think it's important. I mean, today we'll see we'll of course talk about it later on, but I mean, we'll see the stocks correcting because it has been left out of the defense bill. But could this be all that is happening before Donald Trump? Because I heard him say 5 Democrats, etc. So who knows?
No, so I don't know how seriously we should take what the Biden administration is doing right now on its way out.
Exactly.
Because it's 20th Jan, you're going to have the Trump administration come in. His view on China is very, very clear.
Yeah.
It doesn't seem like he will want to have that much dependence for Americans on Chinese drugs. And either way, it's not something that you can pull the plug on overnight.
Yeah,
so it's a long-term place. When you're looking at Indian CDMO players, you have to keep that in mind. It's not something that's going to happen tomorrow or day after. So that's interesting as well.
And of course, these stocks have had a pretty decent run from all the way back in September. So some profits on the table could be seen getting taken off, but maybe more transitional in nature at this stage. A quick check on implied Nifty before we set up trade for you this morning. It's expected to be a quiet start, 50 points lower on the index, but this comes in as no surprise. The last week has been a pretty solid week for the markets. It was event heavy, of course. You had the RBA policy meet, which some may argue could have disappointed, but others may believe that it was buy the rumors, sell the news that played out on the markets. Along with that, you have the fact that US dollar has weakened a little bit and bond yields have come off, and FI money has found its way into our markets at the start of December. Well, how was trade? Friday was a day of consolidation. Money got taken off the table. It was a tight trading range on the index, but for the week, the Nifty is up over 2%. Bank Nifty has been the star performer, up 3.5% in trade. Auto stocks also did okay in terms of Friday's trade. What stood out is that for the last couple of months, we've all talked about how the value remains in the large cap space, and most funds or mutual funds, including the flexi cap ones, do have an overweight as they believe that there is value in the large cap index, but it is the small and the mid cap sector that continues to rally up. Mid and small cap index both are 4 to 5% in the week behind us. Well, a couple of stocks that caught my attention. BSE hit a record high after 3 straight days of gains. HEG was up 27%, 41% 1% on Thursday, took some profits off the table there as China announced a ban on exports of rare earth materials used in smartphones and chip making. Titan, Ultratech, Adani Ports, Axis Bank, Bajaj Finance and HCL Tech were the big gainers of the week, up 7%, while on the sell side, Hero MotoCorp, Cipla and HDFC Life lost quite significantly, down about 4%. Well, Tamanna, well, these were the numbers that we had in terms of market performance. It seems like FIs are coming back in some way or form, and I'm confused what the smart money now is. I would like to believe it's DIIs.
Yeah, so as of Friday, you had FIIs selling once again. So your fund flows were positive for domestic investors. They bought about 1,659 crores. FI sold 1,830 crores, but not massive on either end. So I think the real flows will begin, if at all, when fresh allocations happen in the new year.
Yeah.
Maybe a bit of Santa rally here and there, but otherwise it will be fairly quiet.
As long as we aren't selling off for now, I think we'll just take heart from that. But remember, 24,700 has been important. What we saw on Friday as well, a close just below that. 24,350 has been taken out beautifully well last week, and that was turning out to be a resistance a few days ago. But now, of course, acts an important level of support for the trade. So all in all, the setup doesn't look too bad. 25,000 is what the markets will want to see for the December expiry, and the bulls will attempt that. But for now, it's small baby steps. 24,700 should be on your radar on the upside, with 24,500, which is going to act as support. Bank Nifty's had it good. Friday was a morning of profit taking after, of course, the RBI policy. Now, whether you see follower buying over here into this week of trade is what we'd like to wait and see. A few, Neeraj, actually, you might want to come in. Bank Nifty, 3.5%. I think it's had a good run. Thursday was strong on anticipation of policy action. Well, I think bank stocks might have expected a rate cut. We did get a CRR. We did get a CRR in that sense. Do you feel the bank could continue? And if yes, is HDFC versus SBI, the debate still stands? I have no idea.
Yeah, actually, Gautam Shah is saying just buy those two and don't buy anything else, right? So it's interesting. But yeah,
you know what worries me, Neeraj, and this is what we've talked about since maybe September last year, of how the value is in the large cap space. Every fund manager we talk to reiterates the same thing. But look at performance this week again. Nifty is up 2.5%, but mid and small cap is up 5%. Now you will say they fell as much.
No. Now, what I'll say is that the interesting statistic, I think now we need to define what is stocks with mega cap, large cap, etc. The 250th stock on the market, on the markets, on the market wide, right? So the 250th is the small cap stock. That market cap is 34,000 crores.
Definitions have changed.
Definitions need to be changed a little bit, because that is not a mid cap, that is not definitely not a small cap, right? So
but
therefore,
Neeraj,
I think those things need to change.
It's all relative, right?
Yeah, but I'm just saying that a 34,000 crore market cap is not, no matter what situation you are in, is not a small cap. It's just that it's bucketed as a small cap stock.
You're going to have to go wider to find value, or that kind of an upside then? Is that the takeaway of what you're saying?
Because, no, to my mind...
If a small cap has risen that much, then the large cap has also risen.
Yeah, to my mind,
terms.
that now a small cap fund manager has enough liquidity and depth within the small cap space, because those market caps are also so high and the volumes are high.
And that's what's ironic. Their float is available, liquidity is there.
So you will bet on small caps and still make money.
Then why
forget the index.
But everyone that we've spoken with should agree.
Yeah.
Everyone talks about value in large cap. You've got to be betting the house, because even, I mean, for example, we just spoke to Rahul Chadha, and he still maintains that it's large cap that looks cheap and attractive. But having said that, money is being made in the broader markets, which we cannot deny.
Yeah, so very quickly, just a small thing on the trade setup as well. I mean, so all eyes, I would reckon, this week might be on the US data, right? The CPI data. And if indeed the November CPI shows an increase of 2.6% or thereabouts YOY, and that's stubborn inflation, or if it's hotter, does it actually negate this December rate cut hopes that have come in because of the Friday data? So I think that is one key thing. The good part for India is that banks did okay on Friday despite no rate cut, and VIX is low. The last 2 weeks, VIX is so low, which is a great positive from a bull's perspective. So that is great. Wonder if passenger vehicle companies come in focus because of the price hikes announced, though effective Jan 1st and for cost reasons. And like we said, CDMO companies will be under an eye of a storm today. So expect the start to be negative. Do they recover in the course of the day is the question.
So just one more thing on passenger vehicles. What Uttarakhand government has done, I thought was important. It's small state, but then just in the sense of, is this going to become the norm, where they have added a green cess on all vehicles coming into the state, except for electric vehicles. And yes, that's a fragile ecosystem kind of a state, so perhaps that's why. But as a trend, are you going to start seeing higher taxes on vehicles running on quote-unquote dirty fuel? So then that kind of changes the whole situation as well. So that was one interesting point to watch out for.
Oh, and of course, we've got a busy week. Liquidity may be tight. Remember, the primary markets are going to be action-packed, and there are some very interesting IPOs that open starting Wednesday. So you don't have anything today, but of course, cash will be kept aside to make those allocations, and that could explain why DIs have sold, actually. Maybe parking some money outside to go into these IPOs. You've got 11, 5 coming in from the main board, and the rest of the chunk, which is 6 of them, will be on the SME. So that is something else that's going to keep all of us busy. Apart from secondary market action, it's going to be primary markets that we'd like to focus on. But as always, we've got a whole bunch of stocks that we will be eyeing in early trade, and a couple of important ones that we are tracking this morning. So I'm just going to quickly take you through what I have on my list, and then of course I'll hand it over to Tamanna and Neeraj for their list of stocks that they are tracking too. Let's start with CEAT, because that becomes an important stock. They've acquired Camso brand at very attractive valuations, we understand. They've acquired Camso in an all-cash deal valued at $225 million. What will Camso do for CEAT? It will give CEAT the ability to widen its product base into tracks and construction tires. Brokerages like MK see a 15% upside to the overall revenues based on calendar 23 financials of Camso. There are a few benefits of this acquisition. This will give it ability, like I said, to widen its product offering. They'll also give CEAT access to a global customer base, including over 40 international OEMs. So all in all, a positive. Not too many upgrades in terms of a price target aggressive hike, but nevertheless, brokerage is constructive about CEAT. It's too early to tell, but over the course of the day, you may have brokerages coming out and revising their target on CEAT. But all in all, a positive on the counter. You also have the management who will be talking to Tamanna shortly, so we'll get some more details of what this means and why Camso was acquired by CEAT. Apart from that, the other big one becomes Paytm. I'm not too sure about what the valuation of this one are, but nevertheless an important one in terms of stock movement. The board of Paytm has approved the sale of stock acquisition rights in PayPay Corporation Japan. Remember, PayPay Corporation Japan develops and provides electronic payment services. This is a subsidiary of Paytm. Paytm has approved the sale to SoftBank Vision Fund 2, and the sale consideration has come at 2,364 crores. This transaction is expected to be completed in this calendar year, which means in the next 3 weeks the deal will be closed out and executed. The sale will fortify consolidated cash reserves for Paytm. Remember, they have a significant cash holding of about 10,000 odd crores that will be used in the business back home in terms of expansion and getting the house in order. Those are the two companies that I have. You've also got an order win, and I like these order wins because they usually mean that these companies react quite well to them. RITES has emerged as the highest bidder for Creek Highway orders, and it's a pretty significant one, $9.7 million from Guyana government. So it's an international order win for RITES to the tune of $10 million, which converts back into about 75 to 80 crores. RITES should be moving up. Along with that, I think Paytm's sale should also be considered a positive, and CEAT's acquisition is being viewed as a positive too this morning.
Yeah, CEAT's acquisition definitely a positive. I have 2 negatives and one which could have been a positive but isn't anymore. So let me start with Godrej Consumer. So the management has given a fairly gloomy outlook. It's a mid-quarter sort of sound off from them, and it's like a half-year review. They say disruption will keep the business stressed for the next few months. The company also says that 2/3 of their India business will be impacted. India revenue will grow in mid-single digits with a flat volume. Q3 India earnings to decline by high teens. So the reason is a high base which has come in and raw material pressure. Margins to be below the normal range of 24 to 27%. There's an issue or headwinds for their soap portfolio because of palm oil prices. That's one big component, and those prices have been shooting up. The soaps portfolio accounts for 1/3 of the company's revenue. Because of the winter, the South India cyclone, all of that has impacted their household insecticides business, which accounts for 1/3 of their India revenue. So the company has been very, very, I would say, forthright on what their business is looking like right now. Two notes out today, and both with a different view, but I suspect you will see a downtick at least when markets open this morning. MK says that it's a downgrade to a reduce from an ad for them for GCPL with a target price of 1,225. They've cut earnings by 4 to 7% to factor in demand and inflationary stress, and they see a 23% margin growth on a high base of 29.7%. So this is the impact you're seeing of say, economic slowdown to some extent and high raw material prices. Citi, meanwhile, is quite positive. They've rated a buy for the stock with a target price of 1,550, a potential upside of 25%. They believe that long-term structural growth drivers will remain intact, and they'll see new growth momentum in newer categories in India. So, which is why it's a positive from them. But overall, I think you'll see a thumbs down on Godrej Consumer at start. Poonawalla Fincorp is the other one, and really management woes is something that this company keeps facing, and the latest one is fairly shocking, honestly, which is why I thumbs down. The chief technical officer, Dheeraj Saxena, has quit, saying he was harassed by the HR. He worked with the company for over a year and has quit on September 6th. He's alleged harassment and unnecessary interventions by the CHRO, nonetheless, and no one below that even. They say that the CHRO's interventions created major unrest, impacting IT delivery. So it's a astonishing allegation, and he's quit because of it. So, of course, the company has undergone management changes recently. Arvind Kapil joined in June 2024 as MD and CEO. Harsh Kumar also joined, that's the CHRO who's in the eye of the storm, in July 2024. And his concerns were about bringing in new people, which caused interruptions with transition. I mean, I don't know what it's about, but you know, this is a listed company, and that kind of a statement from the chief technical officer to quit and say very clearly that the CHRO is not letting me doing my job is just astonishing. So I think in that sense, in terms of governance issues, you'll see a downside to Poonawalla Fincorp this morning. Suven Pharma was a thumbs up. I mean, the news is great for them, but you know, as Neeraj will come in and also tell you in a bit of detail, what's happened with the Biosecure Act has sort of burst that bubble. So I'm talking about it in thumbs up in terms of the news for the company. This is good news for the company. I'm not talking about how the stock will react this morning, so let me just make that clear. They have acquired a controlling stake of 56% in a US-based company called NJ Bio. This acquisition's been done with an investment of about 535 crores. It will close by December end, financed through cash reserves, so all of that is good. It helps them expand their market in a fast-growing CDMO segment, provides strategic footprint in the US, cross-selling opportunities, creates a unique tech-focused CRDMO. So this company that they are buying is a contract development and manufacturing organization and serves pharma innovation customers globally. So it's good news for them. But then again, I think all CDMO companies will see a bit of we'll see some pressure because of expectations.
Yeah, most certainly. In fact, you know, guys, what we'll do is my set of 3 stocks we'll take in after a moment, because since Tamanna mentioned this Biosecure Act, we have an analyst with us and we have our in-house expert Varsha also with us. So Varsha, I'll first take to you before we go to Sumit Gupta of Centrum, and just tell us what has happened. Why is it a setback for Indian CDMO players?
Well, Neeraj, the main reason why all the CDMO companies were buzzing in last 3 to 4 months was US Biosecure Act. Now, what has happened is the US Biosecure Act, which aimed to ban 5 Chinese companies from US funded research, was removed from a key defense bill. The targeted companies include BGI Genomics, Wuxi Aptac and Wuxi Biologics. Now, why the act was proposed in the first place? Because supporters argued that it was needed to stop China from misusing biological data for harmful purposes. Now, why this act has been dropped? Because lawmakers objected to blacklisting companies without a fair process, and they wanted clear rules for adding and removing companies from such lists. Now, what is the impact of dropping this act? Now, this act is hard to pass. Supporters may try it to attach to other critical bills later, but this is negative for Indian CDMO companies like Divi's Laboratories, your Laurus Labs, Syngene International, Newland Labs, because all these companies were pegging on US Biosecure Act, which is in simple words is nothing but China plus one strategy. But now, since these companies will not be banned, there's tough competition for the Indian CDMO companies, because the CDMO base, the China actually has the CDMO base, and these 5 companies top when it comes to CDMO contracts.
Varsha, thanks for that. And Sumit Gupta, AVP of Research at Centrum, joins in right now to talk about this particular thing. Sumit, if you would have scanned the news, what kind of an impact does this have on Indian CDMO players? Because yes, there's a lot of uptick in anticipation of this. And is this a temporary impact according to you?
Hey, hi, thanks for having me. So first is on the overall, this particular segment that has come. So it might be a sentimental negative in the near term. However, if we see from structural point of view, China has been the top CDMO player by providing generous government support and labor, which is nearly 25 to 30% less expensive versus the other countries. However, if you see, trade restrictions were imposed by the former US President Donald Trump, and the COVID-19 pandemic also caused supply chain disruptions. At that point of time, China began to lose its market share. So this led to India's CDMO business taking advantage of that particular situation, and this was a huge benefit and a game changer as the big businesses began to de-risk by awarding contracts to the Indian firms. So structurally, if you see, it has been going on for the past few years, and post-COVID materially. And going forward also, we expect this particular story to go forward also over the next 8 to 10 years. So in the near term, obviously there might be some some issues in terms of how the act gets passed. However, going for in the long run, we are positive on the Indian CDMO industry.
So, Sumit, let's get specific. Which companies do you think, which Indian CDMO players do you think will see the biggest hit today, and then actually give us an opportunity to buy in if required?
We don't have coverage on CDMO sector as a whole, but the top 5 companies, just obviously companies like Divi's or Pharma, they are one of the biggest beneficiary of this act. So I won't be going to specific names due to not being coverage. So, however, we are positive on all these names.
Any of the mainstay pharma companies which have a large CDMO presence? I mean, were you trying to say that? And therefore, are there anything from that act that might react today and might be good buys?
Yes, yes.
So which one would those be?
So it would be around, you can say, companies like Divi's or Pharma or Suven Pharma. So
but you don't have coverage there. No, but large cap pharma, anybody which has got a large CDMO activity and therefore they might also react negatively today? The Sun Pharmas or the Lupins of the world? No.
No, not that much.
Not
but
that
majorly
much. Okay.
It would be, but it would be majorly the large CDMO companies that I would be focused on.
Okay, so in that sense, watch out for a Divi's, watch out for a Suven and some of those which will be hit.
Yeah, but
right. No, please continue your point, Sumit.
Okay, so overall, the structural story remains positive for the Indian CDMO space as a whole, because irrespective of the US Biosecure Act, the mindset of the overall business across the world has been about de-risking from the China. So that is a structural play going on across the globe.
Okay, great. Great talking to you, Sumit, this morning. Thanks so much for taking the time out. I think the view from both experts who we've spoken to, Rahul Chadda and Sumit, seems to be that this is a temporary hit today. But watch out. Laurus, Divi's, Syngene, Piramal Pharma, all of these will have a negative start today for sure. Whether they bounce back remains to be seen. Okay, very quickly, the other stocks that are on my radar as well, aside of the ones that Tamanna and Sabina have already spoken about, there will be Biocon, because Novo will cut the list prices for insulin aspart by 75% from 1st Jan 2026. Now, this is a big negative simply because Biocon's product aspart still not launched as yet. They're waiting for the Malaysian facility to get the go-ahead. But when it gets launched, we'll already face this 75% price erosion. And brokerages like IIFL had estimated about $80 million of revenues for Biocon in FY27 from aspart. So therefore, Biocon has a double negative today, a double whammy, and will correct for sure today. Even if the Biosecure thing had not happened, this aspart news, insulin aspart's news, is a negative, and the stock will crack today. So watch out for that one. AIA Engineering is the other one. US has imposed an anti-dumping duty of 4.3% on certain high chrome cast iron grinding products, and the ADD, or the anti-dumping duty, is effective 6 December. So effective already, and therefore this one could have a bit of a negative reaction. So watch out for this one. Just one small positive from my end. Welspun Corp, 2 orders in USA for supply of pipes of natural gas pipeline products. The total value of the orders received by the US plant in Q3 alone, 7,000 crores. That's a large one, and therefore could react positively.
So Welspun Corp is going to be one of the positives. In fact, we'll take a very short break, but going into that break, let's take a look at what's on the NDTV Profit watch list this morning. A quick recap for you to plan your morning as we go into that break. So Paytm first, it's been on a selling spree actually. It sold its stake in PayPay for 2,364 crores. Remember, this is not the first one. So Paytm in its revival mode is shoring up the bank. So you should look at it in that context. RITES has won an 82 crore order from Haryana, not a big amount, but will be sentimentally positive. JSW Energy is going to set up a 400 megawatt solar plant. CEAT has acquired Camso's Sri Lanka business. Lloyd's Metal might see an uptick because Incred has a positive view and sees a 40% upside.
Yeah, and you've got a whole bunch of other stocks that will be on the sell side. CDMOs, we've already told you why those could be under pressure with US Biosecure Act removed. GCPL, it's a weak quarter update. The stock could see some selling pressure in trade today. And Poonawalla Fincorp, governance problems, CTO resigns now, and the stock will see a change in sentiment in today's trade. And Samman Capital is looking to raise funds via QIP. Well, those are, of course, all the counters that we are tracking in today's day of trade. Implied Nifty is indicating to a slightly lower start, so closer to 24,600 is what we should be expecting. We'll take a break. We'll come back and tell you how you should be setting yourselves up for this trading Monday morning.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Welcome. This is India Market Open. We're taking stock of the futures and options space. But before that, a quick look at the implied open, which is currently marginally in the red right now. But it's not to say that we won't have a positive start, because ever so how often happens that we start the day with a little bit of red, and eventually, as far as pre-open is concerned, we move into the green. So it's going to be a wait and watch. But as far as trade on Friday is concerned, it was a day of trade where the benchmarks eventually closed flat, marginally in the red for the Nifty, and well, not too much change in open interest. For the Bank Nifty too, we had about a 0.2% cut. So again, while positions continue to be built, we just are not certain of the direction yet. But as far as the Nifty is concerned, in terms of the options market, we are now starting to see a little bit of a shift higher towards, well, at least as far as the range is concerned, based on the kind of writing that we've seen as far as puts go, as well as calls for that matter, because in terms of calls, that the mark around 25,000 becomes a little bit more stronger. But as far as the most amount of open interest in puts is concerned, now shifted from 24,000 to 24,500. Moving on, it was a mixed day of trade, but the market breadth remained positive. Still, we do have longs in NHPC and SJVN and shorts for CAMS and Canfin Homes. And in terms of stocks we saw unwinding, we have KEI Industries, Ipca Laboratories and Cyient looking at short covering, and Deepak Nitrite and JK Cement looking at long unwinding. But that said, let's bring this conversation forward in terms of the trading ideas that we can implement in the near term. And for that, we have Bhavin Mehta of Daulat Capital who joins us. Good morning, Bhavin, and thanks for joining in. I reckon the first stock on your radar is Reliance Industries. What is your analysis? What are you observing here? And what kind of an option structure are you looking to deploy?
Good morning. Yes, so if you look at Reliance Industry in particular, on Friday, we have seen a reversal in the stock price from almost closer to 50-day exponential moving average. At the same time, if you look at the volume, price volume activity, volume on Friday on NSE was almost half that we have seen on an average and even over last three trading session. So it was an extremely low volume sell-off that we have seen in Reliance Industry on Friday. Our sense is that this stock is trying to consolidate between 20 and 50-day EMA and probably looking for a possible breakout in near term. So what we are suggesting is that one should look at deploying a call spread on this particular stock with strike of 1330 to 1370. 1330 strike is currently quoting somewhere around level of 16.7, and one can look to sell 1370 call strike, which is at about 5.6. Your maximum risk in this particular trade will be closer to 11 rupees, and your reward would be as high as close to about 29. So decent risk reward. So one could look for this particular opportunity for next 1 week.
For this specific call spread, it's certainly an advantageous one because, as Bhavin put it, you're looking at a 1 rupee risk with 3 rupees of potential gain. And the second one is that the fact that this is a call spread, the impact of time value decay does not play out as much. But, Bhavin, the other one on your radar is L&T. What is your observation here?
Yeah, so if you look at L&T, it has went into a very nice consolidation zone over last couple of months, and probably the price action that we are looking at for this particular stock, as well as the long aggression that we have seen earlier in the series, we believe that stock has potential to move and break that 3900 mark. And if that happens, move could be much sharper on the upside. So what we are suggesting is one should play this naked call on this particular strategy. Look to buy 3900 strike call, which is currently quoting somewhere in the range of 65 to 55 range, and keep a stop loss of INR 30 and play for a target of 120. There should be a trailing stop loss given the kind of volatility we have seen. But if that stock breaks literally above 3900, my sense is that it will even move past level of 4100, 4200 on upside. So this is one of the counter from capital goods where we continue to remain very positive.
So interesting call on L&T as well, and that's a vanilla buy on that particular call. But Bhavin, on that note, thanking you for joining us and taking us through your two trading ideas when it comes to the options market. We'll certainly keep an eye on that. With that, it's back to you all.
Thanks, Agam. Thanks for that. Well, so watch out for those things and some of those ideas. Remember, this is the time when we get you the top option trading strategies. This 10 minutes, you get a complete lowdown on the derivative space. Okay, let's get a lowdown on the derivative space from somebody who tracks it closely as well, aside of course, our guest already on the show. Soni Patnaik of JM Financial Services with us. On the technicals and the derivatives, and on the fundamentals, Nirav Ashar of Latin Manharlal. Both of you, thank you so much for joining in. Soni, I look forward to your ideas, because every time you come and give an idea and I then see a post on X from you that the target has been hit. So I'm looking forward to those ideas as well. But before that, Soni, what's the index view? We are likely to start off maybe slightly tepid today. Are you still constructive, or do you believe there is a reversal in sight?
Hi, good morning, Neeraj. Thank you for having me on your show. So I think there would be two ways to look at the index. Weekly close that was quite comfortably above 24,500 is indicating that on a positional basis, Nifty is still on the upside. You can see higher targets towards 25,000, but that may happen on a positional basis. If you look at intraday, there is a resistance around 24,750. GIFT Nifty is already indicating a minor gap down around 40 odd points. So there could be a possibility that Nifty opens around 24,700. It may face the resistance because on Friday's close, even though above 24,500, there were quite aggressive open interest additions witnessed in 24,700 straddle. And the put call ratio of the particular strike is below 1. So there's a possibility of call writers dominating this particular level for a day or two, or even it could be for this week expiry. But it does not immediately cause for any sort of a panic one that can see. We believe that the range for Nifty will continue to be between 24,500 on the downside. On the upside, 24,800 can be the higher end of the range. So there's a sideways trend that one can see. Today's dip, I think, just not to panic and wait for the 24,600, 24,550 odd level or the range to get tested before initiating any sort of a buy. So it will be a buy on dip strategy, but not at current levels. And anyway, towards 24,550 could be the level one can buy. So 24,500 is a good support on closing basis. It can bounce towards 24,800, but the next upside of Nifty towards 25,000 or 25,200 can be seen once the 24,800 level is marked. So that stands for Nifty as of now, and wait for the sizable dip on intraday basis to initiate a buy long.
Okay, so wait for an intraday dip and 24,500 remains a support. If that is the thesis, Soni, how would you place stocks? Would it be hedged, one buy, one sell, or are you going all long?
I think it's wise to go for the longs because, we've seen a lot of good stocks which have added fresh long built up on weekly basis, and they've given a good breakout. So these are the two new entrants in the FNO space that I'll be recommending. One would be in CG Power. Now, CG Power, we've seen very aggressive long built up positions adding up in the entire week on week basis, and it's looking quite strong on charts as well. It has given an intraday breakout as of Friday. So one can buy CG Power even in futures. It's a new entrant in FNO space. Keep a very small stop loss of 775 and look for targets of 810. So this is the first buy recommendation. The second recommendation would be in Jindal Stainless Limited, that is JSL. Now that is also a new entrant in FNO space, and that stock has also witnessed good long positions as of Friday. So one can buy JSL on small declines up to 714 futures, keep a stop loss of 730 and look for higher targets of 780.
Well, that's of course a technical view coming in from Soni this morning. Nirav, how are you feeling about the markets? Do you feel like we'll be back to our recent record high, or do you think the journey is going to be tougher and probably a lot more volatile over the next couple of weeks?
Good morning, and thank you for having me on your show. I think the themes of the current government, that is power, infrastructure, defense, railways, are back in the reckoning. And I think we've been seeing some good tendering activity happening, orders being awarded, and I think the overall scenario seems to be improving. So at this point of time, I think the focus will be on the orders and how they are being awarded. So we are seeing a lot of infrastructure players touch new highs again, orders being rolled out. One important point which I would like to mention is the HVDC order, that is high voltage direct current order, which was issued to Hitachi Energy by Power Grid Corporation, and the statement which has come from Hitachi Energy that they expect 3 to 4 more orders coming. So I think power T&D activity has started picking up. Infrastructure orders are being given out. And of course, defense is also picking up. Railway activity, we are seeing orders being awarded. So I think at this point of time, the focus will be on the order wins. Then, of course, the focus will shift to the execution part, which is a difficult part. How to manage the availability of skilled manpower, inflation of raw materials, cash flows, and so and forth. So that will be the challenging part. But as of now, I think the going seems to be good. The global markets also seem to be in good shape. So I think the momentum should continue.
Sony, just a couple of stocks before. Okay, think.
Now we have a management.
Okay.
So if we can just go to the management first and then continue this conversation with Sony, because Kernex Micro is a stock in focus. The company's won an order worth 2,041 crores from Chittaranjan Locomotive Works for supply of installation, testing and commissioning of 2,500 sets on board the Kavach equipment. The order is to be delivered by December 25th. Mr. E.B. Rao, who is the Chief Operating Officer of Kernex Micro, Johnson right now on the show. Mr. Rao, good having you. Thanks for joining in. Good morning. Tell us a bit about this order. It seems to be a very large order relative to the deliveries that you as a company have done in the last 6, 12, 18, 24 months. So what is this order about? Is it over 12 months? And do you have the capacity to be able to deliver these 2,000 crores in the next 12 months, sir?
Good morning and thank you very much for this opportunity to discuss. Yes, we got order for 2,500 locos supply, testing and commissioning for Chittaranjan Loco Workshop. And it is to be installed in 17 loco sets in 5 zones of Indian Railway. This order is really big one and execution is a real challenge. Yes, we are ready for this since long time and we have well planned for it. As a first step, we have increased the production capacity. Initially, our production capacity per year was 1,200 units. At present, it is 5,500 units per year. So that is, one is production, we are ready. Second is the inspection by us and quality checks and inspection by RDSO is really time consuming. We have introduced the automation process for this quality check, testing and inspection of the product produced units for delivery. Third is very real challenge is the allocation of locos by railway authorities at allotted loco sheds is one challenge. Second is the installations in 48 hours in one loco is one more daunting task.
Right.
We are
sure, Mr. Rao. Mr. Rao,
Yes.
Mr. Rao, sorry to come in. Just trying to make this easily understandable for our viewers. So it's a lot of challenge. I take it,
Yes.
but I presume that you still believe that you will deliver this 2,000 crore order in the next 12 months. Is that a safe assumption?
Yes. Yes.
Okay, you will do 2,000 crores of orders in what are the margins for an order like this, Mr. Rao? Is it comparable to what you were doing, and therefore your operating margins, do they turn positive for the year with the operating leverage?
Definitely it will be increasing.
So some guidance, sir?
Now you see, we are expecting this profitability around 15 to 20%. We can maintain EBITDA around 20% in this.
Hi, it's also Samina joining in. Fair for us to assume that you've not won this order or rather closed this order at lower margins then?
But so it is good margin, and then real challenge, the execution at different locations. You say 17 different locations it is to be installed. If it is only supply, then definitely we can expect more profit. But installation is there. That too at different locations of Southeastern Railway, Central Railway, Southeast Central Railway, and North Central Railway. So that is really affects somewhat profitability. So I'm not giving exuberant profit tax.
Okay. Sir, also now just break this up for me, right? Because you said that you brought your capacity up to speed in order to deliver on this significant order that you bagged. Does that also mean that you will not be tendering in for any new orders while the company delivers on this one, A? And B, by winning this order, does it open up avenues and opportunities for other big orders to come your way?
You see, in this, there are two different TCAS projects are there for Indian Railway. One is a loco TCAS installation. Another is station TCAS implementation. Already 28 tenders has been called, and we have already bidded for 20 tenders. Right. So we are having better opportunities first in station TCAS and loco TCAS. Third is, yes, we are in R&D of the Kavach Plus and related safety systems of Indian Railways, like centralized traffic control also.
Okay, so I'm just trying to, Mr. Ram, I'm just trying to get a sense of the numbers. 2,000 crores of top line, let's say, in the next 12 months. 20% margin means 400 crores of EBITDA, right, over the next 12 months. Your FY26 numbers might have about 300 to 400 crores of EBITDA. Would that be a fair assumption, sir?
Yes.
And any other orders like this? I'm just trying to get a repeat of Samina's question. Any other orders like this which might come your way after this?
Yes, you say that is what I was saying. Station TCAS equipment tenders, which already we have submitted bids. Right. We are expecting approximately around 900 to 1,000 CR orders.
By when will this come, sir?
By March, already bid submission done. Okay. We are expecting by March 2025.
So there's a good chance, sir, that you will, of course, outdo your projected 700, 800 crore revenue target you had for FY25 then, right? And
yes.
And you also have a healthy pipeline of another 10,000 crores of orders. Is that correct? That still stays as planned. Does this 2,000 crores become part of that 10,000? You've got an additional 10,000 crores in pipeline.
No, this is a part of the 10,000 crores.
Okay. Also, one quick question. You did say that this is a significant order and you have to bring your production up to speed in order to deliver these orders. I obviously don't understand the business as well as you do, but is it as simple as just adding production and then delivering the order? And also, would you look to raise any funds in order to be able to achieve these very ambitious goals and projects that you've actually won? So any fundraising plans that you're looking at?
It is not an easy task since we were expecting this order since 6 months. So we have planned our production capacity enhancement methodologies with some of our partners. That is one. Second is, as you rightly asked, this investment or the funding requirement. This one also we worked out. And these orders were anticipated. Of course, it is now materialized into order.
Got it.
But this was expecting 8 months back.
Got it, sir. So
we
therefore,
were
no
making a
fundraising,
plan.
right, Mr. Rao? No fundraising. That's the answer, right? Quick, 5 seconds. No fundraising.
We have already made
arrangements. Okay, great. Mr. Rao, congratulations on this. All the best for the 900 crore and the remaining 7,100 crores of orders for you. Thank you so much for joining in. We need to slip into a very quick break, though. Come back with the pre-open session.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Right, back with the pre-open session in about 40 seconds. I urge viewers who, if you've missed the Kernex Micro Systems interview on our channel, do log in and try and hear that interview. Nirav, you probably got a chance to hear what the guy is saying. Now, just trying to work, me and Samina were talking about it. It's a 2,200 crore EV company, right? The EBITDA for FY26, presumably at 400 crores. It doesn't seem to be a one-off because they anticipate other orders as well. Trading at about 6 times EV EBITDA has not performed at all in the last 10 years. Would you give it the benefit of doubt? Is it a company worth looking at?
Yeah, so I would like to point out one thing. I'm very happy that the company has won these orders. We know one thing that this company has been doing pioneering work in anti-collision devices since the last many years. They obviously did not know the twists and the turns of bagging orders from the railways because all the issues which are there, as you know, in bagging orders. So they focused on exports. They have been focusing on exports because it was difficult for them to get bag orders in India. But I think times have changed, and today they've won this order. Hopefully they should be able to execute it, but there will be the set of challenges because the working capital requirements, the manpower requirements are definitely going to go up. There's a lot of competition also in this space. I think one other company, HBL Power Systems, is also a very strong competitor. So, but I think hopefully there is, we have to give them definitely the benefit of doubt. I think it will be a tough task, but they are likely to deliver.
Kernex, that's an interesting stock. They've bagged an order which is probably, or actually is greater than the market cap of the company. Hitting upper circuit as expected, this also opens up the doors to many more significant orders coming in for the company. They're healthy on their cash. They don't require to raise any funds to increase their production capacity either. Sony, I would love to talk to you about Kernex. I don't know if you track this one, but you want to have a go at the counter. But with Kernex, one more stock that I want to add before I talk to you about BSE is HEG. I know it's not in the F&O space, but what a fantastic run last week.
Right. So, morning, Samina. If we talk about Kernex, then, on charts, it's looking decent as of now. In fact, there's a good support of 1100 and 1130. So, that range has got multiple support. Immediate basis, there is a resistance around 1200. Now, if that level breaks, you can see some further upside towards 1250 odd levels. I think that's a level to watch out for. It's already indicating that somewhere around the pre-open is indicating that somewhere around 1190, 1200 is the opening rate. Better to wait and watch and see if it can cross the 1200 resistance. Above that, you can see further upside. If we talk about HEG, I did track the stock. It was looking quite strong on charts, and it has given a very good weekly close, in fact, on charts, and a very strong breakout above 530. Now, the stock can remain in the range with 530 as a good support on the upside, 600, 620 as an immediate support, an immediate resistance. The next upside in HEG can be seen above the 620 mark. Above that, you can see it heading towards 660 and 680 on a positional basis. So one can continue to hold longs in HEG, but with a trading stop loss of 540.
That's HEG and a view coming in on Kernex. Sony, also BSE made a record high, 4 straight days of gains. It's looking like it's in good stead. Long trade recommended on BSE?
Last week, we've seen BSE, MCX, CDSL, the entire sector rally up quite strongly. At current levels, perhaps not a recommendation to buy, but maybe on a dip. And the dip has to come somewhere around 5,300, 80 odd levels. Or perhaps you can see a further dip towards 5,200. I think that's the level to watch out for and not initiate any longs at current levels. Wait for the dip, and one can reinitiate longs only on those dip. With a very strong support of 5,000, the stock positionally can test 55 to 100 to 5,600. But it has to be a buy on dip strategy.
Buy on dips.
On BSE.
On BSE, buy on
what
dips.
What is dips? Sony, you want to quantify that for me? 53.96 on the stock.
Yeah, so anyway, between 5,300 to 5,200, I think that's the level it can see on intraday basis, and wait for that dip to actually come about. So I think that's the level to watch out for.
Okay, let's go across to Harsh now, who joins us to tell us why Nomura is positive on the Adani Group. Harsh, good morning.
Very interesting note coming through, Neeraj. Good morning. In fact, Nomura rates the Adani Group as the most attractive amongst Indian investment grade corporates. Believes that the current events have not really led to any stress. So they see no signs of stress across the group. Fundamentals, asset quality remains intact. Group's debt leverage also seems manageable. They say that Adani Group, well, in terms of complexity as well as in terms of the manner in which currently the valuations stack up, is the most attractive. And other Indian investment grade corporates stay at expensive levels vis-a-vis where the Adani Group is concerned. In terms of the comparison versus the past, they say that the Adani Group's liquidity management awareness has improved meaningfully, and they should be able to weather the rainstorm with adequate short-term liquidity positions. They're also saying that global banks might halt new financing in the short term, but if that were to happen, it would gradually resume in terms of global financing in the longer term as the dust with regard to Adani DOJ saga starts to settle. Separately, they believe that the big three Japanese banks plan to continue their relationship with Adani Group, so that remains unaffected. Nomura also says that the indictment is only actually an allegation and does not constitute a breach of anti-corruption covenants. Lenders are unlikely in this case to trigger event of default clause, which is part of agreements. A lot of media outlets have disclosed this as a possible risk. Nomura quashes this and says that it's unlikely in their view that this were to actually materialize. Also, the liquidity management awareness has improved compared to earlier. I did mention that. And Nomura suggests, last and finally, that it's not worried about promoter share pledge amid all of the volatility in Adani Group stocks. This is, of course, a large kind of vindication of all that's playing out currently with Nomura in some form or shape, giving or rather constructive with regard to Adani Group amongst all of the events that are playing out.
so much for that, Harsh. Let's take a look at what has been moving in the pre-open session. CEAT up 5.5% because of the acquisition news coming in, and you'll watch that interview on the channel in just a bit from now. Easy Trip also in focus again. Acquisition news for Easy Trip. Rights on basis of order wins is looking decent, 2.5% up. Paytm not moving as much as one would have expected perhaps, and they are trying to shore up cash reserves, but doing okay. On the losing side, Godrej Consumer taking a knock, Biocon as we had thought. I want to see what a Divi's or a Suven are doing this morning. Is there any huge impact of the Biosecure Act details where, that hit for China is not coming in? Suven is actually up this morning. Again, an acquisition impact over there. So all the companies which are going on and going out and buying are doing fairly decently in comparison. Sony, hi. Yeah.
This is a surprise. This may be that the street is saying that this is only temporary.
Exactly. It's, I mean, Jan tak ki baat hai in that sense. And Suven has had a very good acquisition candidate coming in, again, whose business is largely in the US. So
And Biosecure, CDMO business.
And CDMO business. But it's early days. It's early days. We are in the pre-open session, so we'll see how that works out. But Sonia, I just wanted to get your take on a Paytm, I don't know if you already spoke about it, and a Godrej Consumer.
Hi, good morning, Tamanna. So Paytm, I think the stock is in good trend. It is a new entrant in F&O space as well. So it has formed a recent base of 950 on the low side. Minor, resistance around the 1,000 mark. So if it's able to cross the 1,000 level, it can certainly head up to 1,050 on intraday basis, or plus, maybe like a very short-term perspective. So I think one can continue to hold longs in the stock. It has also seen long built-up positions as of last week. So with the 950 as a support, one can continue to hold longs for this stock.
Well, that's the word. Look at Paytm, 2% high in early trade is what we have. A quick check on our CEAT is doing. I don't know whether we did a dip check on this one. Crude is trading flat as well, so that's the other positive. But the big story is the very healthy valuation that they've managed to get up Camso at. Sony, you want to tell me what you think of CEAT on the charts, and then I'll get Nirav for a fundamental view on this acquisition made by CEAT.
So, Samina, quite a strong gap up that can be seen above the 30 to 50 mark. It's just opening around its previous highs of 30 to 70. Now, if it sustains the 30 to 70 mark, we can see it heading towards 3,400. I think one can continue to hold as long as it's holding above the 30 to 50. So just wait for the first 5 to 10 minutes, let the price or the gap up price settle down and see if it's continuing above the 30 to 50, which is actually going to be a very strong support for intraday basis. If it's sustaining, one can initiate a long with 30 to 50 and hold for the higher targets of 3,400.
Nirav, you want to come in on CEAT? Your thoughts? They've acquired Camso, and I believe the valuations are quite compelling. Gives them access to 40 global OEMs and, of course, revenue accretive from the get-go. Stock is already expected to see a gap up, but does it still look attractive to you for a portfolio buy?
Yes, definitely, because most of the tire makers have been focusing on overseas markets. If we take into account companies like BKT, Balkrishna Industries, Apollo Tires, they have a significant overseas presence. And I think in the case of CEAT, this was a gap. And I think they have tried to fill up that gap. It's an attractive acquisition and should hold them in good stead. So I think it's a positive as far as CEAT is concerned.
Well, Harsh is back with the big brokerage call for the day. Harsh, Lloyds Metal, what does Incred have to say?
40% upside, Neeraj. So very bullish with regard to this counter. They believe that with regard to supply side on the iron ore front, there are concerns, and therefore Lloyds Metal is well placed with regard to tackling those concerns and in fact benefiting from some of the supply concerns in the iron ore market. They believe that the iron ore deficit continues despite the company operating at full capacity. Lloyds Metal is a direct beneficiary to rising iron ore prices, and they are expecting iron ore prices to go up. They've projected a 76% EPS CAGR on the counter from FY24 to FY27. Mine extensions also will start to come through. In fact, they're expecting an extension up to 2055 and forward integration plans, which will likely drive the EPS CAGR of 76%. Downside risks, of course, volatility in iron ore and steel prices will be a key risk that you'll have to look out for, but a 40% upside, target price being 1476.
It's Lloyd Metals, Incred on Lloyd's Metal. The stock is trading flat, but you've got stocks like RITES that have bagged that 75 crore order that I highlighted for you this morning, turning out to be one of your top gainers on the Nifty 500. Suvain Pharma, like Taman highlighted, is up and about. Kernex has hit upper circuit. CEAT is looking good. So a whole host of Paytm is also starting off. It's setting off the day on a positive note. Sony, not sure if we talked to you about specific banks, but we may be getting a flat start on banks after Friday. Friday as well, they spent some time consolidating, seeing some profits off the table. Would you initiate fresh longs on banks? And if yes, which ones for the week?
So, Samina, the entire index is strong in comparison because Bank Nifty is also holding on to a very strong support of 53,000 on closing basis. But talking about individual banks, definitely I think two banks which are looking quite strong and have moved quite well. One would be SBI. Now, SBI continues to be above its 820 mark of a resistance. It continues to hold above that level. So on any small declines up to 840, one can initiate a buy, keeping a stop loss of 820 and look for a higher targets of 880 to 900. The other stock would be again from the same space. It's PNB, which has actually not moved quite a lot, but the stock is holding above its 200 exponential moving average, which is at around 108. So I think if it continues to hold the 108 as a support, the stock can head towards 115 to 118 on a positional basis. Risk reward ratios wise also it's quite favorable. It has seen very strong volumes as of Friday close. So one can initiate a buy in PNB, keep a stop loss of 108 and a positional target of 115 and above that 180.
Okay, so PNB looking good. Nirav, hi, morning. Just want to see if you have a view on Paytm, that all of their, attempts to maybe offload assets which are not completely required as a journey in their turnaround story, you think is something that you see positively?
Yes, we see it positively. I think all the efforts which have been done by them to shore up their cash reserves, build up and come out of the difficult situation, I think it should augur well for them. But still, I think it's a work in progress. So hopefully it should be a slow and steady move ahead for the company.
Okay, we'll watch out. Sony, I don't know if you've given your top idea, but if I had to press you, 20 seconds, one top idea for the day.
So it'll be in JSW Energy, which has seen a very recent reversal from lower support levels of 650. One can buy JSW Steel with a stop loss of 670 and a target of 720 for the day.
JSW Energy it is, viewers. Remember, not steel, but JSW Energy. So watch out for that one. Target is 720 by Sony. Okay, stay on both of you. We're just about to get started. Remember, the surprise development is that the CDMO stocks haven't quite reacted too negatively, but we'll mark them on open. Let's see if IT reacts positively today. Nasdaq was doing well, dollar index is lower, so all of that. But a start in the red, but it's a flattish start, nothing too dramatic really, in line. IT2 actually there's a bank, sorry, get the IT. Nifty IT2 actually sulking in trade. I would reckon FMCG stocks will be the ones which will be impacted the most. Nifty FMCG 1% lower, no surprise there. Mid caps and small caps very quickly, good moves until now. Flattish start. Let's get the heat map up on the screen and see what's moving. FMCG stocks here. So you see HUL, Britannia, Tata Consumer. I mean GCPL will be lower. We'll mark that in a bit. But clearly what Godrej Consumer has said about demand conditions might be applicable to a lot of these FMCG names in the market's wisdom, and hence these cracks. 3% for HUL now. Nestle too correcting in trade. So consumption is taking a hit. A lot more red, very little green, a little bit of tech out there in Tech Mahindra, HDFC Bank helping hold up the index. There is strength in NTPC, JSW Steel, but that's few and far in between. So not too much of a dramatic move, just that HDFC Bank, frankly viewers, is helping hold out the pressure that the FMCG pocket is making. And look at that. When did we last see the 4 FMCG names being the top losers, Tamanna? All of them cracking.
You know, I suspect that economic concerns is going to be a big issue for the markets in the days to come, because look at what FADA's auto sales numbers are also showing. It's showing a fair amount of a dip after the festive season buzz, and that was the big question for auto, right? But let's just go to the sectoral indices, the sectoral heat map very quickly, just to give you a sense overall. And yes, FMCG is the pain point this morning, about 1.5% down. And you can see that pain here, because if Godrej Consumer comes and says that, we're seeing less demand coming in and high palm oil prices, well, that's not just a story for Godrej Consumer. VIX is slightly up, reality stocks are doing okay, but nothing much to write home on the broader markets either. Mid-cap is relatively better, mid-cap and small-cap relatively better than the key indices. Nothing major there overall, so to speak. Let's look at specific stocks that we're seeing this morning. So Biocon is one that we're looking at, a whole host of reasons. The key competitors cut prices, price erosion, fears, FDA action, stock about 1.5% down. We must look at GCPL, because Godrej Consumer is the one that has stock 8.5%, 9% down at this point. They're the ones who talked about demand being slow and the entire pack being impacted, but of course they're down about 9%. Let's look at CEAT, acquisition of a highway tire brand, a premium brand, has been good for them, 7% up. You will hear from the management at about 9:40 this morning as well. Star Health is one that I want to look at, action from IRDA. They've come and said that, it's not something to worry about, but nevertheless the street is a bit worried. RITES is positive, perhaps an order coming in which could be seen as a positive, 3.5% up for them. Paytm is the other one I'm tracking this morning. Paytm, Easy Trip, let's pull them up. Paytm, because of asset sales, about 2% up. Easy Trip also in acquisition mode. Suven also in acquisition mode. So we should look at some of those together. Suven Pharma, while the rest of the CDMO pack and pharma companies in that space are getting hit, Suven's doing relatively okay. Poonawalla Fincorp, I just wanted to see what happens when the CTO quits, saying the CHRO is harassing him. Not half bad, just 2% down this morning. So the mood overall a little somber, I would say, Samina.
But we're holding 24,600. I think that is a good thing for the street. It's expected to be a morning where the markets will remain in a range. Remember, we've come out of a very strong rally that took place last week, but in the last 5 trading days, the Nifty was up over 2.5%, with Bank Nifty up 3.5%. So taking a break as expected. A quick check on the wicks before I take you through some of the other movers and shakers this morning. Remember, one comforting factor for the bulls has been that the wicks has remained under 15. Still sub 15, but high by 3.5% this morning, but 14.61 on the India wicks is what we have. Welspun Corp, that becomes an important stock to track this morning. They've bagged 2 big orders from the US plant, bringing the compounded order wins to 7,000 crores. Markets like that, Welspun Corp is up 4.5% as we see it. Tamana mentioned an order win for RITES. There's one more company that's backed an order, smaller in nature, we don't know the exact numbers, is NLC. Markets giving that a thumbs up too. NLC is trading with a clear positive bias, up 2.5% in trade. Broader markets have also turned positive, and Bank Nifty also trading at its day's high points. So while the Nifty might have started off the day flat, it seems like it's going to attempt moving into positive territory anytime now, with the broader markets also outperforming the index. ITI is up 6.5%, but the stock of the morning on the Nifty 500 is, of course, CEAT, which is up about 7.5%. ITI is up 6.5%. JM Financial is up 3.5%. HEG has done a 27% up move last week. It was up 41% on Thursday. Friday, of course, so the stock seeing some profit taking. This morning, again, back on the winning streak, 3.5% on HEG is what we have. You have HPL Power, that's up 3% as well. Triveni Turbine. Capital market players are looking very good this morning. So from your JM Financials to your 361 WAM, all those counters are trading in positive territory. EMS Limited is up 3.5%. Triveni Turbine is up 2.5%. A quick check on BSE, made a record high last week after a 3-day rally. The stock this morning is trading flat. TD Power also looking good with a 4.5% up move in trade. on the sell side, I think we've highlighted most of the counters that are seeing pressure as we see it. But apart from GCPL and a whole host of CDMO players, the rest of the market is looking okay. You've got stocks like Blue Star, Imami, some of your cement names, fertilizer counters that were trading bets last week are taking a little bit of a breather in early trade. I don't know, we talked about the textile piece, we'll highlight that in a little more detail, but Gokuldas Exports, if we can pull that one up and see what that stock is getting up to, 6.5% up more. Now remember, Gokuldas Exports is a textile major. We'll understand the impact of what has happened in the textile space with regard to Bangladesh on counters like Gokuldas, but the stock is looking good as we see it. Sony, any picks that you've identified in the first 5-6 minutes of trade? The Nifty is indicating to turning positive. Broader markets are looking okay. Bank Nifty is higher as well. Would it require bravery to initiate a fresh long on the Nifty at these levels?
I think, I would still stick to Nifty, making sort of another 50 points low, at least towards 24,600 to initiate a long, and not to hurry too much into initiating long at current levels, but wait for that dip. I think certainly one can see the dip coming. Any fresh stock, I've just been seeing Hoodco, which is also again a new entrant, and the stock is actually moving quite slowly, but then it's holding above a 240 mark. There's a possibility of the stock, if intraday basis it holds towards 245, it can head towards 256, 258 levels. I think that's another stock that one can, add to the radar for the intraday purpose.
Okay, so Gokuldas in focus, just a second, and this is such an important story because the reason Indian textile stocks are up this morning is because the Bangladesh government has decided to either sell or lease several units of Beximco Group because of their liquidity crisis. This is one of the hugest textile manufacturers. It's the largest private sector group. And now the Bangladesh government has come in, and just wanted to point out that for all her controversies, Sheikh Hasina was running a tight ship in Bangladesh. Soon after, that country is flailing, and one of their biggest strong points, textiles, is seeing this kind of a pain. Nirav, any view on textile companies and the India advantage? Is it a long-term sustainable advantage or a sentimental one this morning?
It could be a long-term advantage. So I think companies which have scaled up their operations like Vardhaman Textiles, KPR Mills, Gokuldas Exports, Welspun, etc. I think it could be a very big opportunity for all these groups.
Okay, opportunity for these names. These things take time to resolve, and which is why, a few skeptics believe that this winter season, stores in the West have already stocked up, but I don't think this is just this season's view. Could there be a diversification on a more permanent side into India? I think a textile company will be best placed to tell us that. We placed requests, some of them will hopefully come and talk to us during the course of the day, but I think it's something that you will certainly monitor. We were talking about pharma, and I just wonder if there are trades possible there now. Now, Sony, a lot of these stocks have run up quite a bit. Divi's, Laurus, Syngene, Piramal Pharma, even Biocon. All of them are seeing pressure today. Biocon for other reasons, of course, but is seeing pressure as well today. Is there a trade on any of these?
I think maybe best to avoid Syngene because it has also moved a lot. There could be some profit booking that one can see. Biocon, of course, is witnessing that lows, but in pharma space, maybe there's a possibility of keeping on radar. The stock would be Lupin. Now, Lupin, if it crosses 2150 on intraday basis, then it crosses the resistance. So above that, it can head towards 2200 also. On the downside, 2120 is a good support. So I think it's just at the cusp of its resistance and better to wait and watch because the entire sector is facing some selling pressure, some profit booking because it has also ran up a lot in the last week. So there's a possibility that only if it crosses the resistance, one can initiate the long. So the sector would be sort of a wait and watch as of now and wait for the resistances to cross before initiating a long.
Consumption has had it so rough all through October, November. There was some small spurts of gains in the last week of trade, but back deeply in red this morning. I don't know, is it too brave to consider long trade here? On the flip of it, maybe consider short trading ideas for the consumption pack.
I think quite a lot of selling pressure one can see in the entire space. And the longs maybe avoid in the entire consumption pack because they've not seen the strength. They're not holding on to any sort of support levels, rather breaking the supports. So I think in short, one can look at Dabur at current levels. Now it has a good resistance around 520. It does not seem to be sustaining above that. On immediate basis, 500 is a support. Now if it breaks 500, it becomes a positionally weak candidate and the stock can even fall further towards 480. So I think 520 stop loss for a short trade, and if it breaks 500, you can see it heading lower towards 480.
All right. Thank you so much, Soni and Nirav, for speaking with us today. Markets actually not doing too badly. Back in positive territory, completely flat, but at least up in the green on the Nifty and the Bank Nifty. IT stocks also doing all right. So a bit of a choppy morning. Mid-cap stocks actually revving up a little, about 0.5% up on the mid-cap 100. But let's turn to our corporate conversations and our focus this morning. And it's the season where if you've not already made travel plans, you're possibly wondering why. But a great time to get a sense of what's happening in the hospitality space. And we have Sanjay Sethi, MD and CEO of Chalet Hotels, in our studio. Sanjay, so great to have you in the studio this morning to talk about an interesting time.
Pleasure to be back. I think I came to the earlier studio. This is the first time on this one.
Bit of an upgrade, huh? Bit of an upgrade.
Facility, yeah.
Much like your hotels.
Congratulations. I believe you've been given the honorary title of doctor. Is that?
I'm very, very humbled and grateful for that.
For all your contribution to the sector, so congratulations.
Pleasure. Thank you.
Okay.
Thanks so much.
So Dr. Sethi, what is the prescription looking like for the travel industry? For the travel industry in this season, are you seeing that kind of excitement rev up, and is it the wedding season which is providing the boost?
I think a bit of all, and I much like other doctors, I don't need to caveat this. I'm pretty confident that the season looks very strong, both on the leisure and the business travel side. Both of them will be supported by MICE and wedding business and segments. They're clearly going to be very strong. So far, the trends for H2, what we have, look like comfortable double-digit growth again.
Okay. And what segments do you see leading the way over here?
Clearly, this is going to be the primary season for corporate travelers. October to March is the season for especially international business travelers to come into India. That's going to drive that. And like you mentioned, wedding and MICE is going to be a big ticket item.
Okay. Sanjay, okay, a bit of a deviation from this season, which looks very, very strong. I just wonder, actually, just before we get to the deviation, how much of an uptick does such heavy booking lead for, let's say, one, ARRs, and two, the overall pie that the non-room revenue gets for you? Because I don't quite know the split right now, but I'm guessing it is not as skewed towards room rates as it was maybe 5 years ago.
Well, it still is. F&B has picked up a little bit from 5 years back. But at least in our portfolio, F&B is still 35% of the total revenue.
Okay.
Around 60% comes from room revenue, and the balance delta is through the other income that we get from other segments. But look, F&B is always very strong in the second half. That will continue to do well. But then the occupancies and room rates will also climb over H1. So I see that growing pretty aggressively.
Okay. The other aspect is what some of your peers have told us in the last couple of weeks, that while this cycle started, let's say maybe 2 years or 3 years ago, what have you, I mean, once the COVID restrictions went off, if typically hotel cycles lasted 5 years until supply came in, if India continues to grow at 6%, 7%, what have you, then this might not be cyclical actually. This might last for a really long time. I would love to know how you think about it.
So Neeraj, I'll put my bet on maybe a 3 or 4 year window for now.
From here on?
From here onwards, which is that the supply will be slow and demand will outpace supply by a significant margin. And I think that's going to continue to push occupancies and rates up for the next 3 to 4 years.
Wow.
Sethi, Dr. Sethi, you've aggressively talked about how expansion is core to growth, and we all agree, right? With the kind of demand that we're seeing, supply is required. What we did notice in the numbers is while revenue is growing, margins have not improved significantly. And you yourself have said this, that the pressure on us is to deliver high margins and high returns on new investments. You want to tell me about how you feel about this? The ROI is what shareholders are going to care about.
Sabina, very true. We look at each investment that we do afresh with a very focused individual asset assessment. And from our perspective, each asset should give northwards of 15% IRRs on its own, and better if we can do that. So therefore, when I said that we are under pressure to give high margins, it's on the back of a story which has been very strong. And therefore, we are spoiled by our own numbers, and any new investments will need to give us that equivalent or better numbers.
Okay, and you talked about how the season is about corporate travel. We've got that 11 acres in Goa, which is what, 170 rooms that we're talking about.
That's right.
So on your top line, what is the split between leisure and business travel? And where do you see the significant growth coming from?
As the portfolio stands today, I think only about 5% of our business comes from leisure.
Okay, so this new property would be that.
This will take more. This will take it up a little bit, but that's only 170 rooms. So we have a base of 3,000 plus rooms, 1,000 more rooms coming up. So clearly on a base of 4,000, if you have about 500 rooms on the leisure side, it'll still be in, about 10, 11, 12%.
So fair for us to assume that wedding season, winter travel, the seasonal factors that affect some of your competitors do not actually impact you, because December is a quiet time for corporate travel.
It is post 20th December. Our hotels are full last week. They're going to be full this week. So not a stretch, not too much of a pain point till maybe 21st, 22nd of December. But then it just kicks in very sharply after the first week of January. So we expect that to do very well through January, February, and March. On the differential for us is maybe a little less between H2 and H1. That's because of the stable nature of business travel.
Of course.
But from a leisure perspective, we started this as a strategic initiative about 3 years back when we acquired the Duke's Retreat. We acquired this land in Goa. We run a small resort in Mud Island. So all that combined together is going to build up into a portfolio which is balanced out with about 20% of the portfolio in leisure and 80% in big city, big box business hotels.
I just wonder, sorry, not a question really, but I don't know if any of you, I have very fond memories of Duke's Retreat of the past.
So do we all,
and I'm told that Duke's has been revamped to being a completely different and a fabulous property. I mean, at some point of time, we'll have a personal conversation on that, because that place in Khandala, that was literally what Khandala was about.
What a view.
What a view, exactly.
I think if we ever have an offsite, let's be realistic, we could be doing Dukes.
Please do. And I'll do my sales pitch on that.
Perfect.
We're going to be ready from February onwards. Please come and stay with us.
Okay. Fantastic.
Look, that's a stunning resort, and you cannot replace the views. The views remain same. We're just enhancing and significantly enhancing the guest experience on the property, which is better rooms, better F&B, better amenities, etc.
Yeah, no doubt. Fond memories there. Just trying to get a sense of what the expansion plans are looking like. We know that there is a timeline right till 2027, which has been stated publicly, but is that on track? Would you like to recap? What are the kind of room keys you will be at by the end of 2027?
So we should be, as of the announced pipeline, about 4,000 plus keys in our portfolio. But we'd probably be adding more on the pipeline by then. So expect us to continuously grow, which means our target, my internal target, is in the next maybe 3 or 4 quarters to get to pipeline plus operating hotels of 5,000 rooms, which means we should be able to add through business development activities another 1,000 rooms to the portfolio. Our balance sheet allows us that opportunity, and we'd like to leverage it.
Okay. So 5,000 rooms in another 4 quarters, so in a year from now?
To the pipeline, yes.
To the pipeline, okay.
How will you, let's talk finances for a minute, right? Your net debt has obviously reduced post the QIP. Now you've talked about your expansion plans. How will you fund those? Are you going to be looking at adding some debt, or would you like to keep your debt lower? Do you have internal accruals, or is it the IPO proceeds that should suffice this expansion plan for the next couple of years?
So it is like this. The current pipeline that we've announced, we are good with internal accruals to service that.
Okay.
So whatever comes beyond that may require some additional infusion of capital in some form or the other. We'll handle it when the time comes.
But not significant.
Not much.
Interesting. So, Sanjay, tell us if indeed you think of this hitting a period of 4 more years, and then you don't quite know what happens. How do you see Chalet from a slightly longer term perspective? Let's assume that this stays, then there's a small down cycle, and then an up cycle starts again, if you will. What does Chalet do? Do you retain this largely business and corporate or dominant position there? Is this the extent of the room addition, or is there a longer term plan that you've framed already? Maybe not completely communicated it, but are open to communicating right now. Any thoughts there?
No, so look, I'm not at liberty to discuss anything beyond what we've already stated publicly with the exchanges. We are a growing company. Our DNA is on development side. Yeah. And I think that'll keep pushing us to add more inventory to the portfolio. We see exciting times ahead for Chalet. At this point in time without numbers, but watch the space.
And you wouldn't want to, and correct me if I'm wrong here, but you've been slightly different than some of your peers in that you don't have gone the asset light way at all, right? You're doing a complete opposite thing. Do you foresee a change in that strategy as well in order to either enhance margins or otherwise?
Well, that option is available with us. I think at a certain point of time when you have enough inventory of your own, you can create a base to launch your own brand. We potentially can. Whether we do it or not, right now things are going very well the way they are. We may not want to tweak what's going well too much. But at some point in time, we have the option of launching a brand of our own.
Are you looking at it? I mean, is it an option you're actively contemplating?
For last 5 years, we would have 10 conversations on the brand part. At
this point of time,
at this point of time, we probably would like to focus on what we're doing. Okay. But if something comes up, we'll come back to you.
Dr. Sethi, your annuity...
Sanjay is good.
Sanjay, okay. Dr. Sanjay, okay, Sanjay. You've got to get used to Dr. Sethi. That's what's going to happen at office.
I'm going to get used to this age.
Sanjay...
That's one good one.
I don't know why that's a bad thing, but never mind. You've got an annuity run rate of what, 160, 170 odd crores in the business at this stage?
On the annuity side?
Yeah,
so that's going to, if you look at the current...
And also, what are the reason I ask you this, and let me just quickly complete my thought there. Where do you see that move up to in the next 2 to 3 years? Sure. Because the premium really comes when you have that sort of annuity business, right?
True. So we're expecting the current 2.4 million square foot of office spaces to throw up roughly around 300 crores of EBITDA when fully occupied, or say 95% occupied.
Where are we at right now?
We are at a run rate of about 20 crores right now, a month, which should head, which is almost 140 crores. But a lot of the leasing is still to happen.
Okay.
We're also building another office tower with about 900,000 square feet of leasable space. So all put together by 2027, including the increase that we'll have till then, and that tower getting occupied, we should have a annualized number of about 450 crores.
Wow, so from the current 170, 200 odd, we're looking at 400 odd in 2027.
That's a significant hedge we've taken in the business. You keep talking about the cyclicality of hospitality.
Yes, this is
We've sort of neutralized it with this
And
hedge.
the premium for most businesses comes from ARR, right? Where you have average recurring revenue. So I think this is critical in terms of annuity. Would you look to build that portfolio up more? Because it's stable. And maybe in partnerships, maybe in an asset-light form, because that keeps your cash flow low, manages that, helps you budget and still make some money.
That model works with building and renting out, right? So that's the model that we run in. And what we've done is really sweated the real estate assets that were with us already. So we build them on existing land parcels with the hotels already there. So they're co-located offices, which does 2-3 things for us. Number one, land cost is zero. So incremental returns are significantly higher. They're comfortably north of 20%.
Any other land parcels available on your books?
We're building one, as I said, in Powai, the second tower there. As FSI and regulatory norms change, this could turn around more. But as of now, totally about 3.3 million square foot of office space.
Wow. What are you seeing occupancy rates and your RevPAR kind of numbers for the second half? Because like you said, this is the fun stuff starts now, the good period starts now. So are you seeing these significantly higher?
We don't give forward-looking numbers, but I'm comfortable with stating that double-digit RevPAR growth over the same period last year is pretty much on the cards. And it was a good H2 last year. So we're going to sort of outperform that significantly.
Just one final question from my end. Everybody's one pain point for a lot of companies, if not all, are heightened costs, raw materials, manpower, so on and so forth. You are expanding. Is that a pressure for you as well, or not really?
I think on the construction side, yes. That's where probably the costs did go up for almost everyone in the country. Operating side, I think we've done a good job, and our margins are well protected. We should improve on those going forward.
Just one last question from my end as well. There was a one-time deferred tax reversal. How does that affect the outlook on financials for FY25? What's the impact that we should expect?
It's an on-book entry.
Okay.
There was a provision that was created, which in the new finance bill this year, you're not allowed to provide for the escalation, and therefore we had to write it down, write down, but no cash impact.
Okay, so it was an accounting change that was made. Okay.
All right, thank you so much for coming in. An absolute pleasure speaking with you this morning.
Thank you, ladies. Thank you, Neeraj.
I was wondering to address him as
Thank you,
Sanjay.
Sanjay. I'm going to make sure. Thank you, Sanjay.
Sanjay, thank you for coming in. All right. So
and we'll take him up on the Duke's retreat offer, by the way. We should do the
We've got
offside
to wait
there.
till Feb.
Yeah, wait till
Hold
Feb.
our horses, guys.
Neeraj has got all his childhood memories.
Childhood memories are there.
Fantastic place, no doubt. All right, thank you so much. Great to have you here. But let's move on to our next conversation. Over the weekend, SIAT announced that they have entered into a definitive agreement with French tyre maker Michelin to acquire its Camso brand of highway tyres and tracking business for $225 million. I spoke with the CFO, Kumar Subbiah, about what this acquisition is going to mean for SIAT. Listen in.
From our own strategies and priorities point of view, there are two important things. From capital allocation standpoint, our specialty business, which is off-highway tires, is at the top. And second is that our focus is on the international market. So as far as this particular transaction is concerned, there is a tick to both. It fits in very well, complements very well to our specialty business. The transaction is about purchase of compact construction tire, which falls on off-highway tires and also tracks. This is a premium brand. And the first 3 years, we would have license to use this brand for this specific category. After a 3-year period, Camso brand would be available to us. We would be owning that brand, and we would have all the rights to use that brand wherever we want. So it's a profitable category, and it falls into the premium segment in addition to the fact that it is part of specialty and international business.
Okay, and the $225 million for the acquisition, how has that been financed?
I think we expect another 6 months for the transaction to get completed. There are regulatory approvals, and we also have some schedule that we have agreed with Michelin for payments. So overall, we also, that we incur about 1,000 crores of capex every year. Considering, funding is fungible, both for capital expenditure and also acquisitions like this. We do not expect more than 70% of this amount at an overall level, including even the capex that we would continue to incur in the future, to be our debt, and balance 30% would get funded through internal accruals.
Okay. Just give us a sense, Mr. Subbiah, that what is going to be the impact on your off-highway tire segment revenues? That's expected to double, I believe, if you can confirm that. And as a result, what is the impact you see on margins?
So in the year 2023, approximately the revenue of this business was about 200 million. And as far as current year is concerned, we'll get to know by end of the year. Maybe it could be a little lower than 2023. So it's a significant portion. And as far as our off-highway tire revenue is concerned, at similar level. So as you rightly said, our revenue from OHT would double through this acquisition. It's a profitable product in the segments that they operate in the compact construction. Camso brand is considered to be a premium. It's a tier 1 brand. And we expect this to be margin accretive as far as SIAT is concerned.
That's true, sir. But to what extent is what I was trying to understand? I believe Michelin says that 20% is the margins from this segment versus, I think, 13 to 14%, which you're currently seeing. Is that the kind of margins you're looking at?
Okay, see, margin is a function of, the scale of operations too. Yeah. So therefore, at this point in time, there is an opportunity for us to operate that particular plant at a higher scale. We expect it to be higher than our current company range that you just now explained. But we will be able to comment once, we take possession of the business. What we would like to say now is it's going to be margin accretive. and exact level of margin as we start operating it, I'm sure we'll be able to provide more visibility.
Okay. You also, of course, as part of this acquisition, get 2 plants in Sri Lanka. What is the kind of utilization there right now?
Okay, current utilization is in the range of about 50 to 60%. So therefore, there's an opportunity for us to operate at a higher level. And so there is enough headroom for us to grow this category of business for next few years, considering that adequate capacity is available in Sri Lanka.
Okay, so how far do you see the utilization going? Or is that also something that you'll know once you have the assets in hand?
No, so it's possible for us to grow, okay, and we need to bring a lot of focus. It's very well accepted among OEMs. More than about 40 OEMs use these tires and tracks. We are excited about in terms of growing this business. So internally, we would like the plant to get fully utilized over a period of time. So there is an opportunity there.
Okay, just let's do a quick sort of mood check for the business since I have you here, Mr. Subbiah. The first half has been tough for the segment, not just for CEAT, but I would say for the industry, high input prices, slow Europe demand, etc. Are you seeing Q3 picking up?
Look, if you really look at our first half, we are happy with the way we have grown top line. And we have grown by about 8.5% in the first 6 months versus the same period of last year. Our internal plan is to deliver double-digit growth, which means that we have to grow higher in the second half of the current financial year. With respect to operating margins, raw material prices went up substantially in the first half of the year. Rubber prices reached 14-15-year high in India. So therefore, there is some impact. We are trying to, manage the margins through appropriate pricing and mix. So generally, a pricing has a lag. So therefore, in the quarter 3, we have taken some price increase in certain specific categories. So we look forward to, commodity prices stabilizing and margins progressively coming back to the normal range.
Is another round of price increases in the offing?
Some price increase happened in passenger car, truck and bus, radial tires, truck and bus bias tires in the month of October. And then one more increase happened towards November. So as you would know, in tire industry, in general, price increases happen in small proportions. So those are already happening. With respect to OEM, generally there is a 3 months lag. So we took some price increase based on the raw material cost movements in quarter 2. And any further movement in quarter 3 will also get adjusted in quarter 4. So that's the way it's progressing.
See it for you. The stock is doing well, but let's see how they digest that acquisition. For now, about 8% higher, 3340 and counting. Another company in focus today is Tata Power. Now, they had an analyst meet last week and they've given some targets. In fact, the story is there on the NDTV Profit website as well about what they plan to do in terms of revenues or EBITDA levels well unto 2030 into capacities and more. There's a new solar module and cell plant in Tamil Nadu as well. And the management spoke to us. In fact, they were in an exclusive conversation with my colleague Mihika Barve. The CEO and MD Pravir Sinha spoke about what the plans are with the new plant, and it's interesting, Tamanna.
Absolutely, but just before we go into that conversation, I just want to plug in for our viewers our new show, Know Your Company, where you will have a deeper dive on Tata Power at 11:30 a.m. today, and it's a new show from Monday to Friday. You should check it out because this is a show which focuses on one company and not just what the management is claiming about that company. We analyze it. Our analysts come in. We have independent analysts coming in and giving a peer review. We rate it on various parameters, and then, of course, you hear what the management has to say. But listen in to a chunk of that conversation that Mihika had with Pravir Sinha at their new plant.
Our target is that we will have 10 to 11 megawatt of module production every day. And similarly, in our cell also, similar range. We should have about 97% of yield from these plants. And efficiency of the cell should be in the range of 23%. So I think we are very close to these targets. Our module today is producing around 11. Our cell plant, we have started the first 2 gigawatt. is already producing 4 megawatt per day, and it will get ramped up to 5 in next few days. Similarly, the second 2 gigawatt was commissioned in this week, and we expect that by end of the month it will reach a capacity of 5 megawatt. So I think we are doing very good. This is one of the fastest ramp up that has happened, and this is because we have a operating plant in Bangalore where we produce both cell and module, and that has helped us to achieve these levels.
Solar rooftop is also something that the company has a big market share, 13% right now. What's your outlook? How do you expect your order book to grow in this segment specifically?
So we are the biggest in the rooftop solar. We have more than 600 channel partners, and we had a revenue of nearly 1700 crores last year. We expect to have a very large revenue this year and cross 10,000 crores by 2030. We are working very closely with our channel partners. The whole ecosystem of supply chain has been done. And also we are now working closely with the government, especially under the PM Surya Ghar scheme. The government has plans of doing 1 crore homes. We'll do about 30 lakh homes, especially in 4 states of Assam, Rajasthan, UP and Odisha. And we are working with all the state governments on all this.
The company also has extensive capex plans all the way till 2030. How will this capex allocation be tilted towards? And in terms of funding, do we expect debt levels to stay around the same range, or can we see an uptick going forward?
So we'll have about 25,000 of capex every year. We expect 50% will be towards renewable and balance between transmission, distribution and existing generation, especially in our hydro and pumped hydro projects. We expect that over a period of time we will have an increase in debt, but all the financial metrics will be very good, and we will be able to cater to it through a large amount of internal accruals that will happen.
Lastly, the question is on hydropower. You even have projects starting in Bhutan. Could you give us more details on what projects you expect to be started and how the hydropower segment of Tata Power will grow going forward?
So we first of all, the pumped hydro project will start by January. This is 1,000 megawatt in Lonavala, Bhipuri. The second 1,800 megawatt pumped hydro should start mid of next year. That's in Shirota. The Bhutan project, the 600 megawatt Dorjiling project, again already work has started, and the tunnel diversion work has started in the month of October. And we expect that the full-fledged work will start in next 2-3 months. Similarly, there is a Dorjiling project of 1125. We are looking to speed up work on that also. Hopefully by next year we'll be able to start. So these are some of the hydro projects. There are of course in pipeline many more projects, and we'll definitely look at executing.
Thank you so much, sir.
That's Tata Power, of course, and some extensive plans. But remember, it's not a cheap stock. If you just look at the last 5-year chart of Tata Power, if you will, maybe, right? All power stocks have done well. This one is no exception. But just a very, very strong up move, 750 odd %, and which is why these stocks have become expensive. The plans are great, the growth is there, the stock is expensive, and maybe that's why it's been consolidating for the last 6 months. So bear that in mind. Okay, we need to take a quick break. We come back, talk about the IPO market, talk about the Nomura note on the Adani Group, and get in a bit later on one of the largest investors in India, Prashant Khemka of White Oak. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
All right, welcome. You're watching India Market Open. Markets are range bound this morning with bulls really struggling to make it on top. The Nifty not massively low, but close to the lows of the day at this point. What's really hurting is FMCG stocks. I mean, this must come up for mention, and this is going to be a persistent problem. And HUL over 3.5% down now. Tata Consumer also dropping over 3% down. Britannia nearly 2% down. So is Nestle, Trent. Trent, I suppose, if you're looking at the entire consumption basket, seeing a bit of a pain, then these will come into play as well. Asian Paints. So any consumption-facing company is having some trouble. And the culprit in that sense today would be Godrej Consumer. So we should pull up Godrej Consumer for you and look at what's happening there as well, because that stock nearly 9.5%, 10% down. They are the ones who came with their mid-quarter review and talked about how high palm oil prices, high raw material costs, including palm oil prices, is going to cause some trouble for their soaps category. That's a huge revenue driver, and that's why they're seeing some kind of an issue there. Even their insecticide category, 1/3 of revenue is being hit because of winter and several other reasons. Even the cyclone in South India, that has caused a bit of problem for that company. So Godrej Consumer under pain, and the pain points they talked about are actually endemic to the entire sector, because if they are facing demand issues, etc., then obviously other peers will as well, which is why you're seeing that leak into a trend. Even auto having a bit of a tough morning. Look at M&M this morning, and that also is seeing a bit of a downtick. Hero Moto as well, so FADA numbers weren't great. I want to see what Bajaj Auto is also doing, because dialogues aside, the entire auto space feeling a bit of pain. The Bajaj Auto doing fine this morning. Another stock that we're talking about is Paytm. It's seen a surge of 3x from its Feb lows after a tepid listing in November 2021. The company has seen its shares of lows and highs, but recently Paytm's Singapore arm is close to finalizing a $250 million deal to sell its stake in Japan's digital payments firm PayPay Corporation. Will this aid the stock? What's next for the company? Harsh is joining in with a deep dive. Harsh, I think what people are interested in knowing is that can Vijay Shekhar Sharma actually pull off this revival plan?
Yes, and at least if purely going by stock price action, it seems like something seems to be working. But let's look at it from an exchange perspective. Its journey on exchanges. That's the first thing I want to try and cover. Well, it was valued at 1.5 lakh crore during the IPO. The issue size was around 18,300 crore. 10,000 crore was the size of the offer for sale, and 8,300 crore was the fresh issue. So a lot of investors getting an exit at 10,000 crore, mind you. IPO price was 2150, which we've never seen till today, and therefore the listing in November of 2021 was a tepid one. Despite the stock being up 3x from Feb lows, we are still half of what the IPO price was, and the stock has never touched that price as of now. It's had its fair share of issues, but let's try and understand what Paytm actually does. It's of course a new age fintech business, manages payments for merchants, cross-sell of loans and wealth products is what the business largely stands on, and it also does monetization for companies, sells credit cards on its platform, and sells various other products and services on its platform as well. How does Paytm do its business? It first acquires individual customers, especially with a larger focus on UPI now. Wallets has had a very tough time over the last year or so, given all the regulatory action. The merchant customers via payment innovation, something like a Paytm Soundbox, you would have actually witnessed that in a lot of Kirana stores, where if you make a payment through a UPI or a Paytm wallet, you have a sound box which tells the vendor as to how much you have paid him. Cross-sell of high margin services of partner banks, NBFCs, insurance companies, wealth managers from acquisition of these customers. So they acquire merchants, they acquire individual customers, and then they cross-sell their products. The current revenue for half year FY25, mind you, and I'm having to take half year because there's just so much movement in terms of the numbers that we have to work with the current numbers for now. So 3160 is the current revenue, 3160 crore in first half of FY25, and within that, payments and financial services is 78% of the revenue. The balance 22% has come from cloud. The revenue has actually fallen 35% on a YOY basis because of all the regulatory action that's playing out, as well as the kind of risks that are cropping up in unsecured loans. So regulatory action is the regulatory action by the RBI and Paytm Payments Bank is largely the problem here. The payments business currently is ceding market share from 11% of market share last year, December of 23. We're currently sitting at just about 6% in September of 2024. That needs to improve and likely will. The customer acquisition has been impacted due to the regulatory measures, and also it's caused a lower loan disbursement. Now, loans have been a large part or a large revenue contributor as well as a profit contributor for Paytm, and we look at the numbers, margins had improved dramatically due to that, but because of the embargo, the restrictions, they've had to pull back on the business with regard to loan disbursements. But you've also got regulatory action easing a little bit, which has started to aid the business just a little bit. Market share as well as action with regard to loans is still awaited, and how that plays out on the business will still be viewed at over the next maybe 3 to 4 quarters. But in terms of the new business, they're going to lend from their own balance sheet, which should help the numbers, especially the top line. Credit costs will therefore come into focus and will be a key risk as a result of that. Paytm selling non-core businesses to generate cash. They've sold their entertainment business to Zomato. They've also sold the PayPay business straight back to SoftBank. And as a result, what they're going to do is they've raised roughly 4,500 crore. Their cash balances have risen from 8,000 crore to 12,500 crore. That's large, given that the market capital of the company itself is around 62,500 crore at close on Friday. And therefore, you'll likely see some bit of positivity, given that there's a renewed focus on the current and the profitable business, domestic business of the company. This is how the cash balances are evolving. They've divested from PayPay as well, 2,400 crore coming through as a result of that. Now, let's look at some numbers. FY27 expected revenue, as per Bernstein's expectations, is 10,000 crore. Should double up by FY30 to 20,000 crore in terms of revenue. EPS, the base case EPS that Bernstein has given, is 72.3 rupees per share. This is FY30 base case and bull case. So the bull case just looking really strong if it were to play out, of course. But these are basically their expectations. Now, I'm going to try and talk about catalysts. In terms of the manner in which the adjusted EBITDA has moved, you can see the positivity all the way up to maybe Q3 of FY24, where adjusted EBITDA was growing consistently and fast. But there's been a sharp knock post that, given the regulatory action. And there's been a bit of a recovery as well in Q2. Will Q1 be the bottom and from Q2 will we only see a recovery? We'll have to wait and watch. But that will be the key monitorable that the street will look out for. Can adjusted EBITDA continue to improve? Also, they've resubmitted their application with regard to payment aggregator license. It's going to be the key because sentimentally it's going to be a positive if that were to come through. And business-wise as well, it'll be a positive. You'll have merchants having more access, newer merchants coming on board and having more access to a plethora of payment options that merchants can avail. And that will, of course, aid the business overall for Paytm. We'll have to, of course, it's still awaited, and therefore you'll have to kind of mark that. The third possible trigger or catalyst on the stock is it has a 6% market share currently, down from 11 last year. Can it start to recover market share, which it has ceded? Also, a margin improvement could further aid profitability. Currently, margins are low because there are regulatory pushbacks with regard to hiking payment margins. But if that were to change, you could very well start to see margins improve and profitability could be driven. There's also disbursal volumes which could also go up, and if that were to happen, you would start to see profitability start to kick in. It would aid both top line as well as profits. And just in terms of the other key catalysts, I'm going to try and mark out. You have OPEX. OPEX has been a key overhang on the stock and the profitability. If OPEX were to start to come off, that could be another key driver. Now, in terms of risks, and there are plenty of them, but I'll cover the top 5. Further regulatory action could well dent the business. A slowdown in the loan business could dent profitability. Headwinds in the payment segment, as well as slowdown in and asset quality issues, given that they're going to lend from their own balance sheet, could well impact the company. A higher credit cost from lending from their own balance sheet could be a problem which could get posed.
It was a very, very extensive and deep dive into Paytm. Thanks for that, Harsh. All right, FADA has released its retail sales numbers for November. Data shows that the inventory levels in car segment have fallen but remain sticky. Puneet is giving us the quick snapshot. Yes, Puneet.
No, thanks for that. So, the retail sales numbers, although are available on the Vahan portal, these are just official numbers that are coming for the month of November. Now, do note that November, in this particular time frame, the Diwali was split between, October and November. Compared to the same time last year, Diwali fell bang in the middle of November between 14th and 18th of November in 2023. So, numbers were expected to be subdued, but two-wheelers have outperformed. They've grown by roughly about 15% in this particular month. The passenger vehicle or the four-wheeler car space has, fallen by roughly about 13% in this particular time frame, and that's something subjective because Diwali was in the same time last year where all the planned car purchases were at that time. The only part is that inventory still is at roughly about 65 to 66 days, and when we transfer that in terms of units, that will be somewhere around the 7 lakh mark. So while the something like FADA has been quoting the numbers are at 7 lakhs, the industry has been maintaining that inventory is somewhere around the 30-day mark, which would translate roughly between 3 to 4 lakhs. So the discrepancy continues between the two for what is the actual inventory number, but the sales for the two-wheelers were the strongest part in the month of November, and that trend has continued in the past 6 months as well, and is expected to do so in the next 4 months as well. We've spoken to Bajaj Auto, they're expecting 6 to 8% growth and has upside risk as well. So watch out for two-wheeler stocks going forward as well with growth expectations, with passenger vehicle and the four-wheeler car space expected to be somewhere around the 3 to 4% growth mark for most players barring Mahindra and Mahindra.
Okay, that was short and sweet. Thank you so much for that, Puneet. So I think consumption, economy is going to be the big focus.
Yep, certainly seems to be the case. And let's put all of those questions across to a very special guest, Prashant Khemka, founder of White Oak Capital Management, Johnson, right now on the show. Prashant, good having you. Thanks so much for taking the time out. Really good of...
My pleasure, always, really good. Neeraj.
Yeah, thank you, Prashant. Prashant, how do you see the landscape currently? There are a lot of moving pieces. I know you always say that the macro is a cost of a coin and therefore focus on the micro. But the macro is impacting the sentiment currently with what Donald Trump and the likes are going to do or not to do, and what happens to Fed rates. How do you think about that aspect?
Certainly, Neeraj, with that caveat that macro is inherently unpredictable beyond what is priced into the markets already, I would say that at this time, from an equity markets perspective, it's looking quite positive, neutral to positive, in that the global backdrop with Trump getting elected, with or leaving aside all our political views, anybody's political views about him, I would say is positive for the US equity market. US equity market is the 800-pound gorilla or more in context of global equity market. So it should have a firm undertone. And that has an uplifting force on equity markets globally in general, with some puts and takes. Particularly for India, I think it's relatively positive, because going by his first term, and if the rhetoric so far coming out and the appointments that is made so far, they are again indicative of a harsher stance relative to China. And that should only be on the margin positive for India. Not as much, I'm not talking as much for money flows in the near term, but more from a real economic perspective. Again, these are all on the margin that we're talking about, but on the margin, I think the whole China plus one phenomenon started with in 2015 when Trump hit the road for the primaries the first time around. And it has subsequently over the last 10 years only picked momentum, and this should prove to be another boost, his second term. So that is a positive backdrop from a global perspective. Secondly, from a domestic India perspective, the sentiment, investor sentiment particularly, was after the central elections in June, a little bit of a, I won't say a big setback or something, but was no longer as confident following the June elections. And that confidence, I believe, has resurfaced or is resurfacing following the recent state election outcome. Because not that state election outcomes themselves are important, but to the extent that they are an indicator for the mood of the population at this time towards the central disposition, I think it is a positive outcome from the market's perspective. So both these, I think, do present a firmer backdrop for the equity markets as we head into the next year.
Prashant, can earnings live up to that as the third spoke in the wheel, if you will? Simply because we know Q2 was bombed out. The expectation was Q3 will be good, and it definitely will be better than Q2. But I mean, while we are all hoping for it, we suddenly have this warning from Godrej Consumer today that, demand situation still remains weak. So therefore, we know that some pieces of consumption will be impacted despite it being a festive quarter too. So can earnings live up and support this positive construct that you laid out for us just now?
I think consumer has been weak, as you noted, for some of the pre-release, if you will, that come out, and it's continuation of that same phenomenon that's been going on for last several months. So we might have, I think, Neeraj, over the next quarter or two, still earnings numbers that are not as strong as we were used to, let's say, over the prior few years. But I don't think that would necessarily have an impact on the multiples. So we are not, to be clear, not suggesting that we would be, we should expect the kind of momentum from equity markets that we saw, till June, July of this year. Yeah, but I would say, nonetheless, a double-digit return from here over the next 12 months, which is reasonable. That's not, that's more or less in line with what the longer-term market expectation would be. I'm just saying that that is a reasonable expectation, and feel more confident about that over the next 12 months. It's possible that earnings growth would not be much different from that. Earnings growth over the next 12 months, it's quite likely would be in that neighborhood of low double digits to low teens.
Mr. Khemka, it's also Samina joining in. We take your point. Valuations are attractive. Expecting a double-digit growth in calendar year 2025 is also very likely. But the fact also remains that we've borrowed returns from the future, because we've had a very good run. You look at most portfolios, look at some of your funds and your PMSs. They are commendable to say the least, right? But this now becomes a stock pickers market, and active fund management is what value will be seen in. Till up until this morning, we've had conversations of how the value emerges in the large cap space. Point noted, but the fact remains that every time there's a recovery, money is being made in the broader market universe. So how does one play this? Because it isn't easy.
I think, see, at this time where we are, or at any time, we don't, and first of all, thank you for the compliments. We don't have any strong bias towards a particular market cap or other large cap versus small caps or anything like that from an overall market perspective, though the portfolios generally have higher allocation in small caps and mid caps because there are more alpha opportunities in mid and small caps. So when I say more allocation to mid and small, I'm talking about relative to the market. Still, majority of the portfolio generally across our portfolios would still be 50+% likely be towards large caps. But, even at 40-50%, that's a very healthy allocation to mid and small caps because stock selection opportunities are stronger in small and mid, and that never changes. That's always the case because they are more inefficient segment of the market. So I would say that we don't have any such top-down biases from a market cap segment. And even on a sectoral basis, we have structural preferences, which continue to be the case today as well, be it in healthcare, be it in technology, be it in private sector financials. These tend to skew higher in our portfolios, and that is the case today as well. So broad-based opportunity set where from the team is able to identify opportunities.
Another one, Mr. Khemka, I want to talk to you about what's happening in the primary markets. 2024 historically has been one of the best years because we are in a structural bull phase. Compare us to markets like UK where you get maybe 2 listings a year if you're lucky. With the PE and VC investment phase that kicked off in the country about 3 to 4 years ago, or maybe even 5 years ago, do you feel the euphoria for primary markets will continue into the next calendar year? And will the subscription to this continue to remain as healthy?
It is very exciting time. I think it's positive, all round positive. The best part about a bull market is that so many businesses get funded and have the opportunity to tap the markets. Yes, some of them would end up, disappointing, but nonetheless, I think on the whole, at least so far, what we've seen and the levels we are and the kind of issuances that have been, these are very healthy times and optimistic times, but they're not euphoric times, we think, on the whole. Yeah, there are certain segments of the market, like obviously the SME exchange, one can, always point to, or certain, small cap issuances, which may be potentially stretched, but on the whole, it's a very healthy phenomenon that's going on in the primary markets. And I just hope, and we should all hope that this continues. The longer it continues, the better it is for overall the economy, the corporate sector, for fund managers like us, and for investors.
Prashant, couple of sectoral things. I mean, there's this whole China Plus One thing that you spoke about. You spoke about pharma, and while this whole thing was going on about the Biosecure Act and more supplies from Indian pharma to US, we suddenly get the news that maybe the Biosecure Act might not, it's not a part of the current defense bill and therefore doesn't become an act, maybe becomes an act later on, etc. You reckon it's best to ignore what's happening in the US until Jan 20th because the policies post Jan 20th might be completely or materially different than what is happening right now in the US?
See, I agree, Neeraj. See, anyways, we should not overplay the US aspect, first of all. And we should certainly not get too caught up with any particular such development as the Biosecure Act not getting through. We are in the final days of the current regime. Overall, I think the overarching thing is, as I was saying earlier, if Trump is anywhere close to what he was in his first term, and there are all the signs that he would be even more so, then, on the whole, he would have he would take a hard stance on some of the countries, including China, and that plays to the advantage of India. So there would be particular instances like what you are seeing right now with Biosecure Act, but all those are, a few puts and takes in the overall scheme of things.
Prashant, one more question is around how do you see themes which are futuristic in nature and investor interest thereof? I see you guys do a lot of pre-IPO deals as well into companies which were probably not even a part of a sector, but suddenly catch the imagination. So great stuff there. But there's a lot of promising themes, right? The whole energy transition piece that is happening, suddenly the influx of this whole data center output opportunity, so on, so forth, etc. Where is it that you believe lies, or even new tech for that matter, right? Now it's an established sector, but still relatively new, 2-3 years old. Where do you find the best bang for the buck within a lot of these new opportunities, which could be sizable 5, 10, 15 years out?
I agree. And you mentioned that. I think, Neeraj, when you compare countries like US in the developed world, or Europe, or in emerging markets like China, Korea, and others, what you find is that they all have these new age companies, if you will, as a far higher proportion of the market. It's double digit to 25%. Yeah. So in India, that is still low single digit proportion of the index at this time. Now, I am not suggesting that the current set of companies themselves would multiply tenfold on a relative basis to become 20% or so. But I think there'll be a lot of new opportunities that will be coming to the market over the coming few years. Obviously, there'll be cycles and they'll ebb and flow. But I do expect this new age set of companies, which are right now, a handful or a dozen, they would, or a couple of dozen, depending on how you classify them, they would be in hundreds in the next 5 years or so. And their representation in the index would go to double digit and then possibly to 20%, as we have seen with developed countries like US or other emerging countries.
Prashant, while I know you talked to Neeraj about newer themes, I can't not talk to you about old economy or pillars of the India growth story, right? If you are expecting double-digit growth, expecting the markets to contribute and do as well, one can't ignore banks, and it's probably a blanket approach, right? You buy into banks, you buy into the rural, the urban, you buy into consumption, you buy into various themes. Are you aggressively acquiring banks in terms of portfolio allocation across all your portfolios?
Sure, Sabina. See, banks haven't done that well, but we have had, it's an area of the portfolio that's not performed, let's say, up to expectations so far. But we still do believe that well-run banks continue to hold a lot of promise, especially at the valuations where they've gotten to now in relative terms. I would say if you look at any of these, can't name individual names, but any of these private sector banks, it is one sector of the market that is trading at below average multiples compared to their own past 5, 10, 15 years history. But also, as you might know, we do manage global money, or we do invest in global markets, more particularly global emerging markets. So when we look at the valuations and the prospects of Indian banks compared to banks anywhere in the world, be it in Asia or in LATAM or in Europe, the growth prospects are far stronger for Indian banks. The return profiles are by and large, while there are again some that are better than these, but the combination of the return profile, the growth prospects, and the risk, balance sheet risk, because in case of banks, that's very crucial element, the quality of the asset, the quality of the book. This combination of the three, we find most powerful in India. And in that context, the valuations to be very compelling. And hence the team continues to have very good allocation to some of these select private sector banks.
From that.
And non-banking financials as well as capital market intermediaries.
I'm glad you bring that up because that was going to be my next question. Capital market play, and you're leading from the front with the number of mutual funds White Oak has launched. Gives me a sense that you're very constructive on the capital market business. You want to elaborate on that? Any particular vertical that you like? Luckily, you're not in the listed space, so you don't need to comment on White Oak. But also, Q, and I don't know whether you're the right person for me to have this conversation. Maybe a fund manager of the fund may be more appropriate. But you've had significant performance in the White Oak Flexi Cap Fund. Similar strategy to what the PMS offers. You want to elaborate on that, if you may?
Thank you, Samina, for asking questions. No, the team has done very well. It's over 2 years now, coming up to 2.5 years, and most of the strategies, last time I look, are fairly well positioned from a peer group performance perspective or relative to the benchmark perspective. And want to take this opportunity to thank all our distribution partners for supporting us in these early years and putting that confidence in us from day one. I would say, look, we were asked when we started 2.5 years ago that you are the 42nd or the 43rd AMC. How do you expect, what is your right to win, if you will? I have worked for 8 years in the US market and managed mutual funds in the US, competing against thousands of competitors. Yeah. So in India too, it's only a matter of time that we would have first hundreds of mutual fund companies and then eventually would breach 1,000 mark as well. In US, there are more mutual fund companies than there are stocks. Yeah. So we would also have that over time. And then when we look back, we would look back to say, oh, you were one of the earliest, you were 42nd asset man, or whatever the number is, I don't remember exactly, but somewhere in the 40s. So you're the 42nd, 43rd AMC, which in the context of 1,000 AMCs would look very, very early. Yeah, and over time, as has happened across the world, if you deliver returns first of all, with some degree of consistency and in a manner that can be explained to investors, and if investors believe that is representative of what can be achieved to some degree in future, then generally speaking, they do trust you with their capital. So we are not necessarily just on the asset management companies per se, but more generally several capital market intermediaries we do have in our portfolio, as we expect the trend of financial savings channeling themselves into capital markets to be a multi-decade phenomenon in the Indian context.
So Khemka, we would have loved to continue chatting with you, but hopefully we'll see you when you're in India in a few days from now. And until then, have a good week and have a good day. We'll speak to you soon.
Look forward to seeing you, Samina. Thank
Likewise,
you.
Have a good day. Bye. Well, that's, of course, Prashant Khemka, the man telling us what he likes, what he doesn't, or still believes that double-digit returns in calendar year 25 is not too much of an ask. The market's having a flat morning, but no one's complaining. With that, it's a wrap on this edition of India Market Open. Thanks for watching.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and as always with me is Mahima Vachrajani, and we will take you through the next 1 hour of trade. Like the name suggests, this show gets you answers to all of your stock-related questions, and we have been speaking to you directly. To that end, you can call us on the number that is on your screen right now, or you can send us a message, as some of you have been doing for the last several months. Incidentally, we just completed a year, so you can wish us happy birthday. NDTV Profit completed a year on the 8th of December. It's been a fantastic year, and thank you so much for the support that you've given all of us. Let's take a look at where the markets are right now, and you have the benchmark Nifty 50 that's trading with cuts of about 0.4% or so. And you have the broader markets that are actually holding up and doing quite well in trade, comparatively at least, as a result of which you have the market breadth that is tilted in favor of the advances as we speak right now. 0.4% gain for the small cap index as well. Look at that. So you have a widening as we speak right now, and more gainers than losers on the screen, but not too much to speak of, at least for the benchmark. Take a look at the contributors on the Nifty 50, and you have quite a few losers, not too many gainers, only about 12 advancing on the Nifty 50. Gainers being led by HDFC Bank as well as Larsen & Toubro. On the other end, on the losing end, you have Infosys and HUL actually from the FMCG pack that's losing ground, is the worst performer on the benchmark Nifty 50, and perhaps to a certain extent that is on account of one of the stocks that is down in the dumps today, Godrej Consumer. It's come out with a mid-quarter update. Not really often where you see that happen, Mahima, and it's not a good update.
Absolutely, Alex. So, talking about stocks which are not doing well, and as you rightly mentioned, it's down in the dump today, and this is because it came out with a mid-quarter update, which is not very likely, as Alex mentioned, and the mid-quarter update does not look very nice. The management has said it sees disruption in the current business, and this will continue for the going few quarters. What they've said is that 2/3 of the India business is being impacted. The Indian revenue will see mid-single digit value growth and a flat volume growth in the next few quarters. The EBITDA is set to decline by high teens in Q3 on higher base, and raw material pressures will continue to weigh pressure on margins. In terms of the soap portfolio, which is 1/3 of its revenue, is facing pressure because of palm oil prices inching up, which have gone up by almost 30% in the past few months. And in terms of the household insecticides, which is another 1/3 of the total business, is affected due to delayed winter and cyclones in the South India. So management does not look very positive on the outlook for the next few quarters, which is why the other FMCG staples are also under pressure, considering HUL, Dabur, all of these counters are seeing pressure on the back of this commentary coming in from Godrej Consumer Management. Now, other stocks which are in focus also include PN Gadgil, where Motilal initiated a coverage with a target price of 950. The stock is up around 4%. CEAT company has signed an agreement with Michelin Group of Camsos off-highway construction equipment. The stock is up 10.7% as we speak. And something that's doing well is also Paytm. Well, Paytm is set to sell around 5.4% stake in Japan's digital payments company PayPal Corp to SoftBank, but it has given up its gain. It's down to about its days lows as we speak, but it was up in early trade
and
today.
And hit 52-week high as well. CEAT, by the way, interesting. I was speaking to Puneet, who tracks the automotive space, a little while back, and what he was pointing out, the reason why the street is taking this as so positive is that the acquisition of the Michelin brand which is taking place right now. The company that they're acquiring will add revenues of 1,600, 1,700 crore rupees in FY26, that's the next financial year. The EBITDA margins of that company are actually better than CEAT's right now. 20% or thereabouts is what they experience, and CEAT's has been around 14%. So it would be positive, both in terms of a top line increase. By the way, CEAT top line around 10,000 crore rupees, so it's adding a good 15% to its top line, or will add in FY26. Let's see how that reacts going forward as well. Of course, it's taken very positively today. We will move to the questions that have come through. Reminder, you can call us on that number on your screen. Ashish Maheshwari, Director at Arihant Capital, and Osho Krishan, Senior Research Analyst and Technical and Derivatives at Angel One, are both joining us right now. Good morning, gentlemen, and thanks so much for taking the time. Let me start with the first question, and this one's for you, Osho. Dhani Services, if you've got a view, not a very large company, 5,500 market cap company, and we've got a viewer, Devendra, who's written in asking for a view, is bought at levels of 73, and he's in the green. Should he book out, is a question.
Very good morning, Alex and Mahima. And firstly, I would like to congratulate both of you for completing 1 year with NDTV and completing NDTV the 1 year. So many congratulations to the whole team. Now coming to the question, especially on the Dhani Services Limited. So precisely, this is a very low volume counter, which has not been very tracked in a very regular manner. But overall, what we are observing in the last few trading weeks, there has been a decent upsurge in this counter from the zone of nearly 60-65 towards the zone of now 100. So on the monthly time perspective, there has been a breakout around the zone of 70-72 odd levels, and from there onwards the counter has seen a very tremendous movement, which has been backed by more than average tradable volumes. So I expect that there can be a continuity to the higher trend in the short term perspective, but one should definitely try to trail their profits on the higher end. So I expect that in the coming period there is a possibility of this counter moving towards the zone of 115 to 20, but one should definitely try to trail their profits. For now, 85, 88 is the zone where one should try to keep their stop losses and hold their position for short-term perspective.
All right, we have our first caller for the day. Satya from Hyderabad is calling us. Satya, thanks for calling in. How can we help you?
Yeah, hi. Hi. Good morning, everyone. So, I was currently holding Vodafone shares at a quantity of 4,000. I have bought at 8.5 rupees.
Okay.
So, can I hold or stay at the moment?
Okay, what's the time period, time horizon that you're looking for to keep holding these shares?
3 months approximately.
Okay, 3 months is the time horizon. And may I ask, when did you buy this, and what was the kind of thought process of buying Vodafone?
Actually, I have bought this stock a week ago at 8.5 rupees. Actually, it is a penny stock, right? There will be a chance to make a money like that.
Okay, Osho, I'll come to you for this one. Should you continue to be invested in Vodafone for the next 3 months?
See, overall, I think that Vodafone is a very risky counter. Again, being into a penny stock also below 10 rupees. So it will be very difficult for any price action to be tracked in this overall space. But I would say that in the overall trajectory that Vodafone is, it takes cover approximately around the zone of 8-9 every time, and on the higher end, it moves towards the zone of 14 to 15. So this is the historical trend for this counter. So in the last 3 weeks, we have seen a decent revival from the lower zone of 6.8 or 7 odd levels. And there has been a decent move. I won't say that it is a very strong movement that can be expected in this counter, but I would say that if person is having an aggressive approach, then can definitely hold to this counter with a strict stop loss of the bullish gap that has been made around the zone of 7.45. And 3 months perspective, definitely looking at the historical data, this counter may move towards a higher levels of 12 to 13. So one can definitely hold, but only the aggressive traders being aggressive in market can obviously hold this counter. I won't advise fresh recommendation in Vodafone as of now.
And do bear in mind, buying penny stocks is a very, very high risk strategy. You could lose a significant amount of money. I'm sure I'm sure Ashish will agree with that view. Ashish, I'm coming to you, and apologies for keeping you waiting. On Tata Motors, we've got a question. Devraj is tuned in, and he's asking, based on price to earnings multiples at a price of 809 or thereabouts, considering that it has dropped about 22% in the last 3 months, is it looking more attractive now? Ashish, can you hear me? Okay, we're trying to fix that feed. In the meanwhile, let me come back to you, Osho. We've got a question from Mr. Ekambaraya, and he's writing in from Hyderabad. He's asking for a view on latent view, and he's bought at a price of 441. He's asking what the view on the chart should be right now.
See, overall, there has been a corrective phase, which is latent view is into, and it is hovering well below the 200 simple moving average after a very long period of time. So I would say that for a fresh entry, I would have recommended it on a higher levels of 500 plus. But once the position is already taken at a decent levels of 440, so I would say to stay invested in this counter. On the lower end, again 438, 430, 435 should be the stop loss that one should keep in this counter. Overall, there is a potential of having a sloping channel breakout in this counter in the coming period. I expect that in the coming period, the time it breaks out 490 to 500 odd levels, there is a very good possibility of having a very strong returns in this counter. So definitely a hold for short-term perspective. 435 should be the stop loss that one can look for.
Okay, the next question is coming in from Senthil, who's from Nellai. Now, he wants to have a view on TVS supply chain share. Should it be held or sold? He's not given the quantity and the price at which he's bought it, but I believe he wants to know what the target could be or what the stop loss could be. So, Osho, I'll come to you on this one. How does it look on charts, TVS supply?
See, overall, there has been a consolidation going on in this counter. So I expect that in the coming period, there is a possibility of again a sloping trendline breakout in this counter. So near about 190 is the resistance zone. But looking at the recent trajectory, recent traction in this counter in the last 2 weeks, there has been a decent consolidation around the zone of short-term moving average. And today it has emerged above the 200 simple moving average also. So that's a positive development. One more day can give a very strong conviction of having a bullish approach in this counter. But I would say to hold on to the investment in the short term, we can expect a target of nearly 205 the time it breaches the zone of 195. So 195 is the immediate hurdle. The time it breaches that, 205 should be the target that one can look for in this counter, while on the lower end near to 178 should be the ideal stop loss for short term trader.
Okay, Ashish, if you can hear me, let me take the question that I was taking to you, and thanks for waiting. Hopefully we've resolved the issue with the feed. Devraj is asking about Tata Motors, and he's wondering, based on price to earnings, considering that it's dropped about 22% over the last 3 months, is it now looking more attractive?
Yes, in fact, now it is looking more attractive because if we see one trailing price earning multiple also of Tata Motors, now this is quite attractive. And like this stock is just now 100 rupees away from 52-week low of 700 rupees. So I don't think so. Things have gone so wrong in Tata Motors that maybe there's no value left in this. I think overall there was some sale off in Tata Motors from institutional side because this is a stock where a lot of FIA positions were there, and we have seen what has happened in the last 3 months from the FIA side. So now I think the stock is trying to find base at 800 odd levels, and it will be a good level to in fact enter in the stock.
All right, the next question is from Rajesh Maheshwari, who's presently in Singapore. Now, his query is on PVR Inox, whether it's a good time to buy at present from a short-term to medium-term outlook, and if yes, what should be the entry point? Osho, I'll come to you for this one. The stock has been doing well on the back of Pushpa too, but do you think this is the right time to enter?
See, overall, the counter is into a kind of a sideways to positive momentum. There has been a recent jump from the zone of nearly 1280 towards the zone of 1750, and from there onwards we are witnessing some kind of correctiveness in this counter. But overall the trajectory looks very promising to me. I expect that further, if there will be any kind of correction, continued correction towards the zone of 1460 and 1480, one should definitely try to accumulate this counter. immediately 1750 is the resistance. But the time it breaches the zone of 1750, then I will be very much aggressive and bullish in this counter, because then it will be having a kind of cup and handle pattern breakout. So short-term perspective, another 20-30 points of correction can be seen, and that should be seen as an opportunity to accumulate for targets of 1700, 1750.
Okay, yeah, so apparently it's doing particularly well, Pushpa 2. Let us know what you think about the movie. Would you recommend watching? I don't know if our experts today have watched the movie. And do you need to watch Pushpa 1 to watch Pushpa 2? That's another thing that I want to know about. Kantesh Reddy is joining us on the phone line from Karnataka. Kantesh, have you watched these movies, and would you suggest that I watch them? And also, what's your question?
Good morning, sir.
Good morning. How can we help you?
Sir, I have converted. This is call from third time, sir, from you.
I'm glad that we are able to speak to you now, Kantesh. What's your question?
Sir, ITI Limited, sir.
Okay.
I have bought 80 shares, sir, at the rate of 338. It is a very bullish pattern. It was created, sir. When I can sell?
Okay. So you bought it based on the charts that you have seen, and you think that it's a bullish view, right?
Yes, sir. When I buy now 338, it has come for 260 onwards, sir. That's why. 1 month I have sitting from.
You've been watching the stock for a month, and yes. What is the kind of time frame that you have, Kantesh? Would you like to hold it for less than a year or more than a year?
No, sir. Short term, sir. Then I sell and I will buy another share.
Okay, so short term would be what, 6 months or less?
No, sir. Within 1 month or 2 months, sir.
Within
15 days also, okay, sir.
Understood. Got it. So let me take your question to Osho then. Osho, obviously he's been looking at the charts and he thinks that this is a positive view on the stock. How are you looking at the charts, and do you hold that view as well?
See, overall, this counter has seen a very tremendous rally in the last 2 trading sessions, but looking at the charts, currently it is at a very strong resistance zone on the weekly and monthly time frame. The zone of 355, 358 is a very strong resilience that has been historically seen as a corrective zone from where we have started witnessing a kind of correction in this counter. So I would say that if the perspective is very short term, better to hold on with a trailing stop losses to the higher levels, but I am not very much sure for intraday. It will be like something like intraday. One should have to keep stop losses if the buying price is 338. But overall, if I have to say, I will say that if there will be a breakout above 355 or 360 on a closing basis, definitely it has a potential to surge approximately 30 points. But at present, it is approximately around the buying zone. So I would recommend to hold on, but that will be a very aggressive approach, because after these kind of rallies, a possibility of cool off or profit booking can be seen. So if Kantesh can hold a position with the same buying price as the stop loss, so 338 should be the stop loss for this counter. And in the coming period, if it breaches 360, then there can be another 30 points of rally within a very short span of time.
All right, so it's a hold for ITI at present. We have our next caller, Debasis from Kolkata, is calling us. How can we help you today? Thanks for calling in.
Hello.
Hi.
I want to purchase HFCL
Okay.
for a long term. It is right time.
Okay. Have you studied the company already, or do you want to know the fundamentals from our analyst?
No, I already studied the company.
Okay. And why are you so interested in the company then?
HFCL.
Okay. But why? Why are you so interested in the company if you've studied it?
I know that particular company making several types of equipment and that is supplied to Reliance Industries and other renowned concern.
Okay, Ashish, I'll come to you for this one. Interesting company into telecom infrastructure. Your view on this one?
Yeah, this is an interesting company in telecom infrastructure space for sure, but the stock is highly volatile. If you see the stock always goes up in by making higher tops and higher every time whenever any announcement of orders are concerned, but after that we see some big retracement. So my view is this is more like a trading play instead of more long-term investment play. If in this sector you need to remain invested in this telecom, in fact ITI, which we were discussing earlier in this show, this is a better bet, because whatever ITI used to do turnover in full year, now they are doing in a quarter, and this is the reason ITI stock is performing so well. So HFCL, instead of taking a long-term bet, though they are getting order recently, they got 8,100 crore BharatNet 2 orders, etc. But again, the margins are quite less compared to other players like Tejas Network, etc. So HFCL a trading play, and ITI and Tejas can be a better bet in this sector.
So you've gotten a combined view of the space. We've got a next question coming from Mr. Sukumar, and he's asking about Ola Electric. He's bought at elevated levels, 142, and he's asking what to do with this. Should you hold or should you exit? The stock is currently trading below 100, so the loss is quite considerable. I do not know the number of shares purchased. It has recovered over the last month or so. So Osho, on the charts, what should he do?
See, overall, there has been a negation to the formation of lower lows in this counter, lower highs in this counter. So I expect the zone of 85 to 82 now should be seen as a very strong support in this counter, while on the higher end, again, 100, 105 is the immediate resistance. So for trading purpose, yes, it is on the verge of giving a breakout, and it should be approached at buy on dips and sell on rise kind of a scenario. But on the lower end, I will better say ki stay invested in this counter. If there will be any kind of correction towards the zone of 80, 85 or 90, one can even accumulate further. But on the higher end, approximately 100, 105 is a resistance zone. Until it breaches the same, then better one should try to book their profits around the same zone. Above 105, again, it can move 10 to 15 points on the higher end. So buy on dips and sell on rise is the suitable approach looking at the overall technical data that I have.
The next question is from Rakesh Nagar, who's from Noida. He's having Muthoot Microfinance at 220 a piece, and he's bought around 850 shares. And he's a long-term investor and wants to keep holding it for the next 3 years. Is that a good idea, Ashish?
Yeah, Muthoot Microfinance, if you are having long-term time frame, then certainly a good idea to hold. The stock is also available near its 52-week low, which is around 180. But compared to other microfinance companies, the volatility and the momentum is quite low here. One good thing is that they are primarily dominating in the southern states, where the delinquencies are compared to much lower than the peer set in microfinance segment. So fundamentally strong company, but should have long-term horizon or at least 1 to 2 year horizon for investment.
All right, Gautam is calling us from Visakhapatnam. Gautam, good morning to you, and how can we help you today?
Good morning, Alex. How are you?
Very well. I'm glad that you're calling me on Monday morning. How are you?
Yeah, I'm good. Thank you so much. Yes, Alex, I have purchased 37 shares of Motilal Oswal Financial Services.
Okay.
I purchased at 990.
Right.
So I just want to know whether I want to hold it for 1 year, that's for sure. So I just want to know whether the price is going to be increased or decreased.
Okay, can you help me with a few things though, Gautam? Did you buy this purely as a trading play, or is this something that you bought based on the fundamental story that Motilal Oswal and other people in the wealth business have experienced?
Yes, Alex. Based on the fundamentals, because I have seen they have improved their profits in all their verticals except this housing finance. Their operating profit margin also increased, and the future results also good. And they are also expecting 30% improvement in their upcoming quarter business.
Yeah.
This is what my analysis. Based on those analysis only, I have purchased the stock. But experts should tell whether I have taken the right decision or not.
Okay, and I'll also take the liberty of asking whether you can add more at the current price. Thanks, Gautam, for your question. I'm going to take it to Ashish. Ashish, Motilal Oswal, interesting play. A lot of people have spoken about it. What's your view? I've been looking at the mutual fund schemes in the equity space, and they're doing particularly well, particularly the mid-cap scheme.
Yes, in fact, they are known for their stock picking for so many years. So their even AMC's business is also doing well. And one good thing is if you see their performance, last year they did almost 2,500 crore kind of profit, and in last 6 months only they did 2,000 crore. So huge growth is there in the business, and one good thing is that they are into all spaces, whether it's retail, institutional investor, HNI, and entire gamut of financial services they offer. So this is the reason now market cap is almost touching 60,000 crore. But in my view, in long run, I'm quite bullish as far as broking companies are concerned, be it Angel One or Motilal Oswal. I think these kind of companies which are market leaders will continue to thrive. So remain invested in this company.
You keep adding, just a quick answer to that. Would you keep adding?
Yes, I like to surely add it around 950 rupees.
Fantastic. All right, Gautam, I hope that answered your question. We have to slip into a very quick break. We'll be back on the other side to take more of your questions. Do stay with us, Osha, as well as Ashish. Stay tuned. We'll be back before you know it.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide.
Welcome back. You're watching Ask Profit, a show where we answer all your stock-related queries, whether they're fundamental or technical. You can ask all your stock-related queries on the number that will be flashing on your screen it'll be flashing on your screen right away. My team is not. Yeah, there you go. You can call us on the number that's flashing on your screen right now. Or if you're not a caller, you can ask us all your queries on the WhatsApp number that is right now flashing on your screen. Moving on to our next query, Chandan from Hubli, Karnataka is asking about Godrej Consumer, and he wants a long-term view on this particular counter. Ashish, I'll come to you for this one. The kind of management committee that has come out on Godrej Consumer does not look very positive and constructive, because of which the stock is tanked almost 9% in trade today. Your view as to whether this is the right time to enter the stock? Ashish, I think you're on mute.
Yeah.
Sorry. I think still stock is expensive because the way they are revising their numbers of growth and they are not that confident also this will sustain this kind of numbers. So in my view, overall this sector is not looking that promising, and Godrej Consumer being a market leader also, if they are giving pessimistic view about takeoff in urban market and rural market also is not faring that well, this is a cause of concern. Another thing is, as RBI has also revised their estimate for Indian GDP growth from 7.2 to 6.6, and in my view, even going down further, it may even come down lower. So if money is not being generated, I think the first consumption which takes hit is the consumption to these FMCG companies. So I am not that bullish as far as Godrej Consumer is concerned. I think it's a stock to avoid for time being.
Okay, all right. So there's a very clear view coming in from Ashish. Shiva is calling us from Bengaluru. Shiva, good morning to you, and thanks so much for calling us. How can we help you today? Shiva, can you hear me? Good morning. Okay.
I can. I'm sorry, I was on mute. Good morning, Alex.
Good morning.
Yeah, no, I brought 100 shares of IRFC at 152.35, and I would like to know whether it is prudent to hold it or sell it at this current price point. And I would also like to know what would be the outlook of the share by your experts.
Understood. Help me with a view as to why you bought it. What was the kind of thinking that you had? Was it a fundamental purchase? And how long can you hold this, Shiva?
I can hold it for another 6, 8, 10 months as well. That's not a problem. But I didn't buy it looking at the fundamentals. I just joined the bandwagon.
You joined. Okay, fine. That's fair. Considering the stock has done 100% plus over the last 12 months, it's a good bandwagon perhaps to jump onto. Let me see if the bandwagon has got a lot of velocity and momentum so that you can benefit from it as well. I'll come to you, Osho, on the technicals. What is the kind of momentum that you're seeing in the stock?
See, overall, this counter has started gaining very strong traction in the last 2 or 3 trading weeks. Also, on the technical front, there has been a kind of a revival or a reversal that can be seen. Or at present, it is hovering just above the near the 200 simple moving average and is on the verge of giving a breakout. Overall, technical structure is very positive for another rally of 20 odd points in the very short term period. So I'm expecting a target of nearly 180 in this counter in short term time frame. And also from a longer duration, also this the technical structure looks very, very good. But for short term, I would be stuck with the range of 180 to 160 in the near term. And once we see a decisive breach above 180, then another 20 to 30 odd points of movement can be seen in this counter from medium term time frame. Short term, 180 is the target.
Right, so it's a hold for IRFC. The next question is from Devender from Hyderabad. Now he wants to know as to which stock could be a good stock to buy in the renewable energy space, and he also wants to know that within the renewable energy space, is this the right time to enter Adani Green? And he's a long-term investor. Ashish, I'll come to you for this one. Your view on renewable energy sector?
See, renewable energy sector overall looks good only because now whatever major expansion is happening in Indian power sector, it is happening in renewable only. So all renewable stocks are going to do well, whether it's Adani Green or any other stock. But my pick at present is Vari Energies. In my view, after correction from 3,700 to now 2,900, Vari Energies has a very good potential because they are the market leader in the home segment, and this is a sector showing a lot of growth. So in my view, a stock which you can buy at this price point is Vari.
All right. I'm wondering if the coffee that I sent you has reached Ashish. Just check if the coffee is at the door. In the meanwhile, let's go to the next caller. We've got Rakesh Arora, who's tuning in from Ahmedabad. Rakesh, thanks so much for calling us. How can we help you today?
Yeah, hi, morning, Alex. I just wanted to know, have a fundamental and technical view about Dynamic Tech. I'm holding shares at the price, and I am looking it for long term.
Okay, no, I've lost you on just the most operative portions. So the number of shares has been lost. So 35 shares, is that right?
Yeah, it is 35 shares at the rate of 6,000 per piece.
Okay. And what is the kind of thinking that you had, Rakesh, on this? Is this a trading bet?
No. It's a long-term investment betting on defense sector.
Okay. And do you have other stocks in the defense space, or is this your solitary purchase in the defense space?
No, I have another one, that is your Azad Engineering.
Understood. Okay. And this is part of an overall portfolio, right? So what you're asking basically is, what are the prospects for Dynamic Tech, and should you continue to hold? Should you add more at the current price, right?
Right.
Okay. So Ashish, what's the view on Dynamic? It's currently trading well above the buy price of 6,000 at close to 8,000. Would you add more at this current price?
See, if I look at the performance for this last 2 quarters, is not still that encouraging. Because last year they did almost 120 crore profit. This time it's only much lower. I just don't remember the exact number, but I remember this is much lower this time. But still, this is a stock where not too much liquidity, etc. is there. So stock is commanding this kind of premium. Though stock is into good segments, that is hydraulic, aeronautics, and security systems, etc. But in my view, instead of Dynamic Technology, if you look at Zen Technologies, which can give you much better return because the kind of growth it has given in last couple of years, this is a stock to watch for in future. So just study Zen Technologies also, then take a call.
Right, that's the view coming in on Dynamic Technologies. The next question is from Jerry, who's from Kochi, and he's holding 5-Star Business Finance Limited. He's bought it at the 713 levels. He's not mentioned the number of shares that he's purchased, but I believe he wants a long-term view on this one. Ashish, I'll stick with you. Your view on 5-Star Business Finance?
Actually, I'm not that optimistic or that bullish as far as business finance companies are concerned, because in my view, particularly banking stocks are available at much lower valuation. So why to give very high valuation to companies like 5-Star, business finance, etc. So I'll stick to banks like SBI or Bank of Baroda or Indian Bank instead of NBFC at this price point.
All right. Nimesh has got, okay. So Nimesh is joining us all the way from New Jersey in the USA. Nimesh, thanks so much for writing in, and thank you so much for your patience. I believe you've been waiting for some time. So you bought Escorts Kubota at a price of 1,372, and you've got 75 shares, and you're looking for a technical view and a long-term view on the technical. So Osho, I'll come to you on this one. If you've bought at levels of 1,372, the stock is currently trading well above that. What is the strategy that you would employ right now?
See, overall, I expect that obviously the person is a very long-term investor, and overall the technical structure from a longer duration or a broader time frame is very constructive. In short term, yes, the counter is into a kind of a corrective phase, but it is hovering near the 200 simple moving average. So I expect that over a period of time, there is a possibility of this counter to have a strong revival. Immediately 4,000, 4,100 is the short-term zone that one can expect, but that is a very short-term duration. From a longer-term duration, 4,400, which is the lifetime high for this counter, can be retested from a medium-term time frame, and again after that also we can have a review over this counter. So I would say better to stay invested in this counter. The counter have seen a decent correction and it's hovering near about a very strong support zone. So I would say that from here onwards, another 5 to 700 points of rally can be seen in the short term period. So stay invested even for short and long to medium to long term perspective.
Right, so it's a hold for Escorts Kubota. We have our next caller, Mohan from Mumbai is calling us. Thanks for calling, Mohan. How can we help you?
Madam, I am having 1,600 shares of KSB Limited.
Okay.
And I am holding it for a very, very long term, last 20 years. I just wanted to know the future prospects of this company.
All right.
Over a long period of time.
Got it. And what was the kind of thinking when you bought these shares? Did you study the company?
Yeah, I studied it. It's a German company and they've been doing very well.
All right. Ashish, I'll come to you for this one. 1,600 shares bought at 107 a piece and he's sitting on a significant amount of profits. Do you think he should continue to hold these shares?
Yes, in my view, you can continue to hold these shares because all these pump companies are really doing well. And we have seen even companies like Shakti Pumps also delivering excellent return. And KSB is just slow and steady, but fundamentals are good. They are making 60 crore average profit every quarter and a good pedigree of promoters also. So remain invested. My target for this stock in 1 year is again 4 digits.
Wow, okay, that's good. And I mean, 8 times gain. I do not know how long you've been holding, but congratulations on the patience that you've displayed. Abhishek is writing in from Mumbai as well, and he's looking for a fresh entry in Unicommerce e-solution, and he's wondering whether to do so right now at the current price. Any view on the charts, Osho?
For Unicommerce, I do not have a very strong track on this counter. So it would be very difficult to have any kind of view at present looking at the technical charts for this counter. So overall, one can definitely look for a fundamental for an entry point in this overall short or medium term duration. But on technical, I do not have any strong track in this counter.
That's understandable considering that it was listed not too long back. Ashish, any view on the fundamentals, and would you suggest a fresh entry based on the fundamentals?
So this is again an e-commerce selling company and almost 2,000 crore is now market cap. So in my view, these companies are showing a lot of traction in the market, but depends upon the kind of profitability that they are able to report in future. And people have really made good money after the IPO was listed. So if you have got allotted shares in IPO, I don't know what was the purchase price, then I'll recommend to exit. But if you have bought post listing, then at least have 1 year time horizon. My target will be 300 rupees in this company because these kind of companies have really good future.
All right. So despite the underperformance in the recent past, perhaps you can look at it and study it a little more. Rajshekhar Reddy is calling us from Bengaluru. Raj, thanks so much for calling us. I believe your question's on Deepak Nitrite, is that right?
That's right. Is a Deepak Nitrite holding 1,000 shares at 320.
Okay. When did you buy it? Because it's I'm assuming it's been quite a while.
Yeah, it's almost 5-6 years back.
Okay.
That time chemical sector was limelight and valuations was good that point of time.
Okay. So Raj, did you buy it all at once or have you accumulated over a period of time?
I staggered the purchase and then final purchase value average was 320.
Okay. And you've held despite the fact that the chemical space has had its share of problems over the last 1 year. What is the thinking in that time?
Because my base price is so low,
yes.
I thought maybe 1 or 2 years the sector itself may turn around. That was my idea.
Was that difficult though, Raj? I'm curious what you had to... so when you were seeing the effect on the share price and the drop from the absolute peak, was that difficult for you to deal with?
Absolutely not, because I'm a very long-term investor, and couple of quarters here and there, I really don't bother much.
I'm glad to hear that. So let me get you a fundamental view on this and whether or not you can add more at this juncture, whether Deepak Nitrite is looking positive in the second half of this financial year. Ashish, on the fundamentals, you heard that Raj has tremendous patience. He's not going anywhere. 320 is the acquisition price for Deepak Nitrite.
Yes, and if I see even 50 week low, 2000 and 3200 was 50 week high low, so stock is quite stable if you ask me compared to other chemical plays. Again, the reason is they are into very specialty segment, that is specialty chemical, and they make nitric acid, which is which is not easy to make, and they are having the maximum market share. In fact, they are number one in nitric acid, which is used in diversified industries, and this is the reason. Though the profit has not grown, if you see last 3 years, they are doing almost 850 crore profit, and in last 6 months also around 400 crore is the profit. So run rate is going to be same, but as consistency is there and you enjoy decent market share, that is why market cap is quite stable compared to other chemical companies. So my suggestion will be to remain invested in Deepak Nitrite at this price point. Once fortune changes for chemical companies or the tide turns, then you will get again 3000 plus mark.
All right, that's the view coming in on Deepak Nitrate, but we'll just diverge a bit and onto an NDTV Profit exclusive. Road projects worth 40,000 crore rupees stuck as NHAI seems unable to score land approvals. Vikas Srivastava has the exclusive details on this. Vikas, what do you have?
Yeah, right. So basically close to 40,000 crore worth of HAM projects, basically what is called as hybrid annuity model projects. They are stuck because National Highways Authority of India has not been able to provide the appointed dates. Now appointed date happens after the letter of award is given to these developers. So letter of award was given almost a year back, or close to, in some of the cases, even 1.5 years back. But these companies have still not, or these projects have still not received the start date or the official start date for these projects. Now the reason for that is under HAM project, NHAI promises to provide 80 to 90% of land at the time of the letter of award. But that has still not happened, and because of that the appointed dates have not come. So the reason or the challenges are basically right of way and compensation related issues, and also litigation in some cases, because of which the land acquisition has not happened. Now because of that, what's going to happen is that most of these developers will not be able to execute the projects which are almost as high as three times of their total order book. Now this is, according to some of the industry analysts, is expected to bring down the order books to less than 2 times. And the execution of the construction activity is also expected to go down by almost 10% in FY25 compared to FY24. So now all these issues are going to be a big challenge for a road sector, which is already facing various challenges. Like last year, Bharatmala project was stopped because of cost overruns, and no awards are happening in that. Even in the first half of this year, the awards have been very slow. So all this is going to have a massive impact on the road and the construction sector. So I mean, we expect that soon the acquisition happens and these companies get the letter of awards and also the appointed dates, as soon as possible.
Vikas, thanks for giving us those details. Probably this will weigh in on a lot of infrastructure stocks like IRB, L&T, HT Infra, as well as Ashok Biocon and Afcons. We'll have to wait and watch as to how the order books of these companies are being impacted in terms of execution. But moving on, the next query, and messages like these always make my day. Alex, he said that Alex and team, you've always helped me with very clear information about stock analysis. I'm watching you for the past 1 year regularly. Keep watching. I'm very glad we don't have the person's name, but I wish you also give us your name so that we can thank you with your name on air.
Mike, his name is Mike.
Okay, oh, we have his name. Okay, Mike from Cochin, thank you so much for those kind words. I believe he has a question on Kitex, yes, and he wants a short-term view on this particular counter. Osho, I'll come to you on this one, especially when we're seeing that the Bangladesh plus one is now kind of having a positive impact on the Indian textile sector, and these guys export cotton goods. But chart view on this particular counter for the next 3 months.
See, overall the technical structure is very positive in this counter, but we have to consider the kind of a returns that it has provided in current year, so approximately 230% already up the counter is. So I expect that technical indicator wise, the counter is already into a very strong overbought terrain, but there has been no respite of any strong profit booking or correction in the counter. The 20-day exponential moving average has always provided a very strong cushion to this counter. So I expect that till the time the momentum continues, one should try to hold their position. For now, on immediate basis, the support lies around the zone of 680, 685. So one should trail their profits, keeping a stop loss of 680 and keep riding the momentum till it persists.
Harvinder is tuning in from British Columbia in Canada, and he's asking about Tata Steel. He's bought 510 shares at an average price of 157.75, and he's wondering what the next 1 to 2 years have in store for this particular company. He also wanted to know about Tata Motors, Ashish, and I've mentioned that you are positive at this current price. What's the view on the fundamentals for Tata Steel, though?
I'm not actually that bullish on as far as steel industry is concerned, and even Tata Steel per se. Even if you have seen, might have seen the stock has underperformed in this pack compared to other players like JSW Steel or even JSPL, etc. So it's a avoid. In my view, nothing is going to change overnight, and the way things are happening in the world, it's not that easy to compete with the Chinese still, because in China they are slowing down and the steel prices are also not picking up. So pressure is going to remain on steel companies. So Tata Steel is a avoid, but Tata Motors, I think at 800 rupees, it's a good buy.
That's the view coming in on Tata Steel. We have our next caller. Mohan from Hyderabad is calling. Mohan, thanks for calling in. I believe your question is on Genesis International.
Yes, madam. Good morning to all. I really thank and appreciate the entire team of NDTV Profit for bringing the latest news and business aspects.
Thank you so much.
I'm really addicted to your channel. I used to watch previously CNBC Awards and ET now. Now I am completely following you.
Thank you so much, Mohan. That means a lot.
Yeah.
Yes.
My query is Genesis International, which is on LiDAR maps, like C-Info, MacMy India. And I bought it 500 shares around 950.
Okay.
I would like to know the prospectus of this company. Can I hold it long term? And I'm having little bit profit. Can I get out of this company?
All right. He's sitting on a profit of roughly 17,000. But Mohan, before I move on to an analyst for your query, thank you so much for those kind words. It means a lot, and this is what keeps us going, right,
Absolutely.
Alex? Thank you so much for that. Ashish, I'll come to you on this one. Your view on Genesis International?
See, Genesis is a stock which is doing very well. If you see, stock has touched 52-week high, I think today or in previous trading session, it was almost 998. And if we see even their performance-wise, also they are doing quite well. If I try to analyze their financial numbers, they did 21 crore last year, and almost 16 crore they have already done in 6 months. There's a real parameter how much you have done previous year and how much profit as you have already done in 6 months is very crucial stage. So Genesis is again a good buy, and in my view they are sitting on quite good order book also. Fundamentally, company is doing well. Very low interest rate, etc. also interest cost they are paying. So it's a buy in my view, and if you are already holding these shares, just remain invested.
And it's seen significant growth over the last 12 months and even 6 months. It's a doubler in just 6 months. So watch out for this stock. Genesis is the name of the counter. The question that is coming in next is on WhatsApp. GK is asking whether he can take a fresh position in Trent as of now. Not too long back, the company did have a little bit of a tumble. It has recovered somewhat from that, but not to the level that it was. What's the view on the charts, Osho?
See, overall, as you mentioned, the counter has seen some kind of correction from the higher zone of nearly 8,300 towards the zone of approximately 6,200 in the recent period. But from those levels, the stock has again started gaining decent traction, and I expect that even in the coming period, there will be a gradual move on the stock prices. I expect on short term, approximately 74,7,500 is the immediate target that one can expect in this counter in a very short term duration. While on the lower end, near to 6650, 6700 is a very strong support. So one should definitely stay invested for short term target of nearly 75 kind of a zone. But if it breaches the zone, then again we can see a further continuation to the primary uptrend in this counter.
All right, that's a view on Trent. It is time to hit the rapid fire segment. Ashish, Osho, you know what this means. We're going to throw as many questions as possible at you over the course of the next 2 minutes. Do try and answer as many of them as possible in as short a time frame as you possibly can. The first stock that we're talking about is Dixon Tech. And this is a short-term question, or rather, actually, it's a question about what price you would buy it at based on the technicals, Osho. Is this the current price? Is this the price to buy?
It's very overly priced, so I would expect that if there will be any kind of correction towards 17,000 or 16,800, that will be an decent levels to accumulate this counter.
All right, the next query is from Sumit, who's from Bangalore. He wants to know that he wants to exit Torrent Pharma by the end of December. Is that a good strategy? Osho, I'll stick with you for this one.
Again, this counter has a potential to retouch the zone of 3,500. So yes, try to keep it in a watch list. If it breaches 3,500, then there can be a possibility of near to 300 points of rally. If not, then better to exit at 3,500, which is a very, very strong resistance for this counter.
Okay, Federal Bank bought at price of 212 average. Pandian wants to know whether to hold, whether the CRR cut will have any impact. Ashish, on the fundamentals?
You can continue to remain invested in Federal Bank. This is one of the best performer if you see in the banking sector, almost touching 52-week high. So stay invested.
All right. Jyoti from Dubai is asking that she wants to create a portfolio around solar and EV sectors. Which will be the best stocks to invest in, Ashish?
Yeah, in my view, JBM Auto as far as EV is concerned, and Vari Energies in solar sector.
Got it. SBI bought at levels of 588, making quite a bit of gain. Satish wants to know whether to hold or sell. Osho, on the charts?
Definitely a hold. One can expect a target of nearly 900 in the very short-term perspective, and that is a break or make zone. So I would expect that further continuation can be seen.
All right, Asit from Kerala is holding 1,000 shares of Sagility, and he wants to know a view on this. Ashish, I'll come to you for this one.
Yeah, Sagility India, I think he's talking about.
Yes, Sagility India.
Yeah, the huge buyer circuit is there on this stock and already at 52-week. I remain invested.
All right, let's get across to Karan Adani, who is speaking at the Rising Rajasthan Global Investment Summit.
When you assumed leadership in 2014, the Nifty stood at 8,000. Today, it stands at an astounding 23,000, reflecting the confidence of investors, entrepreneurs, and citizens across our nation and abroad. And perhaps the most remarkable, according to me, is this one. When you assumed leadership in 2014, a staggering 23% of our population lived in poverty. Today, that number has been cut to 11%, with 250 million people lifted out of poverty. This is not just a statistics. It is a story of families finding hope, of children dreaming again, and a nation reclaiming its promise. Honorable Prime Minister, you represent hope. You represent aspiration. And today, families across India feel empowered to dream, and the promise of better tomorrow feels very tangible. Under your leadership, the world no longer views India as an emerging power. It looks to us as a leader of Global South. You have set a benchmark for developing nations, combining economic progress with dignity, influence with conviction, and balancing strength with humility. Honorable Chief Minister, under your visionary guidance, Rajasthan is undergoing a historic transformation. The issuance of 25,000 appointment letters and the ambitious goal of creating 4 lakh jobs for the youth is a testimony to your commitment to empowering future generations. Your vision for doubling the state GDP in the next 5 years gives us immense confidence to further expand our investment in this state. Let me now take this opportunity to outline some of our investment plans in Rajasthan. The Adani Group plans to invest over rupees 7.5 lakh crores across various sectors of the state economy, with over 50% of this investment being made over the next 5 years. Let me elaborate. We plan to build the world's biggest integrated green energy ecosystem involving 100 gigawatts of renewable energy, 2 million tons of hydrogen and 1.8 gigawatts of pump hydro storage. These investments will turn Rajasthan into an oasis of green jobs. Beyond energy, Rajasthan is critical to our ambition to become India's largest cement company. We will set up 4 new cement plants to build additional capacity of 6 million tons per annum in the state. In addition, there are other investment plans such as developing a world-class facility at Jaipur Airport, multimodal logistics parks and ICDs that will support your transformative plan for Rajasthan. Honorable Chief Minister, as I conclude, let me reaffirm the Adani Group's commitment to Rajasthan. We look forward to working with you to help shape a future that not only honors Rajasthan's legacy, but also sets new benchmark for your state's timeless legacy and boundless potential. Thank you. Jai Hind.
Thank you.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
welcome to KYC, a brand new show at NDTV Profit. In the fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of the companies they invest in. KYC, Know Your Company, is a show designed to give you regular investors powerful, actionable insights into the fundamentals of every listed company every day. And today we have with us Tata Power, which remains in focus at the moment. Now, Tata Power, of course, as we all know, is, well, rather it's started its journey as a power generator. But, through the course of the many decades, what it has also done is, pivoted towards, I would say, not just, distribution, but of late, over the last few years, we're also looking at the company, venturing into, renewables as well. So let's take a look at what it actually does. So of course, it's in the business of generation, transmission, and distribution. Moving on, it also aims to produce power completely via the renewables future. And moving on, of course, all the focus remains on renewables with respect to what the company wants to do. But as far as its current capacity is concerned, thermal is the major one, but we are seeing a significant ramp up as far as the solar capacity is concerned as well, coming in second in that list at around 4,000 megawatts, about a little over 4 gigawatts. And, they're also, in fact, into waste heat recovery. So that's as far as, your overall generation portfolio is concerned. But in every show, what we try to do is we try to rate these companies based on a handful of parameters with respect to what this company has done. And among these, what we are considering is the income statement, of course, the kind of growth that the company has seen over the past few years. We talk about the latest balance sheet. We also compare and consider the return ratios naturally as a consequence of the income and the balance sheet, and of course, cash flows. Among other factors, what we're also considering is shareholding and street cred, how the company has done in terms of its share price action as well as dividend payment, and not to forget what the street is making of Tata Power. I reckon that for us was a better parameter as compared to price to earnings or any other valuation metric, because it's always subjective, and we thought that the street view would be better. But to take us through all of this, I am also now with Mihika, who's gonna join us to give us more insights in as well as help us with the ratings of the company. Mihika, thanks for joining in. Let's start off with the income statement. Yeah. What are you noticing here?
So revenue of FY24 stood over 61,000 crores, EBITDA stood over 12,000 crores, and net profit almost 4,200 crores. When you look at the 3-year CAGR, which is the compounded annual growth rate, revenue and EBITDA in the range of 20 to 25%, while net profit has seen a strong over 35% growth, and this is a thumbs up because it's seen consistent growth over the past few years, and the income statement looks good as of now, Agam.
Talking about the balance sheet too, it's not unhealthy. That's something I can certainly tell you, but it does have a very large gross debt. But we must remember that the company is working with a significant amount of large working capital requirements, which means its short-term debt is also significantly large. That said, it does have a net worth of around 34,000 crores, and it has very healthy cash flow generation as well, something that I'll talk about as well. So at least as far as the balance sheet is concerned, at the moment, its gross debt stands at around 54,000 crores, which is a little less than 2 times its net worth. But do remember, the cash on books at the moment is also a little over 9,200 crores. So it's fairly healthy. The only reason why I would give it a neutral rating is because of the fact that the debt is a tad bit higher, because of which they do incur substantial, interest costs. But save for that, largely given the kind of operation that it runs, it's not a terribly bad balance sheet, which is why I would give it a neutral rating. But what about return ratios, Mihika?
So we've seen an uptick over, since 2021 to 2024. Return on equity in 2021 stood at around 5.4%, while return on capital employed stood at around 5.9%. But there's been volatility, there's been a steady rate of growth, but in 2024, return on equity did see somewhat of a correction to 12.1%. It has moderated, and even the uptick in the return of capital employed is barely 0.2%. So it's a neutral rating in terms of ratios, because while they have seen some improvement over the past years, FY24 is where they saw some moderation to little to no growth. So it's a neutral rating on the return ratios. But Agam, how do cash flows look like?
Not too bad a picture out there, because we are certainly looking at an improvement here, at least in terms of cash flows from operations. And there's been an uptick there as well. Nearly 6,000 crores cash generated from operations itself. Even on a net basis, 2,400 odd crores. I know that numbers is a tad bit lower than what we've seen in the first half of FY24, but we must remember that this is also on account of several changes, and this is just the first half. So I'm not necessarily gonna put any negatives here. It's a thumbs up as far as cash flows are concerned. But overall, shareholder rating is the other thing that I'm going to consider as well. So it's a well-held company, but the promoter holding firstly stands at around 47%. That hasn't changed over the years. What has, however, changed quarter to quarter is a reduction in the institutional holding for the company and an increase in the retail holding. So perhaps based on all these parameters and the fact that the promoter holding is also less than 50% at the moment, I would give it a neutral rating and nothing more than that. What's the kind of performance that the share price has seen, Mihika?
The performance of the stock has been good. 5-year share performance, 720%. That's like an 8 times growth. And 1-year share performance has also not been too bad. It's up 36% in terms of the 1-year share performance, and it continues to do well. We've also seen some kind of uptick today. So it's a thumbs up rating on this part. The next part I want to talk about is dividends. Now, FY24 dividend payout ratio stood at 17.29 versus 19.16 in FY23. So there has been a decline, and it's actually very it's a key thing to be noted that the company's dividend payout ratio, as per data, has been declining since FY21. And around FY21 it stood at around 45. Right now, it's as of FY24, it's at 17.29. So it's a thumbs down on this parameter, because the dividend payout has been declining over the past several years. Lastly, Agam, what does the street say? What are the analyst recommendations on the counter?
Well, so Mihika, overall, when it comes to the number of buys, there's certainly a lot more. In fact, more than the holds and sells taken together. So you have about 14 buys, 4 holds and about 8 sells. But the potential upside is largely nothing at all. Practically nothing. Just about 2% uptick, which is as good as being flat. So that perhaps is the key takeaway, which also gives you an idea about whether or not this particular share price that which Tata Power is trading at is fully valued or no. This is, of course, one partial way to consider it. But for now, I would also give this a neutral rating. So if we actually do consider all the parameters that we've spoken about, so we have the income statement, we have the balance sheet check, return ratios, cash flows, even in the next set of parameters, we have the shareholding pattern, the street cred, dividend payment, and street coverage. If you total all these thumbs, well, what you will get is a score of 5 out of 8, which isn't too bad, but it certainly could be better. So that's as far as the NDTV profit for rating for Tata Power's performance so far is concerned. But let's move on and talk about the strengths, weaknesses, opportunities, and threats. Mika, I take away the strengths and weaknesses here.
Yeah, I'll start off with the strengths. It has a diverse portfolio in terms of what it does. It has transmission and distribution. It's also power generation. In terms of power generation, also there has been a diversification of portfolio from thermal to more focus on renewable energy. It also has an extensive distribution network, and this is a very significant revenue generator as well, because when you talk about power generation, the tariffs are fixed as per PPA, and the power demand keeps on being volatile. It also has a strong capacity pipeline, which provides the company with long-term visibility as it adds new capacity additions every year. And it also as well has a strong brand reputation and a proven track record of execution. So that stands good for the company. In terms of weakness, well, it has high capex requirements, which we'll get into detail a little later. But these high capex requirements is expected to keep their debt levels high, and we've seen debt levels increasing on a year-on-year basis. The power sector is also heavily regulated, so there are certain types of regulatory and environmental concerns, and they are dependent on fuel imports, which tend to be very volatile in nature. So that's where weaknesses are concerned for Tata Power. But Agam, in terms of opportunities as well as risk, how does the picture look there?
Clearly it's going to be renewables, right? And it goes without saying, because the last 5 years is where the company has been focusing on, and the opportunity in the solar rooftop, that is again something that's come through over the last 2 to 3 years, and Tata Power has continued to focus there as well. There is also potential in the pumped energy storage projects, but that is something which is being talked about this year itself, and it does seem like Tata Power has taken that baton and moved forward as well. In terms of risks, of course, there'll be delay in project execution. There is also a considerable reliance on import of coal and other fuels. That's something that will eventually come off as the portfolio pivots more to renewables, and of course intense competition in the renewable space as well. So these are something that a lot of these factors are where the Tata Power will have to grapple with. But let's take this conversation forward with an analyst here. We have Rupesh Sankhe, he's the Vice President of Research at Elara Capital, who joins us on the show. Rupesh, good afternoon. Thanks for joining in. How are you rating Tata Power at the moment? What's your view in keeping in mind the rest of the sector?
Good morning. Definitely, their plan of incurring 1.46 trillion kind of a capex for next 5 years seems to be very ambitious. No doubt, next 5 years we'll see significant capacity addition or capex on the solar cells, as well as RE capacity addition, pump hydro storage, and the projects in the Bhutan. That will have a lot of capex going ahead as versus earlier 4-5 years capex. So definitely it's a 2.5x more than what they have incurred in the last 5 years. But the thing is that here to note down that they have shown significant operating cash flow in the last 2 years, because of Section 11, the entire fuel cost pass is there on the Mundra side, as well as their solar EPC is doing good. Other verticals are doing good. So the operating cash flow is very strong to support this kind of a capex. And no doubt, the opportunity is there for all the players in the renewable space. And because of new FDRE tenders, they will get benefit of their own solar EPC, solar sales, solar modules manufacturing. So they are completely integrated players, and that advantage they will have. And once hydro storage comes in picture, I think they will be in a competitive position to gain a higher market share in the renewable energy tenders. And that is why we are very positive on the stocks, because of strong operating cash flows as well as the opportunities there in the FDRE front. So definitely, I think capex looks very, very ambitious, but they can achieve this target if they go aggressive on the FDRE front and they maintain their capex on the pump hydro storage. So overall, in terms of valuation also, stock is better as compared to other private players. So they are trading at close to 25 times PE multiple, 11 times EV/EBITDA seems to be attractive. Again, there is a value unlocking possibilities there once they start thinking on the IPO on the renewable energy side. So there is a lot of value unlocking is there. So from that perspective, I think company is well positioned, and valuation also looks attractive at this value at this current market price.
Right, Rupesh. I just want your view on risks to your thesis. So naturally, we're expecting cash flows to remain where they are right now, and that's in the the positive territory. But should there be some issues, the capex plans also come into peril. Maybe they will get a bit delayed. Besides that, there are also several other factors that could come in the way of execution of the various projects they're in. What are the risks from your end that you're anticipating or envisaging in the way you're looking at the company?
Definitely some risks are there in terms of execution. So whatever the timeline they have set up by 2030 looks very, very aggressive. There could be 1 or 2 years kind of a delay. Again, the tenders that they are for the FDRE tenders, they have to be very aggressive there. So getting winning tenders as well as keeping track on the under construction projects is going to be challenges for them. As well as in terms of entire sector, if there is a value multiple is coming down from the current level. So all these companies are trading at significantly premium to their historical average. So if that valuation comes down for the entire sector, then there is a risk in terms of value multiple de-rating also. So challenges are there, but opportunity size also very big. So they have to be on track on pump hydro storage, RE capacity addition. Otherwise, strong operating cash flow will remain there in the balance sheet only without giving growth for the entire portfolio. So those risks are there. The overall industry risk is there. In terms of evacuation, I think Ministry of Power is now coming out a lot of resolution policy changes to evacuation of RE and integration of RE. So slowing down RE tendering, going slow on the pump hydro storage, and the value de-rating for the entire sector can be risk for the company.
Okay, all right. Rupesh, thank you so much for joining us and taking us through your view on Tata Power. A very important and insightful one as well. But with that, let's talk about the growth drivers as something that Rupesh has also spoken about. Nika, in terms of the future, it's going to be largely renewable.
Yeah, the Tata Power is betting very big on renewables. You can see it in all of the forward statements that they've been making. Currently, the operational capacity is at 6.7 gigawatts, but they do have 10.1 gigawatts of renewable capacity under construction, and they have said that renewables will be 60% of their total capacity post all the projects have been completed, and they aim for 15 gigawatts and 23 gigawatts renewable capacity by FY27 and FY30. And even in terms of FY30 targets, they do estimate renewables to be over 50% of their total EBITDA and net profit. Second part is the solar business segments. The EPC order book stands over 680 crores, revenues at over 430 crores as of Q2, and the solar utility EPC segment, which is the company's own group captive projects as well as third-party projects from NTPC, NHPC, SJVN, and NLC. So the order book over there stands higher at over 15,000 crores, but most of it is the company's own power plants, and revenue stood at 1,800 crores. So the company is expecting more revenues from these segments as they execute their orders, pending orders, and get more orders in the future. But Agam, transmission and distribution is also something which is key to talk about.
Absolutely, one of the more important ones as well, even beyond generation. So when it comes to T&D specifically, we do know that they have a considerable amount of exposure to the Odisha, discoms. In fact, they own, or rather they operate a lot of those companies. And we've seen an improvement in the AT&C losses over the last few quarters. Also, in terms of pump storage and hydro power plants, that's something that a lot of companies and the entire sector has been talking about of late. Tata Power has also picked up the baton there, and in fact we're looking at an eye and construction of about 2,800 megawatts pump storage projects in 2024. So that's going to be the other big one to keep an eye on. But this is what we're watching out for as far as the company overall is concerned. And on that note, I'm going to also thank Mihika for joining us and giving us that insight into the Tata Power, its plans on the annual, as well as what it has in store. But in an exclusive conversation with, in fact, Mihika, the CEO and MD Praveer Sinha talks about what are their plans in the new plant. Listen in.
Our target is that we will have 10 to 11 megawatt of module production every day, and similarly in our cell also similar range. We should have about 97% of yield from these plants, and efficiency of the cell should be in the range of 23%. So I think we are very close to these targets. Our module today is producing around 11. Our cell plant, we have started the first 2 gigawatt, is already producing 4 megawatt per day, and it will get ramped up to 5 in next few days. Similarly, the second 2 gigawatt was commissioned in this week, and we expect that by end of the month it will reach a capacity of 5 megawatt. So I think we are doing very good. This is one of the fastest ramp up that has happened, and this is because we have a operating plant in Bangalore where we produce both cell and module, and that has helped us to achieve these levels.
Solar rooftop is also something that the company has a big market share, 13% right now. What's your outlook? How do you expect your order book to grow in this segment specifically?
So we are the biggest in the rooftop solar. We have more than 600 channel partners, and we had a revenue of nearly 1700 crores last year. We expect to have a very large revenue this year and cross 10,000 crores by 2030. We are working very closely with our channel partners. The whole ecosystem of supply chain has been done, and also we are now working closely with the government, especially under the PM Surya Ghar scheme. The government has plans of doing 1 crore homes. We'll do about 30 lakh homes, especially in 4 states of Assam, Rajasthan, UP and Odisha. And we are working with all the state governments on all this.
The company also has extensive capex plans all the way till 2030. How will this capex allocation be tilted towards? And in terms of funding, do we expect debt levels to stay around the same range, or can we see an uptick going forward?
So we'll have about 25,000 of capex every year. We expect 50% will be towards renewable and balance between transmission, distribution and existing generation, especially in our hydro and pumped hydro projects. We expect that over a period of time we will have an increase in debt, but all the financial metrics will be very good, and we will be able to cater to it through a large amount of internal accruals that will happen.
Lastly, the question is on hydropower. You even have projects starting in Bhutan. Could you give us more details on what projects you expect to be started and how the hydropower segment of Tata Power will grow going forward?
So we first of all, the pumped hydro project will start by January. This is 1,000 megawatt in Lonavala, Bhipuri. The second 1,800 megawatt pumped hydro should start mid of next year. That's in Shirota. The Bhutan project, the 600 megawatt Dorjiling project, again already work has started, and the tunnel diversion work has started in the month of October. And we expect that the full-fledged work will start in next 2-3 months. Similarly, there is a Dorjiling project of 1125. We are looking to speed up work on that also. Hopefully by next year we'll be able to start. So these are some of the hydro projects. There are of course in pipeline many more projects, and we'll definitely look at executing.
Thank you so much, sir.
Right, that's the management of Tata Power telling us about the improving fundamentals and very ambitious capex plans, especially when it comes to the renewable space. But that is all that we have in terms of the time for this edition of KYC. Lots more lined up on the other side. Stay tuned to NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hello and welcome to Hot Money. A very good afternoon to all the viewers. I'm Hiral Datia and with me is Anushi Vakaria. Anushi, good afternoon.
Hey, good afternoon.
Clearly, markets, if you see from the day's low, we've given up those numbers. We are off day's low and already trading in the green as we speak. Let's quickly pull up Nifty 50. Again, pretty much on the borderline, 24,674 is where Nifty 50 is trading at. If you pull up the Sensex as well, that's an interesting one to watch out for in today's session. Bank Nifty, there you go, you have the Sensex which is in the green. Bank Nifty, IT, FMCG and auto, these are a few of the sectors that are in focus. Bank Nifty seeing gains of 0.3%, IT index trading lower. You have FMCG and auto stocks which are down in trade as well. If you see in terms of the large cap names, around 32 declines versus 18 advances is what we are seeing in terms of Nifty 50. But from a sectoral perspective as well, okay, we're just on the Nifty contributors now. HDFC Bank, the top gainer, followed by L&T, Kotak Mahindra Bank and Bharti. However, on the losing end, you have names like HUL, Infosys, Axis Bank, Tata Consumers. These are the ones which are putting pressure. Let's just quickly pull up the sectoral heat map as well to understand what's happening in terms of individual sectors. The mid-cap index seeing some gains. We'll go to Anushi to get us more details on it. But infra is trading in the positive. You have consumer durables, real estate, private banks are up and about. Losing, FMCG, media, metals. You have the Pharma pack also, which is trading under pressure. So clearly, you know, there is some bit of outperformance, Anushi, that's coming in from with regards to broader markets as compared to benchmarks.
Absolutely, Hiral. So it's another day where we are looking at the broader markets outpacing the benchmark indices. So if you look at both the mid cap and the small cap indices, small cap is gaining more than mid cap as well. If you look at the mid cap indices, we have stocks like Kalyan Jewellers, Sundaram Finance, Lloyd's Metal seeing about 4 to 5% of gains. Lloyd Metal again in focus on the back of the Incred equity notes, wherein they've given a 40% upside, which we'll be discussing later on the show today. Even other stocks like Delivery, KPIT Tech, about 4% of gains that we are seeing. However, what is pulling, what are the losers or rather the laggards in this are also Marico, which is about 4.7% down. Star Health, 5% down. This is after the insurance company. There was some inspection taking place from IRDAI. Laurus Labs, Syngene International, both down on account of what is happening in the pharma space today. And even a Colgate, 3% of losses we are seeing. Coming to the small cap, now this is about 0.45% up in trade today. Some of the stocks which are pulling up the indices are CAD. This is on the back of the big acquisition that the company has made. So it's in focus. ITI, Trident, Anand Rathi, another set of names that we are seeing about 6 to 12% of gains. And HEG, this is like a consecutive sessions which we are seeing HEG gaining in trade. Even Angel One is about 6% up. You know what is interesting here is mid cap 150 and small cap 250. It's been 11 sessions that they have closed in green, and today if it closes in green, it's set to be the 12th. So last time you've seen this 11 session streak was in April 24. So this is what we are seeing in the broader markets.
Absolutely. So clear outperformance that's coming in with regards to broader markets. But let's quickly shift focus to the key themes for the day. One, you have the stake sales which are on the radar in today's session. Moving to number two, we'll be talking about acquisitions that are happening to boost growth. Order wins are aplenty for India Inc. as well. That's the key theme on number three that we're looking at. On number four, you have US Biosecure Act that has been dropped. We'll talk about who stands to lose in India. And from the Pharma pack, you have US FDA alerts for pharma companies. Moving on to number six, the sale of Beximo units. Which are the companies that will benefit in India? We're talking about all the textile units here. And on number seven, you have the top brokerage calls, GCPL, Adani Group and Lloyd Metals. That is what is in focus in terms of the themes. However, shifting focus to the Adani Group, they aim to invest around 7.5 lakh crore rupees in Rajasthan over the next 5 years. Now, this will be across various sectors, said Karan Adani, MD of Adani Ports and SEZ, while speaking at the Rising Rajasthan Global Investor Summit 2024. Let's listen in.
The Adani Group plans to invest over rupees 7.5 lakh crores across various sectors of the state economy, with over 50% of this investment being made over the next 5 years. Let me elaborate. We plan to build the world's biggest integrated green energy ecosystem involving 100 gigawatts of renewable energy, 2 million tons of hydrogen and 1.8 gigawatts of pump hydro storage. These investments will turn Rajasthan into an oasis of green jobs. Beyond energy, Rajasthan is critical to our ambition to become India's largest cement company. We will set up 4 new cement plants to build additional capacity of 6 million tons per annum in the state. In addition, there are other investment plans such as developing a world-class facility at Jaipur Airport, multimodal logistics parks and ICDs that will support your transformative plan for Rajasthan.
Let's listen to Prime Minister Modi, also who was present at the summit. He said FDI has also doubled, infra outlay has grown 5 times. To listen into that as well.
भारत का यूपीआई, भारत का बेनिफिट ट्रांसफर स्कीम सिस्टम, जेम, गवर्नमेंट ई मार्केट प्लेस, ओएनडीसी, ओपन नेटवर्क फॉर डिजिटल कॉमर्स, ऐसे कितने ही प्लेटफॉर्म हैं जो डिजिटल इकोसिस्टम की ताकत को दिखाते हैं। इसका बहुत बड़ा लाभ और बहुत बड़ा प्रभाव हम यहां राजस्थान में भी देखने जा रहे हैं। मेरा हमेशा से विश्वास रहा है, राज्य के विकास से देश का विकास। जब राजस्थान विकास की नई ऊंचाई पर पहुंचेगा तो देश को भी नई ऊंचाई मिलेगी। साथियों, क्षेत्रफल के हिसाब से राजस्थान भारत का सबसे बड़ा राज्य है और राजस्थान के लोगों का दिल भी उतना ही बड़ा है।
Looking at Rajasthan to lead India's growth story is what Prime Minister Narendra Modi is pointing out to. But moving on, in terms of the first key theme that we have been talking about, let's look at Paytm. It's one of the part of the acquisition themes, and we've seen a surge of almost 3 times from its Feb lows. Now, after a tepid listing in November 2021, the company has actually seen it dipped, it actually corrected quite a bit. Now, recently, Paytm Singapore arm is close to finalizing a $250 million deal to sell its stake in Japan's digital payments firm PayPay Corporation. Now, will this aid the stock? What's the next for the company? Harsh joins in with a deep dive. Harsh, what would it mean for a Paytm from what we've already seen so far?
Well, thanks for that, Hiral. We'll start right from the top, the journey itself. Paytm listed November 2021. It was a tepid listing, around 18,300 crore in terms of fundraise. 10,000 crore of that was an OFS. 1.5 lakh crore was the valuation at which they were doing this. And they, of course, a softer listing. Share price was 2150. It's never reached 2150 all the way up until now. So it's been 3 years. We've not reached that number yet. But the stock is 3x up from its 52-week low, which was in February of this year. So it's given solid returns for those who have entered at a decent price. Also, it's currently sitting at half the IPO price. What does Paytm do? And this is going to hold the key. First off, we'll try to break down the business itself. It manages payments for merchants as well as customers. So outside of that, it cross-sells loans, wealth, as well as insurance products to its customers. And it also sells or monetizes products on its existing platform, products like credit cards. That's what it actually sells on its platform. What exactly and how exactly does it operate? First, it acquires individual customers, especially now on UPI that they've had payment the wallet related issues, and therefore they acquire on UPI first. They also acquire merchant customers. Payment innovations that they've done is something like a sound box. When you go to a Kirana store, largely you'll hear a sound box helping the vendor, trying to understand as to how much of a payment you've made to the vendor, and that kind of helps. And then they cross-sell higher margin services to both merchants as well as individual customers, and that kind of helps Paytm really generate revenue as well as profit. This is where a bulk of the revenue actually comes from. Financial services. Well, the current revenue stands at 3160 crore. This is H1 FY25 numbers, mind you, and it's difficult to take trailing 12 months because the bases are very different given all the regulatory issues which are coming through. 3160 crore is the current revenue at H1. Payments and financial services comprises 78% of the revenue. No surprise. 22% comes from cloud services. Revenue has actually fallen 35%. No surprise there either. The number of loans they've disbursed has fallen 60% year on year. 60% plus in fact. 65% nearly. And therefore you're seeing that knock on revenue. But regulatory action is where the problem is with regard to why revenue has come down. RBI has pulled up Paytm Payments Bank. The payments business has been ceding market share. That's the other problem. From 11% last year, market share is currently at 6%. Customer acquisition has been impacted and disbursements of loans have been lower. As I did mention, 60% lower in terms of loan growth on the Paytm platform, and that's leading the numbers lower. But is the worst over? Are we now starting to look at a turnaround of sorts? Regulatory action has started to ease, so that's one positive, and that will aid business hopefully going forward as well. That's the hope. Paytm also will lend from its own balance sheet, which is higher, which is more profitable. Therefore, also you have Paytm selling some of its non-core assets to generate more cash, currently sitting on a cash of 12,500 crore, likely at the end of Q3. I'm also factoring in the 2,500 crore which they've sold PayPay for. That's their 5.4% stake in PayPay Corporation Japan. And that will likely aid the cash surplus in the company as well. Large because Paytm's market cap itself is 62,500 crore. Therefore, the cash is huge. Now, in terms of what next, right? How should one look at this in terms of valuations? The valuation picture is very interesting. You've seen it surge 3x, but the current market cap 62,000 crore. At the end of Q2 FY25 had cash of around 10,000 crore and has divested from PayPay as well. How does Bernstein look at the numbers? And we'll just look at one brokerage. FY27, 10,000 crore in terms of top line is their expectation. 20,000 crore in FY30. So that will change dramatically. And FY30 EPS is expected to be at 72.3 rupees. That's the base case which Bernstein is expecting. On the bull case side, it's double that. So if this were to play out, it could be a very strong case. What are the catalysts which will drive the stock price higher? First off, with regard to margins, see how the margins have gone up. Post-regulatory action, look at the hit that margins have taken. This is adjusted EBITDA margin, mind you. And thereafter, we're starting to see a recovery. Can this recovery sustain is really the question which most analysts will ask. Second is the payment aggregator license. This will aid them to onboard more merchants, which will obviously help the business. Improvement in net payment charges. Well, currently, on your net payment margins, you will have a cap with regard to how much you can charge. If that starts to ease, the net payment margin could well improve. This is point number 3. The net payment margin, if it surges along with a surge in market share, both of those could really aid the numbers overall. You also have the resumption of BNPL loans, which has been a bit of a dampener. That could drive both the revenue as well as the profit number. OPEX has been a concern for them, ESOP costs included. ESOP will come off quite sharply over the next few quarters. And of course, they've guided for a tempered OPEX growth. Last off, just with regard to risks, further regulatory action could well pull down the company further. Slowdown in loan disbursement business could also impact numbers. Headwinds in the payment segment could also impact numbers. Slowdown in especially consumer credit. That segment is a key for Paytm, and any slowdown there could impact loan growth and therefore impact the numbers overall. Last off, they're going to lend from their balance sheet. Higher credit costs could well impact the numbers. So keep your eye out on some of these factors.
Right, so that's with regards to where Paytm goes. Thanks, Harsh, for getting us the details. It's interesting to see, that there are a few factors that could aid as well, but a lot of risks associated to it as well. We will get in a guest. But Anushi, Inox Green is another one which is in focus as well. What's happening with the Inox Green?
So Hiran, another stock where we are seeing some kind of restructuring is Inox Green. They've entered into a share purchase agreement as part of its business restructuring. Now the company is looking to sell about entire capital of 2 subsidiaries. This is to Alionto Wind Energy Private Limited. The subsidiaries being sold here are Flurry Wind Energy and Flurry Wind Energy. So if you look at what the stock is doing currently, it's about 2% up. So positively the stock is looking at. But let's go across to our guest for today who's joining us to give insights on these picks that we have. Sharmila Joshi from sharmilajoshi.com joins us. Sharmila, before we talk about Inox Green, first we want to address the Paytm. Big announcement there. Harsh just was breaking down about what could be the possible headwinds and the tailwinds that we should be looking out for the business's future. So can you give us a perspective on how you are viewing Paytm?
So as you all were discussing a little while earlier, Paytm has been very interesting ever since it listed. I think it's a classic case, first of how not to do things and then how to really do things. So obviously, I think just to retrace the history, you did see we had that whole mood at that time, and everybody was sort of not really looking at valuations when they had their IPOs, etc. And then we've seen the aftermath of that play out as well. So I think that would always be my first point, that you should never really lose the sight of valuations when you look to invest in a company. And then, of course, it got hit by that whole regulatory impact, and that kind of dragged the stock price lower. But the good news is that the numbers are beginning to look better. So I think going ahead, and we've had this stake sale, etc. So to just make my point, I feel that really speaking, going forward, they have things in place now. The blocks are there. They can build on the business. Market confidence is back in the company. People are viewing these kind of businesses very favorably once again. So now the key will be, key thing to look out for in terms of if things going wrong would be if there were any more regulatory concerns. As of now, they seem to be sort of in control, and they seem to have managed that situation. So I would think there is an upside from the current price. My upside would be, in the range of 20 to 30%, which is still lower than their IPO price, but an upside nonetheless from the current price. So I think that's the key thing to look for, because things seem to be working for Paytm, but the regulatory sort of, if anything changes there, that's what we need to keep track of.
Right, so that's what we need to keep track on in terms of Paytm. Sharmila, a quick one in terms of Inox Green. The stock has already doubled in the last 1 year. Almost 2.8 times is the kind of returns it has got since listing. How would you look at it in terms of the news that has come in, and what would you advise an investor to do?
Here the valuations look high to me, and I think we're just tying back to what I was saying earlier. That's both, I think, Inox Green and Paytm. They belong to sectors which investors do like. I mean, green energy, green anything is the sort of magic buzzword, and everything that is related to that is making news and seeing investment. But I think that you need to keep valuations also somewhere in the picture always. And here I feel the valuations are now a little high at this price. So if you have it, obviously keep it, because valuation may not be the best parameter to judge this sort of sector by, because this is at the end of the day things are changing very fast even for this sector on the ground. But I would really stay away from buying fresh.
Okay, high valuations is what we are looking for Inox Green, and definitely not something that Shamilia is watching out for. But let's go to our second theme for the day, which is acquisitions. We have a couple of acquisitions in focus, but the big story for today is CEAT Limited. This was in focus over the weekend. CEAT announced that they've entered into a definitive agreement with French tire maker Michelin to acquire its Camso brands of highway tires and tracking business for $225 million. Let's go to Puneet for more and understand this.
Well, thanks for that. It's a very big acquisition coming in the tire space where, the acquisitions have been lean over the last few years. So definitely something to talk about. Stocks also reacting very positively as well. So as you rightly said, CEAT has acquired Camso, which is an off-highway tire specifically, a segment that's very low contributing in terms of revenue currently for CEAT. This is also, they've also acquired the tracks business as well from someone like Michigan. There are three key things you need to know about this transaction. Of course, acquired for roughly about 225 million. Camso specifically is a premium brand in the construction equipment tire space, which is a space which is not very dominated by CEAT currently, just single digit in terms of revenue. The other aspect is that including the business of the company, they did about $213 million of revenue in the previous fiscal year of 2023. That's what they mentioned in the press release as well. They've also said that the brand will currently be assigned to us, on a licensing agreement for the next 3 years, and post that CEAT can start using it. That's what the update is. Now, the benefit of the acquisition that the company has mentioned that it will give CEAT a widened product portfolio in terms of off-highway tires, as you mentioned, because they don't have contribution there. Apart from that, it will also give CEAT access to 40 new international OEM clients that Camso already has, plus another 2 manufacturing plants which the company has in Sri Lanka. So a newer geography as well as higher client exposure. In terms of transaction, Michelin had actually acquired Camso in a larger deal of roughly about $1.3 billion back in 2018, and this off-highway tire segment is something that they've sold in. So it's just a part of the transaction that's been sold to someone like a CEAT. That's in line with Michelin's 2030 strategy as well. Finally, MK had written a positive note on the company. They have a target price of 3,650, a decent upside from the current levels as well. And they mentioned that this acquisition will increase CEAT's exposure in terms of revenue in the off-highway tire space by essentially doubling it to 30% going forward. They've also mentioned that the enhanced capability will increase the margins, because currently CEAT's margins are around 14%. And it's expected that the new business they've acquired is somewhere around 20 to 23%. So overall, it's a positive news flow as well as on a business side for someone like a CEAT. Valuations are also in tame, but because of natural rubber prices as well as other factors with slowdown in Europe, the stock has been averaged over the last 6 to 12 months. So watch out for this stock on this positive news flow, as well as going forward how the company can integrate this transaction.
Thanks, Puneet, for getting us the details. In fact, we did speak to the management as well. Let's quickly listen in.
We expect another 6 months for the transaction to get completed. There are regulatory approvals, and we also have some schedule that we have agreed with Michelin for payments. So overall, we also, that we incur about 1,000 crores of capex every year. Considering, funding is fungible, both for capital expenditure and also acquisitions like this. We do not expect more than 70% of this amount at an overall level, including even the capex that we would continue to incur in the future, to be our debt, and balance 30% would get funded through internal accruals. Look, if you really look at our first half, we are happy with the way we have grown top line. And we have grown by about 8.5% in the first 6 months versus the same period of last year. Our internal plan is to deliver double-digit growth, which means that we have to grow higher in the second half of the current financial year.
Well, that was the management of CEAT Limited. Speaking about the business acquisition which has taken place, Sharmila, what are your views on this acquisition? It's a fairly big one and a positive response. That is what we are seeing from the investors today. The stock is the top mover in the small cap 250 space. What are your views on this?
Oh, great. I mean, it's a very good development, I think. As you all were discussing a little while earlier, very interesting. For two reasons. One is, we've not really, the tire space has sort of been a neglected space, so to speak, over the last year and a half. There is nothing really not much exciting things happening there. And I think, again, if you look at that market, everybody is sort of positioned in their own verticals very nicely. So it's sort of business as usual for them. And then, you have this sort of news coming in. And what I like about this piece of news is that the market that they're entering is a new market for them. And that off-highway market is something where I see good growth going ahead. So net-net, I think very good news for CEAT. And I think it will definitely add to their top line. Overall, I'm positive on autos as a sector and therefore auto ancillaries. So in any case, I was positive on most of the tire stocks, and I think this just makes me more positive on CEAT as a stock. And I think that though the stock has run up today, I think there is a further upside in the stock.
Further upside in terms of CEAT, because that's going to be an interesting one. After 11% upside, Sharmila still prefers buying at current level. Sharmila, added to this a couple of other acquisitions that have happened. You have Krishna Diagnostics as well, where they're, the arm which is Krishna Retail has gone ahead and acquired 10% stake in SPB with Apulki Healthcare. And they have an obligation to increase it to 26% in future. The stock is pretty much on the borderline right now. The other one that you have is a Suven Pharma, where they are acquiring 56% stake in NJ Bio. They will invest around $64.4 million in the company, and this has been done via primary infusion, and it's a secondary acquisition as well. The deal is valued at a low to mid-teen EV in terms of calendar year 25 EBITDA, and expected to be EPS accretive in the next 2 years. The other one that we have is Ease My Trip. They've also entered into a definitive pact with Pledge Home Healthcare Center and Jivani Hospitality. And in addition to that, they've approved around issuance of around 12.8 crore shares, totaling to 234 odd crores on the preferential basis. All of these acquisitions that are in focus as well. Any topics and any views on these three stocks?
Well, I think out of the three discussed, probably the stock that I like best is Krishna Diagnostics. Again, a space that I like. I think we have seen the diagnostic space again not really go anywhere over the last couple of years, given the kind of price war sort of situation that you saw with big players entering the market. But I think that going forward, once sort of valuation settle down, there is lots that will happen in this sector going ahead, and the market size is also going to increase. So the valuations of the stock are of course high at this point in time, so probably not a buy. But out of these three stocks, I think this is the stock that I prefer the best.
Okay, so that's the view on Krishna Diagnostics, a stock wherein Sharmila is positive on. But let's talk about what's happening. The third theme for the day is order wins. A whole host of companies have received orders. We have a couple of them in focus. First of all, Welspun Corporation, they've received 2 additional orders in USA, a big orders that we are looking at, which have taken their year-to-date orders to about 7,000 crore. And these would be executed during FY25 and FY26. This pertains to supply of coated pipes for natural gas pipeline projects. Other than that, we have roto pumps. This stock is gaining in trade today. This is after Roto-Rudra, its arm, has secured over 400 global and domestic orders for solar pumping solutions, and these orders are across Australia, South Africa and India, supporting the agriculture, irrigation and renewable energy initiatives. Third one is RITES. This one is definitely in focus. In the last few sessions, we've seen a couple of order wins coming in from this side. They've emerged as the highest bidder for the Creek Highway order from Guyana government. Order is for the size of $9.7 million, which roughly translates to about 82 crores. And the execution period for this is about 5 years. And the last one on the list is GSW Energy. Now, the unit GSW New Energy has received a letter of award from NTPC, wherein the company will be setting up 400 megawatt of solar power project. Now, company's total locked-in general capacity with this increases to 10.6 gigawatt, out of which 4.4 gigawatt is in the solar projects as we speak. So, Sharmila, let me come across to you. A lot of names that we've mentioned, or these order wins that have taken, any one of which are in, which you prefer in these, whether it be Welspun Corp, Roto Pumps, RITES or GSW Energy?
Well, honestly, all look good to me. But if I had to pick, I think probably GSW Energy is a stock that I like. Then I think that it would be RITES. But overall, I think that the kind of order wins that these companies have got, as well as the sectors they are in, as well as the valuations they are at, make all four stocks interesting. But from, as I said, my personal preference would be for JSW Energy, because once again, you're talking of solar energy, and overall, if you look at the book of the company and the kind of performance that they have had over the last couple of years, this is a stock that I like. And then I think REITs, because once again, strong sector and order wins is always a good thing. So those would be the two stocks that I would go with.
With regards to order wins, JSW Energy is one of the stocks that Sharmila prefers. But staying with order wins, we did speak to the CEO of Kernex, that is E.B. Rao, on the back of an order win as well. Let's quickly listen into what he had to say.
This order is really big one, and execution is a real challenge. Yes, we are ready for this since long time, and we have well planned for it. As a first step, we have increased the production capacity. Initially, our production capacity per year was 1,200 units. At present, it is 5,500 units per year.
5,500 units per year is the capacity that Kernex is sitting on. But let's quickly slip into a short break. On the other side, more themes that we will be talking about specifically with regards to where the pharma space is concerned. Please stay tuned to Hot Money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news.
Hello and welcome back to NDTV Profit. You're watching Hot Money. Now, our next theme for today is pharma companies. A big setback we are seeing in Indian CDMO players is 5-year Chinese-linked biotechnology firms win a reprieve after negotiators decide not to include legislation blacklisting these Chinese companies from new federally funded research and contracts. Varsha joins in with more details on which CDMO companies would be affected and what can we be seeing on this new development.
Well, thanks Anushi for that. So if you see in last 2 to 3 months, Indian CDMO companies have done very well. The stock returns, if you see, have been 20 to 30% for DBs, for Suven Pharma, then for Laurus Lab in last 2 to 3 months. And one of the reasons was US Biosecure Act, which was supposed to ban 5 Chinese companies, and the impact would have been positive for Indian CDMO companies. But now the Biosecure Act has been removed from a key defense bill. Now the targeted companies, the 5 Chinese companies included BGI Genomics, Wuxi Aptar and Wuxi Biologics. Now on the first place, why was the act proposed? Now, the supporters argued that it was needed to stop China from misusing biological data for harmful purposes. Now, but why was the act dropped? Now, the lawmakers objected to blacklisting companies without a fair process, and they wanted clear rules for adding or removing such companies from the list. Now, if you see the impact of dropping this act, the act is now harder to pass, but does that mean that it will not be passed? Well, that is unclear, because supporters may try, to attach it to the other critical bills later as well. Now, if you see the potential impact for the Indians, for the Indian companies, the dropping of this could indirectly affect Indian companies like Divi's, Laurus Lab, Piramal Pharma, Syngene International that we are seeing. Why? Because all these companies were pegging on US Biosecure Act, at least for the short term. But for the longer term view, if you see, if in spite of the US Biosecure Act, US companies are actually eyeing for China +1 opportunities, and Indian companies are best when it comes to Indian CDMO companies are best when it comes to CDMO opportunities that US companies are seeing. So I think this is the short-term phenomena that market has been pegging in. For long-term, yes, the opportunity still exists for the Indian companies.
Well, thanks for that, Varsha. A couple of names that are in focus on the back of this development are Divi's Laboratories, Laurus Labs, Syngene International, Newland Labs, Suede Pharma, as Varsha pointed out. Sharmila, I want to come to you on this. A lot of these pharma plays in focus. This is after this development which has happened. What do you read about this development, and how do you view this?
So I think, you all pretty much discussed that. What I'm trying to say is that if you were to invest in these companies only because of this news, then, that's not been a great strategy. But if you were to invest in any of these stocks, given the fact that you like CDMO as a space, and I do like CDMO as a space, then, obviously you should stay invested. Because irrespective of whether this act goes through or not, I do think that the China +1 factor, we are seeing a lot of these companies sort of inching up slowly and getting smaller orders to start with, etc. My favorites from the list that you mentioned would be Syngene and Divi's. But that said, as I said, as we were discussing, while a lot, the whole thought behind this act and everything that sounds a lot like science fiction, but the fact is that now it looks like it's going to get dropped, and if that's the only reason you bought these stocks, then it's not great news for you. But I do think that CDMO is a good play for India going ahead.
CDMO not a good space for India going ahead, and that's an interesting word coming in from Sharmila. Sharmila, staying with the pharma space, you have Bajaj Healthcare also that is in focus today on the back of the approval that it has received. Varsha is with me to get us more. Varsha, the stock is up 3.5%. How big a news is this, and how will it benefit Bajaj?
Well, Hiral, their API manufacturing site in Gujarat has received approval from Australia's regulator. Now, the site is already approved by US FDA and EU. Now, this Australia approval supports companies' goal of becoming global API supplier, and now it allows direct supplies to Australia and New Zealand and to global drug manufacturers as well. Now, companies is expecting a more CDMO contract following this recognition. So yeah, good uptake when it comes to Bajaj Healthcare.
Right, so that's with regards to Bajaj Healthcare. Sharmila, how are you looking at a Bajaj Healthcare? What's your view with the approval that has come in?
So very honestly, this is not a stock that I've studied, and from the valuations, I would think that I'd be neutral at this stage.
Right, a neutral view coming in with regards to where Bajaj Healthcare goes. But moving on, another theme that we are looking at in today's session is with regards to textile companies. You have Bangladesh, who's looking to sell units of Beximco. Now, Beximo, let's head across to Mahima for more. Mahima, what are the details that you have?
Right, Hiral. So this is a big positive coming in for textile companies and textile exporters in India specifically. Now, Beximco, the Bangladesh government has decided to sell or lease units of Beximco Group as a whole. Beximco Group basically is the largest private sector group present in Bangladesh, and it is into retail space. The Beximco Group is facing severe liquidity crisis, and out of 169 companies that it currently holds under the entire group, it might sell off off or lease off around 32 companies of these, and out of these 32 companies, 16 companies are into garmenting and textile units. Now this is a big advantage for Indian garment makers as well as Indian textile exporters, and these include big names like KPR Mills, Urban Fashion, Gokuldas Exports, Pearl Global and SP Apparels. So which is why we are also seeing big moves on the some of the textile names in trade as well today.
Right, so that's with regards to all the textile units. Interesting moves coming in on these names. Sharmila, good time to invest in textile names, and which would be your topics?
So the news is of course interesting because as you all were discussing, it will mean for anybody who's of sort of export facing, it would mean good news. But you know, the stock that I do like within this list is Gokuldas Exports, and the valuations there look a little high at this point in time for a fresh investment. But yes, I think that if any of these companies were to get some bit of this, then it would mean good news for them going ahead.
All right, well, that's a view on the textile space. But another space we will focus on is the Adani Group. Nomura is positive on the Adani Group. Harsh joins us to tell us why Nomura is positive on Adani Group and what does it mean.
Well, strong words used, Anushi, with regard to where Adani Group is concerned. And what Nomura is saying is it's the most attractive investment grade corporate currently. Why is that so? Let's try and, unpack this a little bit. One, they believe that financially, in terms of both fundamentals as well as asset quality, the group is quite sound in that sense. The group debt leverage, according to them, and we're quoting them here, is manageable. Second, they believe that within the Indian corporate landscape, with regard to investment grade corporates, the larger landscape looks expensive versus the Adani Group, and therefore they are constructive on the Adani Group. Third one, compared to earlier, the group's liquidity management awareness has improved meaningfully, and that they believe is a sea change versus the past, and that of course changes their position with regard to how they view the group. Fourth, global banks, they believe, might halt new financing. But even if they do, what they are saying is, if the new financing is halted, it is going to be short term in nature, and gradually it will resume in terms of financing. Even global banks will resume financing. More importantly, the Japanese banks, the big three Japanese banks, continue their relationship with the Adani Group, and that they've marked out and said is an important metric to look out for. Fifth one, indictment will not breach any anti-corruption covenants within lender agreements, and therefore the event of default clause in a lot of these agreements will not get triggered. And that has been reported by media outlets, and they believe that there is enough comfort that they will not get triggered. Last off, they're not worried about the promoter share pledge, and that they believe is again a change versus the past, and they believe the steep volatility in the stocks therefore should not impact the group as a whole.
Well, thanks for that, Harsh. That was quite a breakdown that we've seen from Nomura on several of their aspects that we'll be covering. Sharmila, let me come to you. So Harsh spoke about share pledge, more liquidity for the Adani Group. What does this mean for the business, for the group going forward? Do note standard disclosures that the channel that you're watching is part of the Adani Group. So, but coming back to the Adani Group, what are your views on this?
So, I think we've discussed this earlier, I think closer to the time when you had that indictment coming out. And I think that I think one of the points made in the report was that even if that funding being an issue could be a sort of a short-term problem, and I do agree with that, because there are a lot of I think the only thing that market doesn't like is uncertainty, and which is why we saw that sort of knee-jerk reaction when the news came out. But I think nothing really changes. So if there is a stock which you like within the many listed companies they have, then you have to look at it as any other. I mean, the way I look at it is I have to look at it as any other stock and look at the valuations that it's at, and then take my decision. So maybe use the correction that you see as an entry opportunity in some stocks. But by and large, I think that while I wouldn't completely agree with the sort of thesis that you should be unworried, because you have to keep a track of news flow. But having said that, I think that we are back to sort of evaluating these companies on a individual and a sort of a valuation perspective, and then taking a call from there. So whether it is an Adani enterprise or whether it is their green energy ports, these are businesses that one would continue to like.
Yeah, right. So that's with regards to Adani group of companies. But shifting focus, another stock that is actually bearing the brunt today is a FMCG company, that's Godrej Consumer. Clearly, they've come out and said that they expect challenges in demand and in terms of margins in the near term. And the standalone business is expected to report flattish underlying volume growth. My colleague Mahima is with us to discuss more. Mahima, with the commentary that is coming in from the management, the stock has been trading under pressure, and that's having a counter impact on the other FMCG players as well. What would this mean going ahead?
Absolutely, Hiral. So the management commentary coming in with a mid-quarter update does not look very pleasing. The management has said that it sees disruption to keep business stress for the next few months going forward. 2/3 of the India business is being impacted. The India revenue will see a mid-single-digit value growth and a flat volume growth in the next few quarters, and India EBITDA to decline by high teens in Q3 on high base as well as the raw material pressures. Now, EBITDA margins will be below the normative range of 24 to 27%. And soap portfolio, which is 1/3 of their total revenues, is facing headwinds from inflationary palm oil prices, and household insecticides is being affected, which is again another 1/3 part of their total India revenues is affected due to delayed winter as well as the cyclone in southern India. Now, brokerages have a mixed view on this commentary coming in. MK has downgraded to reduce from add with a target price of 1,225. It has cut earning estimates by 4 to 7% considering the demand as well as the inflationary stress. They see a low single-digit consolidated revenue growth and a low double-digit decline in EBITDA. And what they're saying is that the margins will be around 23%, which will be lower from a higher base of 29.7%, which has been seen in the past. Now, Citi, on the other hand, has maintained buy with a target price of 1,550, and they believe that the long-term structural growth driver remains intact. They're saying that the continued growth momentum in the new categories India is something that will augur growth for the company. But they're also saying that the soap business will see a mid to high single-digit volume decline, and household insecticides will see a low single-digit volume decline as well. But overall, what they're saying is that overall standalone business will see around mid-single-digit revenue growth in Q3. So this is the overall picture of how the mid-quarter has impacted the stock performance of Godrej as well as some of the other counters which are also highly penetrated in terms of the use of palm oil as well as are seeing demand pressure overall.
Right, so pressure continues with regards to FMCG companies. In fact, a whole host of other names also which are seeing pressure today because of this. Marico is under pressure, Tata Consumers, Colgate, HUL, Dabur, Nestle, all of them down and about in trade. Sharmila, how would you look at this pack? Because valuations forever have remained expensive. I mean, that's not a debate that anyone can have. And with that, you are seeing pressure not only on the back of raw material prices, but demand and volume growth is also a concern. What would you advise?
So I think really speaking, the sector, as you were just discussing, everything is down. I think it is reacting to much more than just the prices of palm oil. I think for the last couple of months, the market has been sort of grappling with this issue that somewhere consumption seems to have slowed down. And we were sort of getting a lot of signals from rural markets that the volume growth was not coming from the rural markets as what we had expected. And I think, when the two-wheeler data came out, I was a little more sort of positive, because if two-wheeler data improves and that improvement is coming from rural India, then festival as well as good monsoon seems to be having an impact. But this kind of commentary sort of put that whole theory under question mark again. And if you're sort of expecting flattish volumes over the next couple of quarters, and when you look at it in the perspective that yesterday we didn't get a rate cut, your sort of how things will pan out over the next couple of quarters is under a question mark. And to add to that, as you said, valuations were always tad on the higher side. So I think this kind of a correction is was on the cards on the back of this news. And while I am positive on the sector in the longer run, there are stocks within that list which I like. I like a Tata Consumer, I like a Dabur, I do like a Godrej Consumer also, in fact. But it's market is very clearly telling you that things are not going to look for the next couple of quarters, and it's a view that I agree with.
Okay, so near-term pressure persists for the FMCG sector, while the long-term story remains positive, with Sharmila's picks being in Tata Consumers and others. But another stock in focus is Lloyds Metals. This is after Incred Equities initiated an ad rating for on the stock. Let's go to Mihika to understand more on what the brokerage note said.
Thank you for that, Anushi. So yes, we have Incred Equity, which is initiated coverage on Lloyds Metal and Energy with an ad rating, target price of 1,476 rupees, which suggests a 40% upside to yesterday's previous close. It says that the company is a direct beneficiary of the rising iron ore prices, and it projects a 76% earnings per share compounded annual growth rate over FY24 to FY27. Now, the company's mine extension till 2025 and forward integration plans also will help drive EPS. We also have an Aquarius note. It's restated its long rating with a 1,200 target price. It's said that the company is expected to be India's lowest cost steel producer by FY30, and it could potentially serve as a toll operator for other miners as new blocks get auctioned by the government of India. A key growth driver is the 45 million ton per annum beneficiation plant, which the company plans to process in 3 phases. First phase to start in FY27. They also expect the company to sustain and improve its profitability ahead, and the cost savings from the slurry pipeline will help reduce overall costs of the company by 250 to 300 rupees per ton. And lastly, they expect a 59% EBITDA compounded annual growth rate over FY24 to FY27.
Okay, right. Rising iron ore prices along with what we are seeing for the industry deficit of what we are looking for iron ores, and 76% of EPS CAGR, that is what is being said in the Incred note. Sharmila, let me come across to you. Lloyds Metal, the stock has done considerably well in this last 1 year or so. How are you looking at the stock fundamentally? Are you positive on this stock as well?
Not a stock that I studied too closely, but I think obviously from what I just read, what I was reading, and from what I was hearing, they would benefit from the fact that iron ore prices are going up. So maybe an upside because of that. But overall, the valuations seem to sort of factor in the positive news. They look a little expensive to me. Yes, I think if you have the stock, obviously stay invested. But it's really not on my buy list.
Stay invested if you have, but not on the radar right now. But moving on to a whole host of NDTV exclusives. Road projects worth 40,000 crore rupees have been stuck as NHAI seems unable to score land approvals. Vikas Srivastava has the exclusive details. Vikas, over to you.
So basically close to 40,000 crore worth of HAM projects, basically what is called as hybrid annuity model projects. They are stuck because National Highways Authority of India has not been able to provide the appointed dates. Now appointed date happens after the letter of award is given to these developers. So letter of award was given almost a year back, or close to, in some of the cases, even 1.5 years back. But these companies have still not, or these projects have still not received the start date or the official start date for these projects. Now the reason for that is under HAM project, NHAI promises to provide 80 to 90% of land at the time of the letter of award. But that has still not happened, and because of that the appointed dates have not come. So the reason or the challenges are basically right of way and compensation related issues, and also litigation in some cases, because of which the land acquisition has not happened. Now because of that, what's going to happen is that most of these developers will not be able to execute the projects which are almost as high as three times of their total order book. Now this is, according to some of the industry analysts, is expected to bring down the order books to less than 2 times. And the execution of the construction activity is also expected to go down by almost 10% in FY25 compared to FY24. So now all these issues are going to be a big challenge for our road sector, which is already facing various challenges. Like last year, Bharatmala project was stopped because of cost overruns, and no awards are happening in that. Even in the first half of this year, the awards have been very slow. So all this is going to have a massive impact on the road and the construction sector. We expect that soon the acquisition happens and these companies get the letter of awards and also the appointed dates, as soon as possible.
Absolute negative coming in with regards to where road and construction companies go. Let's just quickly pull up names like L&T, APCO Infratech, Dilip Buildcon, Ashoka Buildcon, NCC. These are a few of the names that you should be watching out for as well with regards to where HAM projects go. NCC pretty much on the borderline as we speak, but apart from that, no major reaction coming in terms of stocks. Sharmila, how are you looking at this, taking into consideration that news that Vikas has bought us?
So obviously not good news, and one hopes that it is addressed quickly because this road as a sector is a very important. It's a very important piece in the entire scheme of things. That said, I think a lot of these infrastructure companies, like for instance an L&T, I do continue to like it because they have bid for certain large orders outside India, and those orders, the kind of size that they were, would put L&T in like a level up. So those you have to, I think, therefore look at the order book as a whole and see where the orders are coming from, how much of it is in road projects, because obviously that seems to be a piece that's not going to be doing well given the kind of delays we were hearing of. But not to my mind news that should put everything in that sort of a negative bracket.
Okay, well, that was the view on some of these road companies that you should be watching out for. But another profit exclusive that should be in focus, wherein brokers are suggesting to get more time before implementing tech-driven changes. Charu gets us more details on this.
Hi, so recently the market regulator, Securities and Exchange Board of India, had come out with a consultation paper giving out proposals to make a more technologically driven process for auditing of stockbrokers and brokerages. Now, this was mostly done because SEBI had observed that there is no independent way of doing these audits, which has led to some sort of shortcomings in the recent past. But now this paper is out, which says that, which proposes that these changes of, making an online infrastructure to oversee the stockbrokers auditing process by the exchanges has to be done, and basically finding out the location of the auditors who are going to the brokerages should also be done. Now we asked for some sort of responses from the industry, where as per some sources the brokers are fine with these changes and they will be implemented probably in their entirety as they are in the proposal. However, there may be suggestions that they need more time to implement these changes, more time to be adhered to them, be okay with them. So that could be one suggestion that could come from the brokers industry. Apart from this, from the exchange sources, we have known that it is going to take place in a step-by-step gradual manner and eventually be implemented once a final circular is out. The work will be started. First, the empanelment of new qualified auditors will take place, and then the online infrastructure will be developed gradually.
Right, so a lot of information in terms of an audit process of stockbrokers proposals coming in. It will be an interesting development that the markets will be watching out for. But completely out of time. Thank you, Sharmila, for joining us on the show and sharing your views. Interesting stock picks that the viewers will be picking up as well from you. With that, it's a wrap on this edition of Hot Money. A thank you from Manushi and the team that put the show together as well.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and
And a bitter pill for pharma companies today as the reversal of US Biosecure Act puts pressure on the CDMO stocks. Laurus Lab and Divi Labs lag. And PM Modi inaugurates the Rising Rajasthan Global Investor Summit 2024, says Rajasthan is rising, reliable, respectable, and hails as an attractive investment destination for investors. Adani announces investments worth 7.5 lakh crores by Adani Group in the state. Hello and welcome to NDTV Profit. You're watching Market IQ and I'm your host Mihika Barve. Up first, let's take a quick look at how the markets are performing. Well, the benchmark, the Nifty 50, is trading down 0.3%. It has a negative bias today. When you talk about, which of the stocks are one of the worst performing stocks on the benchmark, we have Tata Consumers, the top laggard, cuts of over 3.5%, as well as HUL, Nestle, a host of FMCG companies actually down about 1 to 3%. We also have, Hindalco, Tata Motors that are seeing some negative movement in terms of stocks that are doing comparatively well on the Nifty 50. We have L&T, which is the top gainer in trade today. It's up over 2% in trade, as well as SBI Life, HDFC Bank and Adani Ports seeing some gains. When you look at the broader indices, they are clearly outperforming. It's the Nifty Small Cap 250 that is up 0.4% right now. And when you look at some of the top gainers on the Nifty Small Cap 250, we do have counters like ITI, which is gaining up over 12% right now. CET, which is up 10.5%. It's made a significant acquisition that will help expand its portfolio in a very high margin of highway tires and tracks segment. We also have Trident seeing gains of over 10%. Chalet Hotels up about 7%, as well as some continued strength in HEG up about over 5% as some global and macro factors play in the company's favor. Some of the stocks that aren't doing so well on the Nifty small cap, we do have India Cements under pressure, about 4%. This is after Ultratech did get a CCI notice for its acquisition of India Cements. PVR Inox seeing cuts of 3%. The same story with Triveni Engineering. We have 106 declines against 139 advances on the small cap. When you look at how the sectoral indices are performing, well, if you could have that on the screen right now, we do have counters like Nifty Finance and Nifty Infra that are doing pretty well, as well as the Nifty Realty, but no gains more than 0.5%. But it's that Nifty FMCG which is down 2.2%, and that's been in focus since the start of the day after some weak comments of Godrej Consumers came by, and it is the top laggard on the Nifty FMCG index, seeing cuts of over 8%. We also have a spillover effect on other FMCG counters like Marico, Tata Consumers, Colgate. All of these counters, all of these constituents on the Nifty 50 are currently, seeing significant negative movement, except Radhika Khaitan, which is the outlier, seeing gains of over 2%. But, let's start with some top buzzers right now. It's a smooth ride for CEAT today. Like I mentioned, the stock has hit a record high on announcement of entering into a pact with French tire maker Michelin to acquire its Camso brands off-highway tires and trucking business for $225 million. And we have Puneet joining in with more of the details.
It's a very big acquisition coming in the tire space where, the acquisitions have been lean over the last few years. So definitely something to talk about. Stocks also reacting very positively as well. So as you rightly said, CEAT has acquired Camso, which is an off-highway tire specifically, a segment that's very low contributing in terms of revenue currently for CEAT. This is also, they've also acquired the tracks business as well from somewhere like Michigan. There are three key things you need to know about this transaction. Of course, acquired for roughly about $225 million. Camso specifically is, a premium brand in the construction equipment tire space, which is a space which is not very dominated by CEAT currently, just single digit in terms of revenue. The other aspect is that including the business of the company, they did about $213 million of revenue in the previous fiscal year of 2023. That's what they mentioned in the press release as well. They've also said that the brand will currently be assigned to us, on a licensing agreement for the next 3 years, and post that CEAT can start using it. That's what the update is. Now, the benefit of the acquisition that the company has mentioned that it will give CEAT a widened product portfolio in terms of off-highway tires, as you mentioned, because they don't have contribution there. Apart from that, it will also give CEAT access to 40 new international OEM clients that Camso already has, plus another 2 manufacturing plants which the company has in Sri Lanka. So a newer geography as well as higher client exposure. In terms of transaction, Michelin had actually acquired Camso in a larger deal of roughly about $1.3 billion back in 2018, and this off-highway tire segment is something that they've sold in. So it's just a part of the transaction that's been sold to someone like a CEAT. That's in line with Michelin's 2030 strategy as well. Finally, MK had written a positive note on the company. They have a target price of 3,650, a decent upside from the current levels as well. And they mentioned that this acquisition will increase CEAT's exposure in terms of revenue in the off-highway tire space by essentially doubling it to 30% going forward. They've also mentioned that the enhanced capability will increase the margins, because currently CEAT's margins are around 14%, and it's expected that the new business they've acquired is somewhere around 20 to 23%. So overall, it's a positive news flow as well as on a business side for someone like a CEAT. Valuations are also in tame, but because of natural rubber prices as well as other factors with slowdown in Europe, the stock has been averaged over the last 6 to 12 months. So watch out for this stock on this positive news flow, as well as going forward how the company can integrate this transaction.
Thank you so much, Puneet, for giving us those details. Yes, MK did say that, it's a high margin profile and it could be, 6% EPS accretive. But we also spoke to CEAT's management on this very acquisition, the company's plans and growth expectations for the next quarter as well. Do listen into a slice of that conversation.
We expect another 6 months for the transaction to get completed. There are regulatory approvals. And we also have some schedule that we have agreed with Michelin for payments. So overall, we also, that we incur about 1,000 crores of capex every year. Considering, funding is fungible, both for capital expenditure and also acquisitions like this. We do not expect more than 70% of this amount at an overall level, including even the capex that we would continue to incur in the future, to be our debt, and balance 30% would get funded through internal accruals. Look, if you really look at our first half, we are happy with the way we have grown top line. And we have grown by about 8.5% in the first 6 months versus the same period of last year. Our internal plan is to deliver double-digit growth, which means that we have to grow higher in the second half of the current financial year.
Well, that was the expectation of CEAT's management for the quarter going ahead. But, we shift our focus from auto to pharma, and it's a bitter pill for the CDMO companies as stocks react to the reversal of the US Biosecure Act, which was a positive development at first. Now, Varsha joins in. Varsha, what's going to be the impact on the Indian pharma companies?
If you see in the last 2 to 3 months, Indian CDMO companies have done very well. The stock returns, if you see, have been 20 to 30% for DBs, for Syrian Pharma, then for Laurus Lab in last 2 to 3 months. And one of the reasons was US Biosecure Act, which was supposed to ban 5 Chinese companies, and the impact would have been positive for Indian CDMO companies. But now the Biosecure Act has been removed from a key defense bill. Now the targeted companies, the 5 Chinese companies included BGI Genomics, Wuxi Aptat and Wuxi Biologics. Now on the first place, why was the act proposed? Now the supporters argued that it was needed to stop China from misusing biological data for harmful purposes. Now, but why was the act dropped? Now the lawmakers objected to blacklisting companies without a fair process, and they wanted clear rules for adding or removing such companies from the list. Now if you see the impact of dropping this act, the act is now harder to pass, but does that mean that it will not be passed? Well, that is unclear, because supporters may try to attach it to the other critical bills later as well. Now if you see the potential impact for the Indians, for the Indian companies, the dropping of this could indirectly affect Indian companies like Divi's, Laurus Lab, Piramal Pharma, Syngene International that we are seeing. Why? Because all these companies were pegging on US Biosecure Act, at least for the short term. But for the longer term view, if you see, in spite of the US Biosecure Act, US companies are actually eyeing for China +1 opportunities, and Indian companies are best when it comes to Indian CDMO companies are best when it comes to CDMO opportunities that US companies are seeing. So I think this is the short-term phenomena that market has been pegging in. For long-term, yes, the opportunity still exists for the Indian companies.
Thank you so much, Harsha, for giving us those details. But stay with us. Bajaj Healthcare's API manufacturing site in Gujarat has also received approval from the Australian government. Harsha is back with us. Give us more details on the same.
Their API manufacturing site in Gujarat has received approval from Australia's regulator. Now, the site is already approved by US FDA and EU. Now, this Australia approval supports companies' goal of becoming global API supplier, and now it allows direct supplies to Australia and New Zealand and to global drug manufacturers as well. Now, companies is expecting a more CDMO contract following this recognition. So, yeah, good uptake when it comes to Bajaj Healthcare.
Thank you so much, Harsha, for giving us those details. The next stock that we do have in focus is Lloyd's Metal and Energy, an intraday high of over 4%. It's spared some of those gains, but still up 3.5%. Now, this was on back of a big brokerage call that came in. We have, Incred, which has initiated an ad rating, a target of 1,476 rupees, which offers a 40% upside to the stock's previous closing price. Now, they've said that the company is obviously a direct beneficiary of the rising iron ore prices. They also project 76% EPS CAGR over FY24 to FY27. Then the mine extension to 2025 is the forward integration plans to drive EPS CAGR. They have noted some downside risks for volatile iron ore and steel prices, obviously. We also had Aquarius, which retained its long rating, a target price of 1,200, which offers a 27% upside. They've mentioned the company's plan to build infra outside a mining area, how they're going to potentially be a toll operator for other miners as new auctions get, new blocks get auctions by the government of India. They also expect the cost savings of the slurry pipeline to reduce overall cost by 250 to 300 rupees per ton. And lastly, they expect and 59% EBITDA CAGR over FY24 and FY27. The graphics on your screen is for Incred, but we also mentioned the Aquarius view. But that's what we had on Lloyd's Metals. But moving on, Nomura hails Adani Group as the most attractive amongst the investment grade corporates and sees no sign of stress across the group. Harsh joins in. Harsh, why is Nomura so positive on the Adani Group?
Well, strong words used with regard to where Adani Group is concerned. And what Nomura is saying is it's the most attractive investment grade corporate currently. Why is that so? Let's try and unpack this a little bit. One, they believe that financially, in terms of both fundamentals as well as asset quality, the group is quite sound in that sense. The group debt leverage, according to them, and we're quoting them here, is manageable. Second, they believe that within the Indian corporate landscape, with regard to investment grade corporates, the larger landscape looks expensive versus the Adani group, and therefore they are constructive on the Adani group. Third one, compared to earlier, the group's liquidity management awareness has improved meaningfully, and that they believe is a sea change versus the past, and that of course changes their position with regard to how they view the group. Fourth, global banks, they believe, might halt new financing, but even if they do, what they are saying is, if the new financing is halted, it is going to be short term in nature, and gradually it will resume in terms of financing. Even global banks will resume financing. More importantly, the Japanese banks, the big three Japanese banks, continue their relationship with the Adani group, and that they've marked out and said is an important metric to look out for. Fifth one, indictment will not breach any anti-corruption covenants within lender agreements, and therefore the event of default clause in a lot of these agreements will not get triggered. And that has been reported by media outlets, and they believe that there is enough comfort that they will not get triggered. Last off, they're not worried about the promoter share pledge, and that they believe is again a change versus the past, and they believe the steep volatility in the stocks therefore should not impact the group as a whole.
Up next, we have Prime Minister Narendra Modi, who inaugurated the 3-day Rising Rajasthan Global Investors Summit 2024 at Jaipur Exhibition and Convention Centre in Sitapura. Now, the event saw massive participation from all the big corporates announcing their investment plans in Rajasthan. And we have Rishabh Bhatnagar bringing the highlights of the summit. Over to you.
Right, we're live from Jaipur, where the Prime Minister, along with a lot of industry leaders such as Vedanta's Anil Agrawal, Karan Adani, we also had Kumar Mangalam Birla as well as Anand Mahindra speak on the podium alongside the Prime Minister, and all of them announced grandstand ambitions for the state of Rajasthan. This is the biggest sort of investor roadshow that Rajasthan has seen in a long while. So among the few key takeaways, we had the Aditya Birla Group also say that they are committed to investing another 50,000 crore rupees over the next few years, and this will be across retail as well as cement, both industries that have a very strong hold here in the state of Rajasthan. Apart from that, the biggest investment of all was announced by the Adani Group, which Karan Adani said they are set to put in about 7.5 lakh crore rupees over the next 5 years in Rajasthan. This will again be across sectors, with a large chunk also going to renewable energy, something which Rajasthan has become a hub for, especially in terms of solar energy. From Vedanta, we had a commitment of sort of flipping India's silver production, as well as homes being made, about 25,000 homes being made for Vedanta's employees here. Also, they said that while they contribute about 50,000 crores currently to the national exchequer, that is supposed to go up to about 1.5 lakh crores going ahead. From the Mahindra Group, we had a commitment of about the Club Mahindra resorts to nearly double in the next few years, as well as other monetary announcements that were also made by Mr. Anand Mahindra. So those were the key takeaways. We expect more of these announcements to come in over the next couple of days.
Thank you so much, Rishabh, for giving us all those details. But let's also listen to Prime Minister Modi, who was present at the summit. Now, he said that FDI has also doubled, infra outlay has grown 5 times.
भारत का यूपीआई, भारत का बेनिफिट ट्रांसफर स्कीम सिस्टम, जेम, गवर्नमेंट ई मार्केट प्लेस, ओएनडीसी, ओपन नेटवर्क फॉर डिजिटल कॉमर्स, ऐसे कितने ही प्लेटफॉर्म हैं जो डिजिटल इकोसिस्टम की ताकत को दिखाते हैं। इसका बहुत बड़ा लाभ और बहुत बड़ा प्रभाव हम यहां राजस्थान में भी देखने जा रहे हैं। मेरा हमेशा से विश्वास रहा है, राज्य के विकास से देश का विकास। जब राजस्थान विकास की नई ऊंचाई पर पहुंचेगा, तो देश को भी नई ऊंचाई मिलेगी। साथियों, क्षेत्रफल के हिसाब से राजस्थान भारत का सबसे बड़ा राज्य है और राजस्थान के लोगों का दिल भी उतना ही बड़ा है।
Up next, around 7.5 lakh crores will be invested by the Adani Group in Rajasthan over the next 5 years across various sectors. This was said by Karan Adani, MD of Adani Ports and SEZ, while speaking at the very same Rising Rajasthan Global Investment Summit 2024. Listen in to what he had to say.
The Adani Group plans to invest over rupees 7.5 lakh crores across various sectors of the state economy, with over 50% of this investment being made over the next 5 years. Let me elaborate. We plan to build the world's biggest integrated green energy ecosystem involving 100 gigawatts of renewable energy, 2 million tons of hydrogen and 1.8 gigawatts of pump hydro storage. These investments will turn Rajasthan into an oasis of green jobs. Beyond energy, Rajasthan is critical to our ambition to become India's largest cement company. We will set up 4 new cement plants to build additional capacity of 6 million tons per annum in the state. In addition, there are other investment plans such as developing a world-class facility at Jaipur Airport, multimodal logistics parks and ICDs that will support your transformative plan for Rajasthan.
On to an NDTV Profit exclusive, road projects worth 40,000 crore rupees are stuck as NHAI seems unable to score land approvals. Now, Vikas Srivastava has the exclusive details and he's joining us right now.
So basically close to 40,000 crore worth of HAM projects, basically what is called as hybrid annuity model projects, they are stuck because National Highways Authority of India has not been able to provide the appointed dates. Now appointed date happens after the letter of award is given to these developers. So letter of award was given almost a year back or close to, in some of the cases, even 1.5 years back. But these companies have still not, or these projects have still not received the start date or the official start date for these projects. Now the reason for that is under HAM project, NHAI promises to provide 80 to 90% of land at the time of the letter of award. But that has still not happened, and because of that the appointed dates have not come. So the reason or the challenges are basically right of way and compensation related issues, and also litigation in some cases, because of which the land acquisition has not happened. Now because of that, what's going to happen is that most of these developers will not be able to execute the projects which are almost as high as 3 times of their total order book. Now this is, according to some of the industry analysts, is expected to bring down the order books to less than 2 times. And the execution of the construction activity is also expected to go down by almost 10% in FY25 compared to FY24. So now all these issues are going to be a big challenge for our road sector, which is already facing various challenges. Like last year, Bharatmala project was stopped because of cost overruns, and no awards are happening in that. Even in the first half of this year, the awards have been very slow. So all this is going to have a massive impact on the road and the construction sector. So I mean, we expect that soon the acquisition happens and these companies get the letter of awards and also the appointed dates, as soon as possible.
Thank you so much, Vikas, for giving us all those details. But that's not all. We have one more profit exclusive right now, where brokers are suggesting to get more time before implementing the tech-driven changes. Now we have Charu joining us. Charu, what are your sources saying?
So, SEBI had recently come out with a proposal paper that says that there should be an online infrastructure by the exchanges to monitor the auditing process of stockbrokers. This was because there was no initial independent mechanism to oversee this process. The exchanges were also told to be responsible for impaneling certain auditors to carry out this process and look into it more closely. However, after speaking to many industry stakeholders, NDTV Profit has been told that while all other rules rules are fair and everything might come out in a final circular just the way it is, all of the rules getting implemented. However, the only request that the industry may have, the only thing they may seek or put forth before the regulator is that there should be more time given to the brokerages before sort of implementing these rules. As for now, the proposal paper says that the rules will be implemented for the auditing period of financial year 2025-26, but the brokers might ask for more time. Let's see how that plays out. Meanwhile, the exchange sources have told us that it will be done in a phase one, step at a time kind of manner. Once the final circular is out, they are going to start with them paneling the auditors and then start with the development of the online infrastructure.
Thank you so much, Shahrukh, for giving us all those details. We now move on to some global news. Politburo, the policy-making body of Communist Party, announces its first policy shift in 14 years. It says that they would implement more proactive fiscal policy. And we have Alex joining us to put this into more perspective.
Right, so the Politburo, which is the policy-making body of the Communist Party, it's made up of the 24 top officials of the party. It's made a pretty big statement. It's a statement of intent. On the monetary policy side, what they've done is that they've said that they will likely move to a moderately loose strategy next year. And this is significant because this is the first such shift in policy in 14 years. 2011 was when it shifted to a prudent strategy. And the last time they used the moderately loose strategy was during the financial crisis, the global financial crisis. So it's essentially a statement of intent because it is likely to mean more in the way of monetary easing. This is something that has already come through over the last few weeks and months, but there's an expectation of more to be done. On the fiscal side, there is a small change in that they've said that they're going to be more active, or they're going to be more proactive, whereas previously they had said that they will be proactive. I know that this is primarily words being used, but then the expectation is that the Chinese government is taking into account the fact that growth has slowed down. On the inflation side, and this is the latest data that has come through not too long back, the CPI inflation number for the month of November has slowed to 0.2%, which was lower than expectations, and that provides them policy room to have easing. Early days, but one could assume at least that this is going to be taken well by the equity markets.
Thank you, Alex. Not only does the Hang Seng China index, gain, we also have the Nifty metal seeing a slight shift and is in positive territory right now. But that's all we have on the show for today. But do stay tuned to NDTV Profit for more.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed.
Hello and welcome. You're watching the Mutual Fund Show. Now, the next 20-30 minutes, we'll be having a very interesting conversation to try and understand that if when you say more funds means better returns. Now, to help us understand this better and to get the optimum number of products in one's portfolio, Vipul Bhowra, Senior Director, Listed Investments of Waterfield Advisors, joins in. Hi, Vipul. Thanks for joining in. Vipul, one thing that we both would agree on is that diversification at the product level is important. We also do know that over-diversification may not necessarily be good for a product. How do you determine optimal diversification at a product level for investors?
Hi, Samina. Thanks for having me here. So completely agree with your thought that more the diversification, it certainly impacts returns at a portfolio level. What we generally recommend is that having a mix of diversification and concentration at a portfolio level, so be it large cap, mid cap, and small cap across market cap, it's best to have a strategy where there is some sort of a diversification and some sort of a concentration. Wherein we're not skewed to a particular strategy, a particular theme, but broadly at the same time we are fairly diversified across sectors. So diversification across sectors is one way to look at these strategies when building a portfolio, and diversification across market caps is something we should look at when building portfolios, and not just randomly diversifying by looking at the performance of the funds.
I don't want you to quantify the number of funds just yet, but would you tell me, how do you determine the optimal number of funds in a portfolio to achieve diversification without an overlap? And does that differ in terms of the quantum of wealth one has? So what I want to understand from you is, if somebody is doing an investment of, say, 10,000 rupees a month versus somebody who's doing 1 crore rupees a month, is the number of funds, should the number of funds be fewer for somebody with a smaller corpus and more with somebody with a larger corpus, or that's insignificant?
So that's completely insignificant, Samina. Ideally, the first question to look at is what should be the ideal market cap mix. Let's assume large cap, mid cap, small cap, and broadly diversified across 3 different market caps. The second question would be, broadly in these market cap, you're okay with max to max 2 strategies. For example, in large caps, you're predominantly okay with having passive strategies that essentially takes care of the large cap allocation. In flexi cap, or a mix of large cap and flexi cap, would be a basket which will take care of your large cap allocation. Whereas in mid cap and small cap, essentially we can quantify into 2 strategies, one focusing on growth while the other is focusing on value. So just trying to create a balance between growth, value is something one can look at. But predominantly, not more than 2 or 3 strategies in a particular market cap takes care of the overall diversification and takes care of the total allocation into a particular theme, particular sector, and particular market cap.
So are we saying that 7 to 8 funds is probably a good number across market caps and sectors for an investor to consider while building a portfolio?
Yeah. So, Samina, just to take a step forward. I mean, broadly, most 10,000 rupee SIP might want to still continue building a core portfolio, and then might want to look at building a satellite portfolio. For a 1 crore ticket size, they might want to create a core portfolio and a satellite portfolio together. So a core portfolio will be 80% allocation, and a satellite portfolio can be a 20% allocation. In that context, this 8 can go to 10. But broadly, if someone is just looking at building a core portfolio, not more 8 to 10 strategies are enough to get that overall market cap allocation and the portfolio blend allocation.
Okay, so that is ideal, right? But we've spoken to so many people, even on the channel, when people write in with queries, they've got 40 funds, 50 funds. Every time there's an NFO, they get tempted and would, invest in one. At what stage does holding multiple funds become counterproductive due to complexity or maybe even redundancies?
So the observation is valid. When we do come across a lot of portfolios, we see that happening. And essentially, what we do is we run an overlap analysis, and that is where most clients, everyone realizes that they have 10 different strategies, but those 10 different strategies actually hold the same 10 stocks, and that's why the portfolio has not been able to beat the benchmark. So the first thing one should look at is try to reduce overlap in the portfolio. The second reason why this kind of a phenomena happens is most of the allocation or most of the investment happens looking at short-term returns. So 1 year, 2 year, 3 returns of a strategy, and hence, there is this interest of buying into such kind of funds. And lastly, in every bull run, you have select themes which do very well. So more so to make the most of those themes, you have those thematic funds, and that's where the incremental allocation to the line item just keeps on increasing. So the idea is to first look at overlap. I think in that exercise, most clients will realize that there is no need to have so many strategies. They are replicating the strategies in a way, and that will lead to first round of consolidation and reduce the gap between a concentrated strategy and a broad-based strategy. So these two strategies or these two action points will automatically reduce the overall line items in the portfolio.
You're right, of course. When you own the market, it gets difficult to beat the market in more ways than one. Kshitij Mahajan as well, Managing Partner and CEO, Complete Circle Wealth Solution, joins in. Kshitij, Vipul and me were having a very interesting conversation of what should one do when you're building a portfolio A, and how many funds are too many funds? Because at a certain stage, while diversification is critical, and we talk about that consistently with our viewers and of course you with your clients, over diversification is also a problem, I understand. I think we've lost Kshitij, so we'll try and come back to Kshitij in a minute. But Vipul, yes, you and me were having this conversation, and let's spend some more time trying to understand why owning the market may be counterproductive, right? Because if you are trying to achieve returns that are better than the Nifty, I mean, that's the whole idea of investing in mutual funds. Otherwise, a simpler way to do it is to simply buy the index. Why is it important to have a concentrated portfolio which is also diversified? So now this is a little bit of a catch-22, right?
Yeah. So good question. So Samina, what happens is markets go through some sort of a shallow cyclicalities. The sectors also go through some sort of a shallow cyclicality. So in the last 4 years, you would have seen a lot of sector rotation. Sector by sector, we saw earning recovery, and now we are seeing sector over sector, some sort of a consolidation happening. To capture those themes, to capture those sectors, you need some sort of a concentration, but you also need diversification, because whenever the sector rotation happens, it's initially the broad-based strategies capture. But when
I think we've lost Vipul's audio now, but I believe Kshitij's audio is back. Kshitij, thanks for joining, and I don't know whether you heard my question, but what I'm trying to do is understand from you of how many funds are too many funds. The constant struggle for investors of building a diversified portfolio which is not overly diversified.
Hi, Samina, and there was some network issue, but now things are better. So I think very strangely, when I keep on meeting clients, and it's been so many clients we've met over a period of time. So idea is to diversify, and diversification is done to complement the existing holding across sectors, across asset classes, so that you should not have all your eggs in one basket, but you end up over diversifying portfolio. My sense is if you take equity portfolio basket only, then I think 7 funds are more than enough, which includes your tax saving funds, or let's say balance funds also. I think that's more than enough. Fixed income fund, depending on the maturity of fund which you require in your portfolio, let's say for 1 year, 3 years, 7 years, depending on that, you can have 3 to 4 fixed income funds also. So I think idea of diversification is to generate that extra alpha with reducing the risk. But when you get into so many number of funds which are having unique 300, 350 stocks, then eventually you're actually getting into BSE 500 only. Then I think it's better that you should buy an index rather than just expecting that your funds or your portfolio will beat index with a good amount of margin. And there are studies which have shown over past that over diversification is actually tapering your return down, not stepping it up.
You're so right. You can't own the market and expect to beat the market, right? Some amount of concentration is required, and in some ways also free lunch is, that's what's never available. So you've got to do a little bit of homework when you pick your fund managers to make a long-term bet. But let's quantify this, Kshitij. Of course, Vipul and me discussed that already, but why don't you come in and tell us, what is it that you tell your clients to do? What is an ideal portfolio mix? How many funds are a good number for one to manage, not add complexities, and of course not make the portfolio redundant?
So I'll break it down to numbers. Let's say, as I said, that when you look at so when normally we say that your all investment should come in one page. When it start crossing that one page, then you can't have a track of it. Irrespective of how many softwares you have, how many platforms you have, I think better is to look at a pure equity mix of 4 to 5 funds. That's good enough, where you can have maybe an index fund, a good mix of multi-cap focus fund, a large and mid-cap, and depending on your risk appetite, a small, mid, or a sectoral fund. That's what you can look at. Maybe if you're in an old tax regime, you want to add a tax saver. So maybe 6 is what the count should look at. I know there are a lot of NFOs which are around the corner which keeps coming, but then if there is need or a gap, then only you add. So 6 is the number of fund which you should look at. So that, let's say, many of the funds will have some common stocks, but unique portfolio level stocks should not be more than 140, 145 or 150 on a higher side. I think that's a focus approach which you should look at, and you should go with the flow of these funds in your portfolio and just add or subtract only if there is a need of doing that. So I think that's the fund size you should look at as you keep on stepping up the number of funds. Because right now, last 4 years, the markets have been really good. Everybody thinks that, everything is firing. So why to unnecessarily reduce the portfolio or let's say concentrate it further. But as our market will keep on growing, you'll find it difficult for many funds to beat the index. So I think you should look at a limited number of funds, as over diversification and a common stocks across funds will keep on reducing the return part of the portfolio. So, and my sense is, obviously some mutual fund we keep on talking about. On direct stock portfolio, I'm just adding that if you go more than 30 stocks, I think there are 2 types of risks, Amina. One is unsystematic and systematic. That's a total risk. Unsystematic risk has been taken care by 5 to 7 funds, and as I said, more than 30 stocks if it's a direct stock portfolio. And systematic risk is something that you can't avoid. It has to do with sometimes some COVID happens, some war situation, some macro things happen. So I think you can't avoid. But unsystematic risk is well taken care. But if you keep on adding more and more fund, it's like overrating or over diversifying. Then you will have 50, 100 bips or maybe 150 bips less on what you can actually do when it comes to overall portfolio.
Right. Just one quick question, Kshitij, on the same space. And I've, again, Do you believe that a larger corpus or a bigger corpus warrants more funds, or the size of corpus does not have any bearing on the number of funds that are recommended, or one requires to beat the Nifty and generate alpha?
In a country where you have 12% nominal GDP, if you're happy with 12% type of return, I think index is something which you should look at. You don't need any one of us to look at the portfolio. But yes, I agree with you. Where the fund size is large, then maybe you can look at stepping it up, maybe by one or two funds. But you see the type of growth in overall equity assets we have seen across. So I think it's irrespective of whether you are into 20 funds or 25 funds. So I don't see the size of market is becoming nice. We have good funds with good amount of corpus in it. Sometimes, Samina, I will like to add this, that many of the mutual fund sizes where fund portfolios have become, mutual fund size has become really big. There you might find that the additional delta is not coming that effectively, which can achieve with a decent size mutual fund, because you have to take a bigger bet. Let's say if there's a fund size which is 50-70,000 crore, if you have to do 5% allocation also to a stock, then it has to be done in 2,500 crore of total buying. So in that case, you have to take a call whether further allocation you want to put into that fund, or you want to add something else in your portfolio. That is something. But I will never ask people to redeem, because the cost of redemption is a capital gain. And if you are a long-term investor, I will not ask you to redeem. But yes, over a period of time, if it's very, very highly diversified, then you should trim it a bit. That is what. But I agree with you to some extent. If the fund size if the corpus size is big, then you might end up adding one or two more funds.
Wow, Kshitij, I think you've done a good job of actually breaking it down and giving us actionables. And Vipul, you may want to comment on this one. So if somebody is watching this show and has decided or has realized that he has more than enough funds on his portfolio, there is an overlap, the cost of investing also becomes higher, rebalancing generally becomes far more complex, right? What should he or she be doing now? Should they be eliminating strategies of funds depending on performance to reduce the number of funds to the ideal 6 to 8 like we discussed? Or should they be eliminating underperformers? So do you eliminate based on repetition, or do you eliminate based on performance? Or like Kshitij said, maybe even your personal time horizon or capital gains or period of investment becomes important. You want to quickly comment on this before we close the loop on this conversation?
Sure. So essentially, I think this is a good time to actually look back and rebalance portfolios. And firstly, the best way to start is look at overlap. And that will be an eye opener in terms of how many funds are following the same strategies. Second, of course, certainly the funds which are underperforming and funds which we've been holding for more than 3 years, and funds which are holding for a long term over a period of more than 3 years, and underperforming, they certainly merit some sort of an exit or some sort of a rebalancing. So to answer question, first overlap, second would be underperformance, and third then would be a right balance between market caps. Whether in the last 3 years predominantly or last 4 years predominantly, we have seen mid and small cap portfolios have done reasonably well versus the large cap portfolios. So if the portfolio is now which was 50-50, which was 50% large cap and 50% mid and small cap, in the last 4 years would have gone to 60-40, where 60% would have been mid and small cap. So that is one way to look at rebalancing portfolios. So it will be a mix of all the three parts, and that is how one should actually look at rebalancing the portfolio.
Okay, Kshitij and Vipul, I think we'll close out this one. Let's try and get a sense of what and how should one approach total market funds versus multiple funds, right? I know for a fact that when investors are looking to diversify at an asset level, if the corpus of investment is small, you could consider investing in a hybrid strategy. In that way, you get equity and debt, and that's a healthy mix. Those funds also do quite well, and especially if you don't have somebody helping you with asset allocation, these become good funds. Can the same logic apply, Kshitij, to funds in the equity space, where you invest in one fund, for example, a flexi cap fund that would give you exposure across sectors and across market caps? Or do you say, you know what, that may not be ideal? Let's look at funds across market caps, and let's look at funds across themes or, you know, investment styles. How does that work?
That's really nice, Amina. And I keep on, sharing on various platforms that just don't look at that you are into flexi cap or a multi cap or small or mid cap. On a portfolio level, just look at how much large cap, mid cap, or small cap allocation you have. And this is very important. Sometimes we feel that, boss, I should have a unique small or mid cap fund. But if you actually see small or mid cap fund allocation, you get through large and mid cap also, flexi cap also, multi cap also. At the same time, I watch for that one should not stick to only one style of investing in terms of, let's say, you have a small corpus, then you should take one or two funds. You should have at least 3 to 4 different funds. And yes, it depends on totally on your age, what type of, how much risk you can take and your risk appetite, how much you can do. Second important thing, Samina, here is that when you choose a fund for your investments, you should be wary of the fact that you are coming here for at least 5-year plus time horizon, and depending on what type of goals you're aligning with those funds, I think that also helps. So you should not be looking at only that if there is one fund I should do flexi cap only or multi cap only. You should, if the corpus is small also, I will always tell somebody is having 10,000 rupees to deploy on a monthly basis also, they should look at adding 2,500 against 3 to 4 funds. That's one should approach, how one should approach.
Do you agree with that, Vipul, versus a multi-cap or a flexi-cap fund versus multiple funds? Is that an option? I'll complicate this further. Maybe a couple of multi-cap and flexi-cap funds, or just multiple funds. How does one play this? Because the corpus is small. If you are getting the diversification across stocks and sectors and market cap, then why invest in multiple funds and complicate life?
So Samina, the right advice would be to have a mix of diversification and concentration. So while flexi cap strategies would diversify across market caps and that plays very well across cycles, a concentration will certainly add alpha to the portfolio. So a fair advice would be to have both, have a mix of diversified strategies through a flexi cap strategy, as well as have something which is concentrated, a dedicated mid cap strategy, a dedicated small cap strategy. That would be a right balance to generate alpha.
That's probably the right way to generate alpha. Let's talk about this a little bit more, right? And I want to talk about a behavioral aspect, because Vipul, which I think we all would agree that investing is more behavioral and emotional than actually physical in more ways than one. How do you think that investors are more likely to stick to their financial plan when the portfolio is simpler, or as opposed to having multiple funds, over diversification? Simply put, the more complicated it is, the lesser chance of sticking to the plan. Do you agree with me, Vipul? That hence merits another reason of why you shouldn't have too many funds.
So completely agree, Samina. So portfolios which or clients which have actually panicked and have exited are those where have had over diversification, and imperially when the markets are doing very well, we see no reaction. But when markets start in the last few months, when the markets were volatile, there has seemed some sort of panic to rebalance portfolios. So a plain simple strategy across different market caps, a plain strategy across funds, some concentrated bets, some diversified bets is enough to plan a strategy to compound the portfolio over a period of time, and of course to certainly beat alpha.
Well, Kshitij, how do expense ratios and fund management fees impact the decision to consolidate investments into fewer funds versus diversifying across too many?
So, SEBI has clearly defined, depending on the fund size, there's an expense ratio which one has to charge. And as the fund size keeps on growing, you have expense ratio which is going down or coming down. At the same time, there is an index fund, Samina, where expense ratios are vis-a-vis active funds are much lesser, or maybe half of the cost vis-a-vis your active funds. And many of the investors do look into it, because whether it's 50 bips, 40 bips, it do compounds over a period of time. But my only suggestion here is that people who have time and can do it themselves, only they should look into this part. Because what becomes important is when they take a call on that, I am buying a fund, but let me look at a fund which is with less expense, because I'm here for 10, 15, 20 years, and then 50 bips will compound for a long term. I think that's a wise decision which people take. And nowadays, there's enough transparency of data point which are there. So people do take into account, and that's how we have seen a little bit much more traction towards your index fund, because their expense ratio is less, and traction towards those funds which are having low expense ratio. But my submission here is, Samina, this is very important for everyone to understand that sometimes a fund size which has become very big, as I said earlier, they are not able to take bets into smaller or mid cap capish companies, whether flexi cap or multi cap, beyond one stage, because let's say, as I said, for a bigger fund, for 5% also, it becomes huge corpus. And then at that time, they have to go a little conservative. And you see that irrespective of last 10 years, 5 years return looks good. But often, if you actually analyze last 1 year, 1.5 years return, 2 years returns, for many of the bigger funds, it's in second or third quartile, not in the first quartile, which were doing really well earlier. So I think much bigger fund size, my personal view is that one should look at fund size between 20 to 30,000 crore is the right fund size which you can look at. Lesser, if there is a good fund, is also a good size, but something which is going above 35,000 crore, I think there you find that performance is taking a bit of a slack, because as the fund grows, at fund manager level also, to move one needle, let's say you not buy a 0.5% or 1% in a bigger company, then you have to buy a bigger chunk. So I think people do take a call on the expense ratio, but then they should take this into account, that what is the sweet spot and how they can manage between the expected return and the expense ratio what they are paying right now.
Right, too large a fund makes it very difficult for the fund manager to navigate the markets and, of course, make concentrated bets where the impact of that will be material. One last question before we wrap this conversation up, Vipul. For individual factors, we've talked about the ideal portfolio size and the factors that one needs to track when they're rebalancing at this stage. But personal, objective, and subjective in nature, risk appetite, financial goals, and time horizon. How important are they in terms of dictating the choice between few broad-based funds and a more segmented approach in that sense?
So certainly, Samina, risk is individual, and of course, depending on the risk profile of the client, the market cap allocation varies. Someone with an aggressive tilt would generally prefer 1/3, 1/3, 1/3, which is 1/3 large cap, 1/3 mid cap, 1/3 small cap, and someone who is conservative might want a 70-30, 70% large cap and 30% mid cap. So risk is dependent on the individual. Of course, time horizon is something which in equities you need to have minimum of 5 to 7 years for portfolios to perform and for returns to compound. So that is on time. But broadly, what I've seen is that as portfolios get built, one thing which most clients don't spend time on is in actively rebalancing portfolios. What happens is, over a period of time, once a portfolio gets built, they generally keep on holding and don't monitor it actively, be it on performance, be it on expense. And that's where constant monitoring and constant active rebalancing in between 3 and 5 years merits to do that, and that will actually help build long-term compounding.
Right, Vipul. Thank you, Kshitij. Great having both of you on the show. So, of course, you don't want to over-diversify, build a diversified portfolio, rebalance it, not too frequently, but frequently enough. Don't buy a fund, go invest in a fund that's too large, but not in a fund that's too small. So, lots of ifs and buts, and if this is your full-time job, that's good for you. If not, you should be seeking help from your financial advisor to actually build the optimum portfolio, because while investing is important, reviewing it is also equally important. With that, it's a wrap on this edition of Mutual Fund. Thanks for watching. A lot more programming on the other side, so keep it with us.
whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know.
Hello and welcome. Good afternoon. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. And just what's playing out in markets. Let's pull up the Nifty 50 intraday chart. We have a range-bound market pretty much through the day. The Nifty has traded in around 125 points in terms of a range. And that's how essentially it's even currently playing out. We clocked the day's lows and thereafter we've recovered. So tight band in which the Nifty trades in. Second, consumer stocks in focus. Let's bring those up. Some names that are seeing pressure. Start off, Godrej Consumer's commentary came through, which is largely leading to that pressure. If you pull up the Nifty FMCG in terms of constituents, we'll see that a lot of stocks are seeing the pressure, including the heavyweights, and HUL, Marico, Tata Consumer are among those which are seeing pressure. Radeco Khaitan is probably the only stock insulated of sorts from that pressure that's playing out. CDMO stocks in focus. They've taken a bit of a hit in trade today. You have an exclusion carved out within the Biosecure Act, and that protects Chinese pharma companies, and you're seeing an impact. Something like a Loris is down. And you're seeing that impact pretty much across the board. Divis Labs is seeing some pressure, and Syngene International, and I can go on. Newland Labs also seeing pressure. So those are some of the names which are seeing pressure in trade today. The media index is under pressure. It's in fact outside of FMCG. It's one of the top underperformers in trade today. PVR, Inox, and Z, those heavyweights pulling the media index down. That's within broader markets. But financials are helping the Nifty stay where it is. And let's pull up the Nifty 50 contributors. And within that, you'll see HDFC Bank, generally a mover. Whenever it moves, you'll see it as one of the top contributors on either side of the basket. But Kotak Bank as well aiding the index, and some other financials as well, which are basically aiding the index higher. But we're currently sitting around a 50 points with a 50 points of a cut on the Nifty 50, and that's how it's essentially playing out. Now, Neeraj, want to come to you with regard to how the broader markets are looking.
It's an okay day of trade. The small cap index isn't exactly doing too badly. In fact, the Nifty small cap 250 about 0.33%, so which is actually not as bad a scene as you would think it might have been in trade. Yes, the CDMO stocks are amongst the ones which are the key culprits, if you will. So everything from a Syngene to a Laurus to a Pharma are all cracking in trade, and we marked divis, of course, but then Laurus has a bit of a recovery, but Syngene not so, down about 5% in trade. I believe Pharma should also have been correcting, and I wonder what Biocon is up to, simply because Biocon has the bad news from Novo as well, and that too is down about 3% in trade. So that bucket isn't quite looking the strongest. There is weakness in Aegis Logistics in the session today, should come up on your screen. There is weakness in Marico, in Newland Lab, Tata Consumer, of course, we marked. So that entire set of stocks is looking weak. And lastly, on the gaining side though, because it's not all gloom and doom, lest I sound like that, because I mentioned that the small cap space has a clutch of winners in today's session as well. So ITI is up 13%, MTNL is up 12%, and a clutch of right there on the screen. And Chalet Hotels, the management spoke to us about 6.5% higher, so that is doing well. And a clutch of these textile names are doing very well for themselves, so bear that in mind. In fact, on that note, let's get in our guest today, Brijesh Singh of Opulent Investment Advisors, on the technicals, Sudeep Bandyopadhyay on the fundamentals. Gentlemen, both of you, thanks so much for joining in and taking the time out. I'd love to come to Sudeep on textiles to start off with, but Brijesh, very quickly, a call on the index, if you will, and any stock recommendations for the afternoon.
Good afternoon, Neeraj. See, overall, the trend for Nifty and the Bank Nifty is that no doubt the price index has been holding, but the oscillator fronts, they are giving a lower highs signal, so which indicates that we might see some profit booking from a current level or from the top, and we might drift down. Now, immediately, if I say about the support level to watch is 24,400 to 24,500 band, and if that thing breaks, then 24,000, 24,100 would be coming in the play. Whereas the resistance size has been considered, again the swing high, recent swing high, that is 24,857 if I am not mistaken, or that would be coming in the play. So right now a little bit towards the profit booking side, or some sort of shorts are building up in the Nifty, whereas the Bank Nifty has been considered, then I'll say the immediate support lies at 54,200, 54,300 band. If that thing breaks, then 53,900 would be coming in the play, whereas on the 52,900 would be coming in the play, whereas the resistance has been considered, then on the higher side, 53,800, 850 followed by 54,200 would be coming in the resistance. So both the indices, I feel that the trend look little bit towards the sell side or a profit booking. Now regarding with the individual stocks has been considered, there are two stocks which are on the sell side. I'll start with first, that is Sun TV. As Ashwaz was been mentioning that the media stocks are looking weak, in that if we look out, then the Sun TV comes in the play. The daily charts indicate the clusters of the moving average. The stock has broken that and it's been trading below that level, a 50-day simple moving average. Now it's been trading at 757. So presented or any rise towards the level of 765, one can take a sell call in it with the stop loss of 785, and then play for the target of 725, hold for the time frame of 3 to 4 trading session. Another call on a sell side would be Bharat Forge. Same sort of pattern, a profit booking followed by the swing high, and it was not able to cross the 200 simple moving average on the daily chart, and from there we have seen the recent swing high was of 1394, and from there we have seen stock breaking and trading below that level. Now it's trading at 1345, somewhere around swing high of 1355. One can take a sell call in it with the stop loss of 1385, play for the target of 1300, and if that thing breaks, then 1285 or 1280 would be coming in the play, and both the stock time frame would be 3 to 4 trading session.
Okay. Okay. Now remember, textiles is a very active pack today. And Sudeep Bandyopadhyay, good afternoon. I'd like to start off with this because the opinion is divided there. There is an opinion which says these guys have anyway stocked up for the current season. By the time the next season comes in, these issues could be resolved. And then there's another camp which says that the issue of one of the largest textile manufacturers in Bangladesh not being there doesn't get resolved in about 3 to 6 months. It could actually take much longer, and people might want to diversify their chains away from India, even though this has not happened in the past. How do you look at this?
Neeraj, I've been positive on this segment, and I believe that whatever is happening geopolitically does favor Indian textile manufacturers. There is, of course, the Bangladesh issue and its ramifications and the ethical angle to this overall matter. Of course, there is the new Trump administration's policy of imposing differential tariff on different countries. That again should benefit India, because India, as things stand now, doesn't look like a Trump administration is not looking India adversely for any tariff action. Now, this also should help Indian textile manufacturers. So overall, I think we are looking at a positive period in terms of demand for Indian textile manufacturers, and this should augur well for their performance, P&L, balance sheet, pretty much everything else.
Okay. Right. Another set of stocks, in fact, in focus are the consumer names. Plenty happening on that count. You have the Nifty FMCG taking a knock off now, 2.5%. Let's put a spotlight on those. Talk about what's playing out there. Mahima is joining us for that. Mahima.
Right, Harsh. So today, majorly FMCG companies are getting hurt on the back of a mid-quarter update with which Godrej Consumer came out with. Now, this will possibly have a similar impact on the other pack as well, which is why all of these counters are seeing pressure. To start with, the mid-quarter update from Godrej Consumer, they've said that, particularly this doesn't paint a good picture, and 2/3 of their Indian revenue will be impacted going forward. Indian revenue will see a mid-single-digit value growth and a flat volume growth, and EBITDA margins will be a below normative range of 24 to 27%. Now, in terms of what is hurting overall, a couple of reasons. First off being the rise of inflationary pressure. The raw material prices are inching up. For Godrej Consumer, palm oil prices are on the rise. In the past 3 months, we've seen a 26% rise in palm oil prices, and YTD it has gone up by 48%. In terms of the inflationary pressure on these companies as well as raw material prices inching up, we've seen that the margins have gone down as compared to FY24 as well. If you see Nestle has seen a dip to 23.2% from 24%. Colgate has seen a dip from 33.5 to 33.9 to 33.5, and GCPL has seen a slight dip here as well from 21% to 20%. But going forward also, as per Bloomberg estimates, it's suggested that margins will further be impacted. If we calculate and see the Bloomberg estimates for Q3 as well as Q4, Nestle is going to see a margin of around 24%. Colgate will come down to 32% from 33%, and GCPL will come down to 22.6%, which was earlier around 29.7%. So all of these companies will face a lot of margin pressure. Now, in terms of the volumes have also remained impacted for all of these staple companies. We've seen how volumes have panned out over a course of few quarters for all of these companies. HUL has seen a volume growth of around 2 to 3 odd %. GCPL has seen a volume growth of around 7 to 8%. But going forward, this could remain flat and might not improve. Now, in terms of what has been happening so far, companies have decided not to completely pass on the raw material prices to their consumers, and because of which the volumes are being impacted, the staple remains impacted, the entire space remains impacted. And lastly, companies generally sit on an inventory of 2 to 3 months, because of which we'll see a higher impact going forward in second half of FY25. Demand again is also seeing pressure. Urban is seeing a lot of pressure as compared to rural. And lastly, if we see going forward, FY25 is going to remain tepid, and companies have expressed already their cautious outlook in the near term as well. So this is the overall outlook of what's happening in the FMCG space.
Thanks so much for that, Mahima. Comprehensive breakdown. Sudeep, without trying to further enhance on what Mahima has really said, Just give us your views with regard to FMCG.
Well, of course, the situation is unfortunately not very promising at this stage, the way we look at it. Initially there was a slowdown in rural demand, and the FMCG companies did have their challenges. Once rural demand picked up, I think the urban consumption started slowing down, and obviously that saga continues, as is apparent from the numbers which were being put out. But I have a little contrarian view as far as Indian FMCG is concerned. Look, we are a 140 crore population country. We are in a festive season. Fourth quarter traditionally is a good quarter. So yes, while urban demand hasn't picked up the way one had anticipated, but I believe that with these corrections, some of the FMCG, well-managed FMCG companies are becoming attractive from a long-term perspective. And I would definitely suggest long-term investors to seriously look at picking up some of these FMCG companies after the correction which we are witnessing now. Of course, this only applies to investors who have 1 year kind of time horizon in mind, not for a short-term investment point of view. So an HUL definitely looks good after correction. So does a Dabur, so does Nestle. So I think these are good quality stocks one should have in the portfolio, and correction is an opportunity to buy. Urban demand, yes, there's a challenge, but I'm pretty confident it will come back. It's a matter of time before it comes back.
Okay. Now, Sudeep, I would want your view on the next company for sure. Borosil Renewables is the name. There is a positive regulatory development in that India has imposed anti-dumping duty on solar glass imports. This provisional anti-dumping duty for a period of 6 months, I believe, and might help companies like Borosil Renewables. So Pradeep Kumar Kheruka, Chairman of the company, Johnson, right now to talk about this and more. Mr. Kheruka, good having you. Thanks so much for joining in. And you've been talking to us at every step of this development or the perceived development earlier. So thank you for all of that as well. Could you please tell us the details of this? What happens? Is this the extent of the duty that you wanted? And is this the extent of the time horizon for which you wanted this duty?
Thank you so much for having me. To answer your question, you see, as an applicant for anti-dumping duty, we can only present the facts to the government. The way the Director General of Technical Remedies works is that they work according to WTO rules and they make their calculations based on the WTO rules. We have absolutely no say whatsoever in trying to influence what calculation they come up with. So that is the first thing, that we have no say in any calculation they do. The second thing is that there was some discussion with us about whether we wanted a fixed anti-dumping duty or we wanted a minimum import price. And I must say that now I'm president of the Solar Ancillary Manufacturers Association. And so I speak now as the president of the industry rather than of just Borosil. And we are very responsible. We do not wish to, sponsor something which could be onerous. And so we suggested a minimum import price. And the idea of or it's called a reference price in technical parlance. So the reference price means that the government sets up a certain reference price. And if the price of imports is less than that, then the difference is what is paid as duty. So the point is that the manufacturer or the end consumer will continue to always get goods from abroad, at least at the reference price. And so that sort of puts a cap on the price that domestic manufacturers can charge. And also it reduces, proportionately the duty goes up and down depending upon the cost of imports. Now, so definitely this is something that we had sought, and we are satisfied with what has been decided by the government.
Okay.
As per your second question was about the time. So you see, the way we have applied for an anti-dumping duty, we have expressed extreme urgency because the prices which had been coming from China had been ridiculous. From a regular price of X, whatever that might be, which was valid for something like 38 months, they dropped prices by 32%. After that, they dropped it by another 8%. So, the no price of raw material or cost of conversion has dropped by that much. So this is clearly a very predatory intent on their part to wipe out the glass industry in India, no self-respecting Indian should agree to that kind of a price or try to hold us to that price, because it would not be right. And therefore, they have given us a 6-month window for this provisional duty. The reason is that the last date for them to take a decision, a final decision on the duty, is on the 5th of February of 2025, if I'm not mistaken. So by the 5th of February, they're supposed to send their recommendation. If they feel that duty is warranted, they will send up their recommendation to the Ministry of Finance. If they feel it is not warranted, they shall turn down our application. If they feel it is warranted and it goes to the Ministry of Finance, the Ministry of Finance has another 3 months in which to take a final call. So that would push it till the 5th of May. And since the government has done this on the 4th of December, I would say they have given us till the 4th of June, by which time a decision one way or the other is expected from the DGTR and from the ministry.
Sure, Mr. Kheruka, this is Harsh also joining in. So, sir, explain to us, what does this do to your volumes? How does this aid your volume numbers going forward? And therefore, your top line, how does it evolve?
See, the volume numbers is this, that now that our prices today are much lower than the provisional prices at which duty is supposed to be charged. We must keep in mind that there are thousands of containers on the water or in the ports which need to be cleared by the importers, and all that clearance will be at the price including duty, all right, which was much higher than the price at which we are currently exporting, at which we are currently supplying. So obviously there will be a price correction in the domestic market, but nowhere near the full extent of the duty. And we shall continue to behave with responsibility in terms of our pricing. And we will see as time develops and we see what's going on, then we'll take our call accordingly. I must say here that I must express my appreciation to the government. They have been understanding our problem. We have gone to various ministries. All of them have carefully given ear to whatever we have had to say. They have always given us time when we have sought time from them. They've had a proactive approach. I'm pleased to say that the signal is very strong, that they are strong on Make in India. They are strong on having the complete ecosystem available in India for domestic production. And all of these factors definitely give us a reason to feel confident about expansion and about the Make in India program. I would say that our track has always been a track record of reinvestment. So as soon as we had the anti-dumping duty, which was installed in August 2017, we were already in production with double the production in June 2019, within less than 24 months of the duty coming in place. And soon after that, we further doubled our production. So we continue to reinvest our profits in growth, in expansion. And that has been our track record. I'm not allowed to make forward-facing statements unless it has been cleared by the board of directors and we've informed it to SEBI. So I'm sorry I cannot share any kind of detail about any plans, but I can speak about the past, and I've just done that.
Got it. Mr. Kheruka, assuming that this is how it stays, I just have one question. What does this mean for numbers, sir? Let's say for FY25, because for Q4 you might have these benefits. So business as usual or something more, and what does it mean? Take your overall guidance to, if at all.
So the answer is that we have a nominal capacity of 1,000 tons, and we've been drawing about 970 tons already. This will give us a reason to try and push production, but that we can only push that within reason, within limits. To the extent that the price might rise, the selling price, of course, our top line will rise according to that. I think that's a very common sense answer I'm giving. I don't think I'm disclosing any secrets there.
Perfect. No problem. Well, all the best for the business, Mr. Kheruka. Thanks so much for speaking to us.
Thank you so much.
That's Pradeep Kumar Kheruka, Chairman of Borosil Renewables. It's probably negative for some of the green power companies, I think there was a note like that today, but for Borosil it might be okay. And let me go to our guest and try and get a sense both on the charts and the fundamentals. But fundamentals first. Sudeep, any thought on this?
Well, I think this was on the cards. The way the dumping was happening was very, very blatant, and the government had to intervene, and of course the association did flag off the issues. So I think it's a step in the right direction, I would say, and I'm sure it will be reviewed as Mr. Keruka was explaining. 3 months, 6 months time, the government has to review and finalize the structure. So I think it's a good step. Of course, benefits the manufacturers, Indian manufacturers now, and of course, a little bit negative for the ultimate beneficial industry, which is the green power companies and all that who use the products. But I think that's par for the course. It had to happen. Otherwise, the local industry would have got wiped out. So I think it's fair, and it's definitely going to benefit companies like Borosil Renew in the near term. And let's wait and watch what final shape the duties takes.
Borosil Renewables, would that at all feature on your list on the buy side of things? Stock has done very well over the last month or so. Brijesh?
So if we check it out from on 21st November, when the stock was trading at 440 zone, from there we have seen a stock moving up and trading above with all the important moving average, followed by the volume breakout, followed by the previous swing high. That previous swing high was of 514, that was been broken easily. Now, as a candlestick has been considered, it is facing a little bit resistance, or I would be saying a profit booking can be seen. That doesn't mean the trend is been over, trend is still on the buy side. So those who have bought it, they can either book profit or they can keep a trailing stop loss of 520 zone. For a fresh buying is been considered right now to try to avoid somewhere around 520, 525. If it trades, then one can take a buy call on it with a strict stop loss of 500, and then again play for the target of recent swing high of 585 followed by 650.
All right. We'll slip into a very short break with that. Stay tuned to NDTV Profit. More action on the other side. We'll, of course, continue to get you fresh ideas and a new perspective. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day.
Back with India market close right here on NDTV Profit. Now, European markets will have an impact maybe, and let's just see how Europe is doing currently as well. So Europe is a tinge of green with CAC really up in trade, and this is interesting. But remember, the French markets would have been rocked and under turmoil because of all the changes that have happened out there. But today, I think CAC seems to be doing fine for itself. We should get the intraday of the Bank Nifty if we can, and the Nifty if we can, just to see how the last half an hour has behaved like. And you can see about 1/3% gone for the Nifty 50 and a bit of a shave off in the last 1 hour of trade. I wonder if the Bank Nifty's done the exact same thing. Yes, a bit of a shave off in the last hour and a half minutes, though not as bad as the Nifty is behaving. This is because the Nifty is bogged down by the FMCG names as well. And we know what the large caps are doing. Just a quick synopsis of what the mid caps are doing in trade and what the small caps are doing in trade. And if we can just get the top movers and shakers at the small cap end of the market. Remember, the losers include the FMCG names, some of the CDMO names as well. India Cements has corrected, PVR has corrected. On the gaining side, HEG, Welspun and the likes have had a really good move in trade. Some top movers out there, and HEG particularly out there. So Deep, this is the other thing, right? I mean, some of these graphite, just a couple of them, graphite electrode names, but this whole thing of China not being, or China themselves taking a decision maybe not to supply to the US, and that opening up a market as well. It's a very small sector, if I can call it that. But do you have any thoughts here on HEG and graphite and any other?
Which one tracks. And of course, as you rightly said, the China's decision not to export to US and Europe, some of European markets, naturally has opened up a huge possibility. HEG probably is in a best position with a strong export track record and demand. So that's why the price also has moved up over the last few days, and it's really reached a very high level. If I remember rightly, I think the all-time high was somewhere around 900 levels. It's again started moving up. But since it has moved up so sharply in the recent past, I don't think I will recommend a buy, but I'll keep watching the space. If this thing continues, then it will be worthwhile from an aggressive investor's point of view to take some position in HEG. Graphite also can be looked at, but I think between the two, HEG is better positioned.
Okay. I want to quickly also cover some big buzzers in trade. Let's pull up something like a CEAT. Stock doing very well for itself, an acquisition, of course, on the fundamental side of things. But let's talk technicals before that. Trident also, when you're looking at the volume on the stock, extremely strong volumes, 30 times plus in terms of 30-day average volume. And Sundaram Fasteners also are doing very well for themselves, 16 times 30-day average volume. So these are some big buzzers in terms of volumes. Brijesh, let me come to you. Any of these featuring on your list of stocks, would it interest you?
So I'll start first with CEAT. No doubt CEAT had given a breakout after the bottom formation, and the previous swing high has broken. That previous swing high was of 3,240. Now it has been trading at 3,575. So aggressively buying, if someone wants to play, then present rate can be used to take long with the strict stop loss of 3,390, and on the higher side play for the target of 3,850. If that thing has been crossed, if someone has a little bit longer view, say a couple of months, then it can even try to touch 4,370 also. Regarding with the textile stocks has been considered, we have already seen from past 3-4 days the textile stock has been moving up, whether that be Trident, Lambodara, Kitex, you name it, SP, Apparel, and you name it. Most of the stocks have already moved up and roughly around in a week time frame of more than 18% or 20%. Regarding with the Trident has been considered, we have seen stock breaking, and now in today's session it's trading above 200 simple moving average. 38 around the stock has been trading. So keeping a stop loss of 36 present it, or any dip can be used to take a long position and then play for the target of 42 around zone in Trident.
All right. We also spoke with the management of CEAT, in fact, on the company's acquisition plans as well as growth expectations for the next quarter. Listen in.
We expect another 6 months for the transaction to get completed. There are regulatory approvals. And we also have some schedule that we have agreed with Michelin for payments. So overall, we also, that we incur about 1,000 crores of capex every year, considering, funding is fungible, both for capital expenditure and also acquisitions like this. We do not expect more than 70% of this amount at an overall level, including even the capex that we would continue to incur in the future, to be our debt, and balance 30% would get funded through internal accruals. Look, if you really look at our first half, we are happy with the way we have grown top line. And we have grown by about 8.5% in the first 6 months versus the same period of last year. Our internal plan is to deliver double-digit growth, which means that we have to grow higher in the second half of the current financial year.
Well, we have the finance minister speaking at a launch event. Let's listen into what she's saying.
पिछले 10 साल में LIC के द्वारा महिला पर्टिकुलरली महिला के लिए आर्थिक सुरक्षा का काम करते हुए, वित्तीय समावेशन का काम करते हुए, LIC के द्वारा रोजगार उत्पादन का बहुत बड़ा काम भी हो रही है। पूरे देश में 3,800 के ज्यादा ब्रांचेस रखते हुए LIC, उनमें से 50% से ज्यादा गांवों में गरीब और रूरल इलाके में ब्रांचेस रखते हुए बीमा के कार्यक्रम अच्छा आगे लेके जा रही है LIC। सरकार के द्वारा माननीय प्रधानमंत्री जी के द्वारा आए हुए जीवन बीमा योजना, प्रधानमंत्री जीवन ज्योति बीमा योजना, प्रधानमंत्री सुरक्षा बीमा योजना, इन सबको भी गरीब तबके हुए लोग को बीमा सुरक्षा देने के काम LIC कर रही है। 2017 से 18 से लेकर के 2023 तक महिला एजेंट का नियुक्ति भी बहुत किया है। 6 लाख का महिला एजेंट्स जहां 2017 में थे, वो बढ़कर के 7.45 लाख तक पहुंची है महिला एजेंट की संख्या। फिर भी 100 LIC एजेंट जहां है।
Well, that's a set of thoughts from the FM. Anyways, Brijesh, before we thank you, anything around this pack that stands out for you, maybe as you wrap up our conversation with us, any one last closing strategy, if you will?
So there is one counter which looked promising at this juncture is that PCBL. We look out the chart, already the base formation has been done and the stock has moved up significantly. It has broken the swing high, recent swing high of 449. Now it has been trading at 480, 481. So present rate can be used to take long position with a stop loss of 460. Play for the target of 515. That is for the short term 3 to 4 trading session. If someone has a view of little bit on the bigger side, say 2 week to 3 weeks time frame, then it can even try to touch 540 zone also.
Okay, Brijesh, we'll leave it at that. Thanks so much for taking the time out and joining us. Sudeep, before we let you go as well, just a couple of last minute thoughts. One is on the Sanjeev Goenka group, Sudeep. It's a lot of the group companies are doing very well in the last 3 to 4 odd months. Agreed, the broader markets have done well, but this group in particular, almost all of those names are moving ahead at a very good pace, particularly PCBL as well. Any thoughts on this group or any of the group companies?
Well, I think I like the power strategy with Mr. Sanjeev Goenka had outlined in a recent interview. And I think they're going in a very structured manner about the entire power segment. I strongly believe that there is a paradigm shift in the power segment in India. And this is a structural change. And this is going to continue growing. And under that segment, they have a very well crafted strategy, which they are executing meticulously. So I like their power business and pretty much the components of power business. Of course, CESC being the largest, I do like CESC. The technology business of theirs, where they are talking about acquisition and growing that, again, is an interesting opportunity. We'll have to wait and watch how they take it forward. Some small acquisitions are happening, but that I don't think will take them very far. I will wait and watch as far as First Source is concerned. PCBL, again, I think it's a niche in which they are operating. Globally, particularly Europe is avoiding setting up carbon black plants, and a lot of demand is coming to PCBL from international markets. So again, it's a good segment to be in, and they are focusing on this. So I think that's also a good thing. And I completely agree with you that in the recent past, they have been very focused about their strategy and business. Of course, they have been splashing money on IPL as well, which I don't know whether that makes sense or will give them quick rewards or not. But otherwise, business segment-wise, they're doing pretty well.
Yeah, I mean, if they were a consumer company, Sudeep, then I would believe that IPL, Sanjeev Goenka's focus, he becomes the brand ambassador of that group at large, right? With the eyeballs that place gathers. Was very interesting as to what's happening with those set of stocks. So certainly keep them in mind, Harsh. Yes. PCBL in particular.
Yes, and Sudeep, while we're at it, Zaggle, if you can pull that one up, they've won a new order with HDFC. They're going to tie up with HDFC Bank for cards, locked in upper circuit as we speak. Of course, stock is flying away. But Sudeep, your quick thoughts, do you at all track this one?
I do, and Harsh, I must mention that we have been positively surprised when it got listed. I don't think, honestly, I had this kind of forecast or this kind of anticipation from this stock. They have done really well. They have got their strategy very clearly worked out. What I understand from sources is that they are working on multiple small acquisitions, which will spread their wings and complete their offering basket even further. So I have been watching this space. The valuation wise, I think it's a little rich. So I've not recommended a buy, but I'm watching this space. And undoubtedly the company is going to go places with all the tie-ups and smaller acquisitions, which they are doing as well as planning.
Right. Thanks so much, Sudeep, for that view coming through. Very interesting, Neeraj. This one in particular, they've guided for very strong growth. They've guided even with regard to acquisitions. They're going to try to acquire businesses in a similar cohort, in a similar segment where they haven't really been able to penetrate in terms of technology and add to their tech stack. The kind of growth numbers that Mr. Godkindi, who's the managing director at Zaggle, was speaking about, extremely strong, 50% growth on a compounded basis for the next 2 to 3 years, and margins to get better from 11-12% to go to 15-16% in just by FY 27-28. So very, very strong in terms of proposition.
One successful new listing. I mean, correct. It's a recent listing.
Correct.
12 or 18 months old.
But again, the question here, Neeraj, will be valuations. And let me bring in Hemen Kapadia from DR Choksey Finserv to talk to us about just that. Hemen, Zaggle, do you track it? How does it look on charts, and how should one view this one?
A very good afternoon to you, Harsh. Thank you for having me on the show.
Good afternoon, Hemen.
I don't track Zaggle very closely, but since you guys were discussing, I had a look. Rounding bottom, breakout, limited data, higher tops, higher bottoms, intermediate uptrend, short-term uptrend. Okay, there's a paucity of data, but whatever data we have, Harsh, it's an uptrend on all time frame. There was a brief period of consolidation between, let's say, between Feb and July. That's past us, all-time high. So further upside, very much on the card. Seems in fine fettle.
Hemen did not say always a pleasure. That's Hemen's patent. I was wondering if Hemen, you did thank Harsh, but did you say always a pleasure?
It's always a pleasure, Neeraj and Harsh.
That's Hemen Kavadia for you. Okay, Hemen, what about the Nifty strategy for the day today?
Okay, frankly speaking, I don't think it's very actionable, Neeraj. 2800 has been a resistance which was expected. We've come there, we've taken a breather. So, we're at 24,600. I suggest you sell the Nifty 2900 call and the Nifty, 24,900 call and the 24,300 call just for a couple of days because it's a consolidation in an uptrend. Nothing changes, everything is hunky-dory, Neeraj. But yeah, so it's sort of, we needed a cool off. It had moved a bit too sharply. That's what's happening. So 300 points up, 300 points below. Sell the calls and puts and for a couple of days and get the premium. Otherwise, it's not a short, it's not a long either, at least at this point in time. But I would be more comfortable going long on a decline, either rather than a short.
And Hemen, everything not hunky-dory. Nifty FMCG is not doing too well. So your views on the FMCG pack, the short build-up both on HUL and Dabur that I see. But how would you play this one? Even on Tata Motors, there's some short build-up.
Well, frankly speaking, Harsh, that is, I wouldn't say perplexing, but a bit disturbing because, frankly speaking, they were down for 9 weeks in a row, the Nifty FMCG index. Stocks like HUL had virtually fallen off a cliff, were making bases, and now that sort of got punctured today. So I guess that's not a good sign, and we're going to test the recent bottoms. I am not sure if the bottoms will hold. They might not. Currently, it's not a very conclusive view. If they don't, I think there's going to be further pain. Having said that, looking at the weightage and how HUL has fallen, market has been relatively resilient. And if we do break the recent lows, then probably the whole month will go for a toss, but we'll see a recovery in January. So as of now, I would say stay away. If you have positions, you need to take a hit. Not looking very pretty, but we could still hang on to the bottoms or lows, recent lows, and maybe just about stabilize. So let's take it one day at a time.
And Hemen, what do you do with the primary culprit here? You have Godrej Consumer down 9%. What if an investor has held Godrej Consumer? What should one do at this point?
Well, I'd say fortune favor the brave.
Okay.
Selling it after seeing a high of 1540 and selling it closer to 1100. Okay, we are at 1120 now. 1080 is very strong support. There's a major bearish gap which has come in today. I believe this gap will get covered in the current month itself. So at this point in time, after 1, 2, 3, 4, 5, 6, some 13 weeks of a decline, despite the price action, I'm not saying disregard it. If you have a position, it's going to hit you. I'd say stay put. 1080 is important. I believe that support could hold. I would say will, but you can't take the market for granted. I would say would hold 1080. I think it stabilizes over there. One needs to cool off. That should be the worst come for the timing. I would not sell at this point in time.
Okay. Right. So that's the take on FMCG. We've had a fairly detailed one. But let's talk about 3 stocks that are buzzing in trade. Varsha brings us details on the 3 key stocks buzzing. Varsha.
Thanks, Harsh. So yes, a few stocks which are in focus today on the base of news, starting with Star Health, wherein IRDAI has issued show cause notice to the company for violations found during the 2022 inspection. Now these violations relate to the business and operational aspects, and Star Health is actually preparing for a response stating that it has systems to ensure compliance with laws and regulations. Then we have Bondada Engineering, wherein they're considering fundraise of 185 crore via issuance of eligible securities. If I were to talk about the order book position, the order book stands at around 5,000 crores as of October 2024, which is at 3x versus 1,759 crore orders in FY24, and they're actually planning to enter into railway sectors, making it as big as other verticals. They're also introducing BESS and green hydrogen segments under renewable portfolio. So maybe for these growth prospects, maybe the company is raising funds. Then lastly, I have on my list is VRL Logistics, wherein they have purchased a leased transshipment hub in Bangalore for 229 crore, and the company has already used 27-acre property for over 10 years. And so this hub is actually crucial for South India operations, handling 3,000 tons daily for booking, storage and vehicle placement. And VRL Logistics believes that owning this hub will benefit long-term operations and allows for future capacity expansion.
Okay, thanks so much for that, Varsha. Let's go across. We also are joined by Siddharth Khemka, Head of Research at Wealth Management, Motilal Oswal Financial Services. Welcome, Mr. Khemka. Let me come straight to you. We have, on the one hand, a Paytm, which has, of course, had post a November 2021 listing, has had a roller coaster of a ride. And then you have a Star Health, having its set of issues, but not as much. But both are trading roughly 50% from their IPO prices. How should one play this?
Yeah, so definitely, I think if you look at the latest developments with regards to Paytm, I think at every step we are seeing a positive, you can say, impact on the overall business, right from the shareholding pattern which got cleaned up. Then they got the approval from for new client addition in the UPI format from the regulator. That was a big positive. They sold off the event management business, raised some cash. Now they are talking of selling the global business, the PayPal business stake that will again raise around 3,000 crores. So I think these are steps in the right direction for Paytm. The focus will be on managing or growing the core business. So we are definitely positive on the steps taken by Paytm in the right direction. So as I said, we continue to remain positive. We see business momentum to improve from here on in the core business plus the lending business, which got impacted after the RBI came in and put in some restrictions, which we believe would go away in the long term. That is the key growth area. The UPI payments, the soundbox, the lending to the MSMEs, that would be the core area for growth for Paytm going forward. Star Health overall, if you talk about the...
Siddharth, sorry I'm interrupting, but there's an important news flash and I would want your view there too. But here's the news flash. Last week, after being castigated for what seemed to be a very bad corporate governance decision, CE Infosystem board has decided to reverse the decision to make equity or debt investment in the proposed company formed by Rohan Verma. This... Now, remember, the decision taken last week was that they will make a subset, which will be the B2C company headed by Rohan Verma. The listed company will get 10% of those receivables. Very bad decision. We were talking about it all through and through as to why is it that the company needs to do something like this. They reversed the decision. Now, the stock is up 6% today. But if we just look at the extent of fall that has happened, duly warranted, of course, after what had transpired, this is still not recovered all of the lost ground. Pull up the 1-month chart and you will see that I'm sure despite this 7% uptick, the stock is way lower relative to what it was. Now, Siddharth, sorry for interrupting you, but this is an important news flash. What do you make of this? Once again, a victory of sorts of all the feedback that Mr. Market gave to a management decision.
Yes, I think, Neeraj, you would have seen several of such kind of decisions being reversed. Some of the management were smart enough to reverse in a day. I think here the management has taken the feedback, and I think there were several challenges, issues with regards to setting up a new business with your CEO and having a business linked to that. So it was really a lot of, you can say, corporate governance issues or the way it could have unfolded in forward. So I think this is a step in the right direction. Generally, we have seen companies or managements which take the market feedback, go back to what their focus is, to forgive them and to go back and give that kind of premium or multiple that they would have otherwise warranted. So I think that will take some time, but it is a step in the right direction.
Amen. An uptick there. Would you trade this baby?
Deeply oversold. Whatever positives that we are seeing are restricted to the intraday charts, and we're up 300 points in 4 days. I'd wait for it to come to sub 1700. Currently, it's neither a buy nor a sell, but definitely not a buy.
And Siddharth, I'm presuming that this reversal of the decision, would it make a buy for you, or has the case soured for you to leave this company alone?
So Neeraj, unfortunately, we don't have coverage.
You don't have coverage. Okay,
waiting there.
Okay, fair call. Sorry, I missed that. But okay, the stock is now up 9%, of course. This is a good move, by the way. Here's this. So the companies, this is also important. The company realizes that, okay, there is an error, either in what they were trying to communicate or actually in this case what they were doing, because it was out there, but realizing that the street has not liked it, taking the feedback, reversing the decision. It's 10.5% up now. I don't know the extent of the uptick that will come in today. It could well be 10%, it could well be 15%, it could well be 5%. I have no idea. But for now, the street is giving a thumbs up to the management, recognizing that there was a fault. They are correcting the fault, and the stock is duly reacting positively. I can understand Heyman doesn't want to get out on a trading call because it's very difficult to give a call purely on the charts on something that is so event based, as is the case with CE Info. But yeah, certainly a stock that you want to watch out for. Heyman, though, some stock recommendations from your end if you can.
Yeah, I think a couple of stocks, Dheeraj, which look interesting. Firstly is a buy call on Astral. It's a continuation from last week. Had a buy call then, almost at the target. But thing is, the medium-term setup has improved, Neeraj. The stock has formed a base. The mechanical indicators have given crossover buys. It's come up from 2450 to 1700. It's a bounce, and strong bounce nevertheless. So a buy call on Astral at 1850, stop loss of 1820, target of 1910. I think it's a modest target, should most probably get overshot. The other stock is Escorts Kubota. So I see that the auto index has formed a short-term bottom. Whether this gets converted into a medium-term bottom, we'll wait and see. But Escorts is deeply oversold, and more importantly, the 3400 level have been tested 3 or 4 times, Neeraj, over the past few weeks. It's held firm. So now we're going to see a bounce. So a buy on Escorts at around 3540. Stop loss of 3490, target of 3640. I believe we should be heading finally towards 3850 or so in the next 4 to 6 weeks, Neeraj.
Okay. Let's take a break on that note. Gentlemen, stay on. We'll take a break. Up next, some BTST ideas, some key brokerage notes, and some stock movers. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Welcome back. Thanks for staying with us here on India Market Close. Well, CDMO companies in focus. You have plenty of them seeing a bit of a cut in trade today. Something like a Newland Labs, Advice, all of which are facing some amount of pressure. Stocks have reacted. Reversal of the US Biosecure Act. Varsha joins us. Varsha, what's the impact going to be like on Indian pharma? Talk to us.
If you see in the last 2 to 3 months, Indian CDMO companies have done very well. The stock returns, if you see, have been 20 to 30% for DBs, for Suven Pharma, then for Laurus Lab in last 2 to 3 months. And one of the reasons was US Biosecure Act, which was supposed to ban 5 Chinese companies, and the impact would have been positive for Indian CDMO companies. But now the Biosecure Act has been removed from a key defense bill. Now the targeted companies, the 5 Chinese companies included BGI Genomics, Wuxi Aptat, and Wuxi Biologics. Now, on the first place, why was the act proposed? Now, the supporters argued that it was needed to stop China from misusing biological data for harmful purposes. Now, but why was the act dropped? Now, the lawmakers objected to blacklisting companies without a fair process, and they wanted clear rules for adding or removing such companies from the list. Now, if you see the impact of dropping this act, the act is now harder to pass, but does that mean that it will not be passed? Well, that is unclear, because supporters may try, to attach it to the other critical bills later as well. Now, if you see the potential impact for the Indians, for the Indian companies, the dropping of this could indirectly affect Indian companies like Divi's, Laurus Lab, Piramal Pharma, Syngene International that we are seeing. Why? Because all these companies were pegging on US Biosecure Act, at least for the short term. But for the longer term view, if you see, in spite of the US Biosecure Act, US companies are actually eyeing for China +1 opportunities, and Indian companies are best when it comes to Indian CDMO companies are best when it comes to CDMO opportunities that US companies are seeing. So I think this is the short-term phenomena that market has been pegging in. For long-term, yes, the opportunity still exists for the Indian companies.
Okay, thanks so much for that, Varsha. Siddharth, your view on this one? It's there's a bit of flip-flop here, but what's the sense like? Do you believe that this is an opportunity to actually go in and buy some of these names?
So I think there is definitely some negative sentiments with these news flows. The market was pricing in some benefits from the Biosecure Act, and that would have led to some more growth in the long term. But if it is not coming in the same form or not coming at all, I think that will definitely be a sentimental negative, especially for some of the CDMO companies. Having said that, if you look at some of these players, they have been gaining market share, driving their business very strongly. So our preferred pick, DV's Lab, within that space continues to do well with strong 27% earnings growth expected next year. This year, the earnings growth is expected to be around 28-30%. So we don't see much of impact to some of these players, but I think sentimentally in the near term, some of these stocks have moved up in anticipation of this Biosecure Act, and that will kind of nullify in the near term.
Himen, I understand that to a large extent it will be stock specific, but any names where you'd wager a trade among these, because any movement creates opportunity in that sense?
I'm slightly not sure on the individual stocks.
Right. So let me. Okay. So there's Newland Labs. There's something like a Divi's Labs. There's Syngene International, Laurus Labs. Just some of the names which get impacted due to this development.
Okay, I think I'll go with Laurus because I track it a bit, Harsh.
Right.
So it's okay. It's fallen off a cliff, but that's okay. We are in an established medium, and yes, in a longer term uptrend. So frankly speaking, this move was on from 475 to 590 odd. Harsh. Okay, you obviously needed a fundamental reason for it to correct, but I believe 550 is a decent support. It's not a very shorter term call, Harsh. So if I have a 3 to 4 month view, I would say closer to 550, I would be comfortable going long on the stock. I would probably keep a 30-point stop loss, not beyond that. Overall, the technical structure, despite, okay, it's one day we'll have to see the weekly close, we're the beginning of the week, blah, blah, blah. But despite what has happened today, and the market's also not yet over, the technical structure hasn't changed dramatically. I don't think one day's trade would. So I would say I would look at a price of something around 640, 4 months time frame, entry closer to 550, stop loss 30 point. I don't think stock looks bad. For me, it's a buy on decline.
Okay, we have a 103 crore order win also coming through. Vishnu Prakash R. Pungalia, 7% higher on the stock. A large part or some part of the gains, if I can call it, coming as a result of this 3% higher. Himen, quick view on this one because really need to move on.
Looks good. One can buy on declines. Setup is positive, Harsh.
Great. Okay, let me go across. Equirus has released a note on PG Electroplast. Brokerage initiates coverage on the stock. Buy rating. Puneet joins us to give us details on this one.
Well, thanks for that, Harsh. It's been a very interesting stock. It's given roughly about 200% returns. And there's a buy rating, 21% upside is what Equirus sees on PG Electroplast. They have a target price of 980 rupees per share. Now, what they mentioned is that, the industry is expected to grow at 35% CAGR for the electronics manufacturing services as a whole between FY23 and 28, and they see PG Electroplast being one of the biggest winners of this transaction. Now, they also said that it'll be one of the key things amongst the room air conditioner space that the company operates in. They're also expecting that the company's capacity as well as volumes have expanded more than 10 times between FY21 and FY24. Going forward, they see that the share of the low margin business also of the plastic molding, the share has come down from roughly about 70% in FY20 to just 25% now, and they're also increasing the penetration and products in the low penetration segments such as ACs, which has just 8% penetration in India, as well as washing machine that has 12% penetration in India, and that's roughly about 60% of the company's revenues. So going forward, the company also raised roughly 1,500 crores in QIP and should be one of the biggest beneficiaries of the India electronic manufacturing services space.
Okay, Siddharth Khemka, this one just going from strength to strength, and EMS as a space also doing very well. They've hiked their guidance both with regard to top line as well as they continue to do very, very well in terms of execution. Your view, also give us context on valuations, because with all of that comes also the question whether it's a good fundamental buy at this point from a medium to long term perspective.
Yeah, see, while we are very positive on the entire EMS space, we don't have a view or coverage on PG Electroplast. We believe that the EMS space in India, and you see a lot of, there are sub-segments within that. So there are players in the industrial segment, there are players in the defense segment, and then there are players in the general electric segment. And now finally, some of the players have managed or are trying to get into the semiconductor space, the likes of Keynes and CG Power. So I think within each segment, our top pick within the EMS space continues to remain Keynes Technologies with a very strong growth, almost 8% CAGR in terms of earnings over the next 2-3 years. And in terms of valuation, on FY26, the stock is at about 60 times. On FY27, the stock is at 40 times. So we still believe that in terms of growth and PEG ratio, we still have some room for upside in stocks like Keynes. The other stock that we have been liking is Dixon Tech. The company has been ramping up a lot of order book across businesses. They are adding more and more segments. Again, a stock where we are seeing at least 30% CAGR on FY 26 and 27, while the earnings are at about 30 to 40%. Valuation now at this level is a bit higher and does not leave much. You can say the risk reward may not be that favorable for fresh entry. Any decline in Dixon, one should definitely look to enter that kind of stock.
Okay. Siddharth, you were right in the middle of giving us your views on Star Health. Not the best performance post listing. Also, it's got this overhang now that's come through. Give us your views with regard to that one.
I think I was talking about the overall general insurance space, and in that, if you look at the health insurance space, that is something we have seen a lot of ups and downs over the past couple of years, especially after the COVID. But it is a space that we like. We believe that the penetration of health insurance in India will be going. We see significant growth opportunities there, and Star does provide that niche segment to play pure play health insurance. While our preferred pick in the entire space would be an ICICI Lombard General Insurance, which comes with the other businesses as well. There has been challenges in terms of Star, in terms of delivering, and there have been ups and downs. The management, the question marks on the management's ability to consistently deliver. So I would say that we like the space. If it consistently delivers, that can be a good play in the health insurance space. But right now, we would prefer ICICI Lombard General Insurance over Star Health.
Okay. And Siddharth, views with regard to the FMCG pocket. You're seeing slightly difficult commentary coming in. Godrej Consumer talking about it, and you're seeing a knock across counters within the FMCG space. Is this again an opportunity to buy? Would you reckon?
I think the consumption space definitely is witnessing a lot of pressure, and the management commentaries post to they definitely showed that. But now with the Q3 business updates coming in, I think the pressure would only continue for some time. Within the lot of sectors, while defensives would have been a better name for consumption, but that is emerging as a weak spot in the current environment. And the slowdown is expected to continue at least for 1 or 2 more quarters. So in that sense, I would say that someone who is looking from a near-term perspective, that is definitely an avoid. But in events like these, a long-term investor definitely gets a good entry opportunity. The rural segment has been raising its head, and there is some improvement there. The urban is where the bulk of slowdown is being witnessed. But we believe next year, post-budget, with the government spending coming back, the economy, again, we heard the RBI governor talking about the slowdown impacting 1 or 2 more quarters. So we'd see economic recovery also helping and supporting the consumption demand growth. So from a long-term perspective, I would believe that this is a good accumulation time because there is no structural change in the business. For some of them, it's just a slowdown which is cyclical, and we expect them to recover. Some of the preferred names within that, ITC has been our top pick because of its various business segments which are doing well. We also like Godrej Consumer, but again, from a near-term perspective, it could remain under pressure. But from a 2-year, 3-year perspective, I would believe that this is a good entry opportunity for a long-term investment.
Okay, sticking with consumption and flipping the spotlight to auto. According to FADA, auto retail sales have jumped around 11% in November, and two-wheeler demand has been strong, and that's been the driver. Passenger commercial vehicle sales have declined. Passenger and commercial vehicle sales have declined, and we spoke to CS Vigneshwar, who's the president of FADA, who believes that auto inventory is still at a higher level. Listen in to a slice of that.
The rural markets have been doing quite strongly this year. As I mentioned before, in the two-wheeler segment, last month, the urban contribution has actually gone down to about 35%, and you have rural contribute the rest, which is extremely strong numbers. And there's a sudden growth of nearly 10% because throughout the year, probably it was averaging at about 55% rural contribution, but in two-wheelers, suddenly last month it has gone up 10% more. This shows strongly that the rural market is doing well in terms of how the crops and other things have worked out there.
Right. Harsh, CET is in focus since morning today, and the stock has done pretty well. It signed an agreement with Michelin Group for CAMSO's off-highway construction equipment of tires and tracks business, and this has been acquired for around $225 odd million. Siddharth, I'll come to you for this one. Your view as to how CET is looking on charts?
So, not on charts, but fundamentally, I think this is a good business that they have acquired. Off-track business has a good long-term potential, and the brand that they have acquired from Michelin, I think this is a good acquisition for them. The acquisition also includes two Sri Lanka-based plants, as well as the global ownership of the CAMSO brand after a 3-year licensing period. So this is a premium brand in the construction tire equipment, and this is as I said, it's a right time for CET to enter into the space, which was mostly being dominated by Balkrishna Industries. So these segments, because of the niche business that they have a much higher margins, and with the industrial recovery expected over the next few years, we believe this is a good acquisition by CET from a long-term perspective.
Okay, Siddharth, what about something like a Borosil Renewables? We spoke with management. There's been, of course, a duty levy on imports, and therefore will help both pricing as well as volumes come through from Indian manufacturers, Borosil Renewables in particular. Constructive on the counter, and how do you look at the price? Because we've seen in the last month or so, we've seen a 21% run up in the stock price as well.
Unfortunately, Harsh, this is again another stock we don't track very actively.
Okay. Hemin, would you at all venture a trade in this one?
Harsh, yes, but I would venture it slightly from a positional point of view, because 435 to 580 in 7 trading sessions is a bit much. But interestingly enough, if you look at the longer term charts, Harsh, it's probably on the threshold of something big, I believe. We've been corrected since August 22, and we are now in the end of 24. That's almost 2.5 years. Harsh, and the setup is, I would say, at the risk of sounding overly optimistic, we're at 570 right now, Harsh. Probably in 12 to 15 months, we're going to be 800, if not more. Looks very interesting. The breakout comes in at 620. But the structure of the setup seems to indicate that we are on the cusp of starting a longer term move. So I would say it's a buy on declines. Once again, like I said, it's moved quite a bit in the very short term. So I'm not sure if it makes sense to chase it. But yeah, it's 580, closer to 520 or something. From a 1.5 year point of view, I think it's a screaming buy, Harsh.
Right, got it. So that's the view coming in on Borosil Renewables. Tata Power is another interesting counter. We did know your company, and we analyzed the SWOT analysis also for the company. In fact, its operational capacity right now is around 6.7 gigawatt, and around 10.1 gigawatt is already under construction. And renewables will be around 65% of its total, production going forward as well. So that's your view on Tata Power?
So I think the recent analyst meet, the company clearly highlighted for the 2x increase in the EBITDA and PAT to 300 billion and 100 billion by FY30, with the renewable share going up almost from 21% currently to 50%. I think that's a very nice step in the right direction, with the market being focused more on renewables. I think with 50% profitability coming from renewables, that is a very positive commentary coming from the government, from the Tata Power. The company aims to expand its green capacity to 23 gigawatt by FY23, ramp up the cell and module production. That is another positive commentary that we heard from the management, talking about getting into the manufacturing of cells and modules, which they expect to ramp up to 4 gigawatt by FY26, double the T&D capacity. So overall, I think the company is set up its 5-year investment plan and its ambitious green energy expansion. That should be positive, and we have a buy rating and a target price of 510.
Okay. That's Tata Power's views coming through for you. We have the company, let's go to management commentary here. Company commissioned its new solar module and cell plant in Tamil Nadu. In an exclusive conversation with my colleague Mihika Barve, the CEO and MD Praveer Sinha talks about what are their plans with regard to the plant going forward, and what can we expect from Tata Power going forward. Listen in.
Our target is that we will have 10 to 11 megawatt of module production every day, and similarly in our cell also similar range. We should have about 97% of yield from these plants, and efficiency of the cell should be in the range of 23%. So I think we are very close to these targets. Our module today is producing around 11. Our cell plant, we have started the first 2 gigawatt, is already producing 4 megawatt per day, and it will get ramped up to 5 in next few days. Similarly, the second 2 gigawatt was commissioned in this week, and we expect that by end of the month it will reach a capacity of 5 megawatt. So I think we are doing very good. This is one of the fastest ramp up that has happened, and this is because we have a operating plant in Bangalore where we produce both cell and module, and that has helped us to achieve these levels.
Another counter that is in focus today is Lloyds Metals. The company is set to enter into mines development and operation business. This is one of the 2 updates that have come out on Lloyds Metals, and the business will involve exploration, development and operation of mines for extraction of minerals. But one of another reasons why the stock is zooming in trade today, it's up around 4% as we speak, is because InCred Equities has come out with an ad rating and a target price of 1476 on this particular counter. What they're saying is that iron ore Richie is hit by flawed policies and unavailable bidding practices. India to face iron ore deficit despite the cooperating at full capacity, and Lloyds Metal will be a direct beneficiary of rising iron ore prices. They project a 76% EPS CAGR over FY24 to 27 estimates, and mine extension to 2055 forward integration plan to drive EPS CAGR. They have also mentioned certain downside risks, which include volatility in the iron ore and steel prices as well. But Siddharth, this kind of risk cannot be ruled out completely. But your view as to how things will pan out for Lloyds Metals?
Again, sorry, we don't track Lloyds Metals, so I will not be able to comment on this one.
On how does Lloyds Metal look on charts at present? Is it the right time to enter? Hemant, can you hear me?
Yeah, I think it doesn't look bad, but it's moved up from 908 or so. We're at 1100. So frankly speaking, 200 points in a matter of just, this is the 4th week, and this is the beginning of the 4th week. So setup is fine, higher tops, higher bottoms, in an uptrend on all time frames, daily, weekly, monthly, established move. But I would probably wait for a small cool off to come in, because there was a range, there was a consolidation, it made a base. If this move has been quick, I'm not sure we'd be able to justify it on a risk reward ratio. But yeah, the setup is clearly positive. I'd be slightly reticent about going long at current levels, but on a small decline, yes.
Okay, Hemant, BTST, STBT trades, it's 320.
Okay, a BTST on Max Financial Services, MFSL. It's broken out of a 30-hour consolidation phase on the intraday charts, and the setup is looking positive, and it's also overcome the 55-day exponential moving. Long story short, BTST at 1185, stop loss 1177, target 1201.
Okay. Siddharth, if I can quickly take your views with regard to jewelry stocks, because very interesting note put out by Motilal earlier today on PN Gadgil. Target price 950, 24% upside. Believes that company is focusing with regard to becoming the leading jewelry retailer in Maharashtra. Better product mix, especially with regard to studded. Market share currently is under-penetrated at 8%. With all competition coming in, what gives you the comfort, Siddharth, with regard to this one and calling it out and 24% upside? And within jewelry, is this the best play in your view?
Yeah, so I think if you look at, we have been positive on the entire jewelry space in terms of the market penetration, the unorganized to organized, and the large market share gains by the large format nationalized players, where Titan has been consistently delivering. What we also saw is that some of the regional players now getting into the space and coming up with a lot of competition to the likes of Titan. So, for example, Kalyan Jewelers, which is our top pick within the space, has been outpacing in terms of growth, in terms of expansion. Its same-store sales growth is about 15%. Overall growth has been in terms of 30%, while Titan has been growing at about 15-20%. So we like PN Gadgil because of the aggressive expansion plans that they have within the Maharashtra and the nearby neighboring cities, states. So they plan to almost more than double the store count from 48 to 80 by FY27, largely using the IPO proceeds plus some debt reduction. Increasing growth of studded would also help, and valuation comfortable compared to some of the peers. So that gives us a view that with the strong growth and the increasing penetration from some of these players in the organized space would drive the valuation, and hence we have a buy rating with a target price of 950.
So that's the view coming in all the jewelry stocks. I mean, Tribhuvan Das, if you can pull up that stock, it's up 4.5% in trade today. Senco is also doing very well in trade today. Some counters which are in green. Titan seeing some pressure, but overall the picture looks positive going forward. But Siddharth, another set of stocks that are in focus today is the textile stocks. Bangladesh government has decided to sell or lease units of Beximco Group. And this group is basically a large private sector, involved in the retail space. It's facing severe liquidity crisis. They have decided to, either hive off, sell off, or lease around 32 of their companies out of 169. And out of these 32 companies as well, 16 of these companies are textile companies. So this probably poses a very big positive shift towards Indian exporters and Indian companies which are into merchandise. And this could probably include KPR Mills, Arvind Fashion, Gokuldas Exports, as well as SP Apparels, and some other counters that you feel would probably benefit from this, and your take on this entire shift.
Sure, I think the turmoil that is going on in Bangladesh, that will definitely help the Indian textile exporters, manufacturers to gain market share. The cost advantage that they have vis-a-vis India, that is coming down. They also enjoyed a lot of tax benefits which India did not get, and hence they become more competitive. Now with their supply chain disruption, I think the global buyers are seeing the risk of having too much concentration into Bangladesh, and hence we believe that Indian textile companies would benefit the way we saw the Indian chemical companies benefiting from China Plus One strategy that played out over the last few years. So you will also have some of the terry towel companies which are large exporters out of India, the home textile companies, some of the garment exporters, the likes of Trident, Wellspun Living, Vardhaman Textiles, KPR Mills. I think these are the set of companies that will initially benefit from the shift of business out of Bangladesh, incrementally shift from Bangladesh to other countries, including India, where we have a good supply of cotton, because these are the cotton producing countries, and hence good control over the entire supply chain.
Okay. Quickly on to what to watch out for. We've got a packed week going forward, especially on the macro front. But before I come to the week, let's talk about tomorrow in particular. You have US wholesale inventory which is going to come through. In Japan, you've got GDP, balance of payment, account balances, etc. And in China, you have your inflation data along with import-export trade balances. So all of that, obviously on the macro front, will dominate headlines till tomorrow. But beyond that, it's that week where it's an inflation-heavy week in terms of data. You have US inflation, both core as well as CPI, which will come through, giving you some indication possibly as to what the Fed will do. You also have India inflation numbers expected at some point of time later in the week. So you'll have to keep your eye out on both of those macros. Siddharth, just talk to us about what's the best way in your view currently to play the market. What's the sector space pocket which you're finding best in terms of risk reward valuation wise?
Yeah, definitely. I think if you look at the overall global backdrop as well as the Indian macro setup, I think one sector that clearly stand out is the tech or the technology space. We are seeing good recovery in demand with the Fed cutting rates as well as the expected corporate tax cut by Trump early next year. I think the discretionary spends on the technology front will go back and recover, helping our Indian companies to see stronger revenue build. To add to that, we are seeing a rupee at all-time low. That is also supporting the overall sentiments plus the incremental revenue booking on the rupee front. Valuation-wise, I think some of the large cap IT names are still very much under comfortable valuations. The likes of HCL Tech, where we see a good growth, but valuations below their 10-year average. Mid-cap IT or the tier 2 ITs, they consistently have done well, delivered in terms of growth, but valuation-wise also, they are trading at a premium to large caps. Hence, the upside could be limited, but the momentum could continue. What we like is Coforge, Persistent, where they are consistently delivering in terms of strong quarters earnings as well as good growth in profitability.
Okay, thank you so much, Siddharth. Thank you so much, Hemant, for joining us this afternoon, giving us all of those views. But we're a minute from close. Quickly on to where the Nifty is. We've traded largely in a tight band. Let's see how we're closing off. Can we have the intraday, please, if we can? We've stayed steady around the 120-25 point band on the Nifty. In terms of the advanced decline, if we can, FMCG stocks dominating headlines on the lower side of things. And if we can have also the heat map largely 1:1 where the index itself is concerned. A large part of the names at the bottom, FMCG names. The top is largely a mixed bag, but some heavyweights chipping in. You have an HDFC Bank doing well where the index is concerned, Kotak, HDFC Life, some financials doing well, SBI Life as well, L&T doing well for itself, 2.25% higher. But what's the situation in broader markets, Mahima?
Absolutely. Let's pull up the mid-cap 150 and small-cap 250. Well, mid-cap 150 is hovering around 0.4% higher and the small-cap 250 is seeing around 0.3% higher gains. So the picture is slightly better as compared to the benchmarks in the broader market. But 10 plus
sessions in the green.
Yeah, absolutely. So
what's there to complain about,
absolutely,
frankly?
Absolutely. So let's also pull up the NSE 500 and see what are the counters that are doing well. There you go. There's C Infosystems up 16%. IT up 15.5%, Trident up 10%, CEAT up 7.6%. But some counters that have really seen the pain in trade today is Godrej Consumer after its mid-quarter update, Syngene International down around 4.8%, Aegis Logistics down around 4.5%, Star Health down around 4%. So even Tata Consumer on the back of how Godrej commentary has come out, also seeing the pressure in trade and down around 4%. So that's how, the broader markets have panned out, Harsh.
Well, yes, FMCG, textiles, especially dominating along with CDMO players. That's what's really dominating this pile. CE Infosystems and some specific movers like CEAT also dominating the news today. But with that, from Mahima, Neeraj, myself, everyone who puts the show together, thanks so much for watching. Let's cut across. The Prime Minister is talking live. We'll, of course, continue our coverage on the other side.
कोटि कोटि हमारी माताएं बहनें हैं, हमारी नारी शक्ति है, वही हमारी प्रेरणा की स्रोत रहने वाली है। आज जो ये महिला सेल्फ हेल्प ग्रुप है, बीमा सखी है, बैंक सखी है, कृषि सखी है, ये विकसित भारत का बहुत बड़ा आधार स्तंभ बनेगी। साथियों, नारी को सशक्त करने के लिए बहुत आवश्यक है कि उन्हें आगे बढ़ने के खूब अवसर मिले, उनके सामने से हर बाधा हटे। जब नारी को आगे बढ़ने का अवसर मिलता है तो वो देश के सामने अवसरों के नए द्वार खोल देती है। लंबे समय तक हमारे देश में ऐसे अनेक काम थे जो महिलाओं के लिए वर्जित थे। वहां महिलाएं काम कर ही नहीं सकती थी। भाजपा की हमारी सरकार ने बेटियों के सामने से हर बाधा को हटाने की ठानी। आज आप देखिए, सेना के अग्रिम मोर्चों में बेटियों की तैनाती हो रही है। हमारी बेटियां अब बड़ी संख्या में फाइटर पायलट बन रही है। आज पुलिस में भी बड़ी संख्या में बेटियों की भर्ती हो रही है। आज बड़ी बड़ी कंपनियों को और उसकी कमान हमारी बेटियां संभाल रही है। देश में किसानों के, पशुपालकों के 1200 ऐसे उत्पादक संघ या सहकारी समितियां हैं जिनका नेतृत्व महिलाएं कर रही है। खेल का मैदान हो या पढ़ाई का, बेटियां हर क्षेत्र में बहुत आगे चल रही है। गर्भवती महिलाओं की छुट्टी को बढ़ाकर 26 हफ्ते करने का भी लाभ लाखों बेटियों को मिला है। साथियों, कई बार जब हम किसी खिलाड़ी को मेडल पाकर गर्व से घूमते देखते हैं तो ये भूल जाते हैं कि उस मेडल को पाने के लिए उस खिलाड़ी ने, उस बेटी ने बरसों तक कितनी मेहनत की है। कोई एवरेस्ट पर तिरंगे के साथ फोटो खिंचवाता है तो उस खुशी में हम ये भूल जाते हैं कि वो व्यक्ति कितने वर्षों के संघर्षों के बाद एवरेस्ट की ऊंचाई पर पहुंचा है। आज यहां जिस बीमा सखी कार्यक्रम की शुरुआत हो रही है उसकी नींव में भी बरसों की मेहनत है, बरसों की तपस्या है। आजादी के 60-65 सालों बाद भी अधिकतर महिलाओं के पास बैंक खाते नहीं थे, यानी पूरी बैंकिंग व्यवस्था से ही महिलाएं कटी हुई थी। इसलिए हमारी सरकार ने सबसे पहले माताओं बहनों के जनधन बैंक खाते खुलवाए और आज मुझे गर्व है कि जनधन योजना से 30 करोड़ से ज्यादा बहनों बेटियों के बैंक खाते खुले। क्या आपने कभी सोचा है अगर ये जनधन बैंक खाते ना होते तो क्या होता? जनधन बैंक खाते ना होते तो गैस सब्सिडी के पैसे सीधे आपके खाते में न आते, कोरोना के समय मिलने वाली मदद न मिली होती, किसान कल्याण निधि के पैसे महिलाओं के खाते में जमा न हो पाते, बेटियों को ज्यादा ब्याज देने वाली सुकन्या समृद्धि योजना का लाभ मिलना मुश्किल होता, अपना घर बनाने के लिए पैसे बेटियों के खाते में सीधे ट्रांसफर न होते, रेहड़ी पटरी लगाने वाली बहनों के लिए बैंक के दरवाजे बंद ही रहते और मुद्रा योजना से करोड़ों बहनों को बिना गारंटी का लोन भी मिलना मुश्किल होता। महिलाओं के पास अपने बैंक खाते थे, इसलिए वो मुद्रा लोन ले पाई, पहली बार अपने मन का काम शुरू कर पाई। साथियों, गांव-गांव में बैंकिंग सुविधाएं पहुंचाने में हमारी बहनों ने ही बड़ी भूमिका निभाई है। आप कल्पना कर सकते हैं, जिनके बैंक खाते तक नहीं थे, वो अब बैंक सखी के रूप में गांव के लोगों को बैंकों से जोड़ रही है। बैंक में कैसे बचत होती है, कैसे लोन मिलता है, ये सब कुछ लोगों को सिखा रही है हमारी माताएं बहनें। ऐसी लाखों बैंक सखियां आज गांव में सेवाएं दे रही है। साथियों, बैंक खाते की तरह ही कभी महिलाओं का बीमा भी नहीं होता था। आज लाखों बेटियां, उनको बीमा एजेंट, बीमा सखी बनाने का अभियान शुरू हो रहा है। यानी जिस सेवा का लाभ पाने से कभी वो वंचित रही, आज उसी सेवा से दूसरे लोगों को जोड़ने का जिम्मा उन्हें दिया जा रहा है। आज बीमा जैसे सेक्टर के विस्तार का नेतृत्व भी एक प्रकार से अब महिलाएं ही करेंगी। बीमा सखी योजना के तहत 2 लाख महिलाओं को रोजगार के अवसर देने का लक्ष्य है। बीमा सखी कार्यक्रम के माध्यम से 10वीं पास बहनों बेटियों को ट्रेनिंग दी जाएगी, उन्हें 3 साल तक आर्थिक मदद भी दी जाएगी, भत्ता दिया जाएगा। बीमा के सेक्टर से जुड़ा डेटा बताता है कि एक LIC एजेंट हर महीने औसतन एवरेज 15,000 रुपये कमाता है। इस हिसाब से देखें तो हमारी बीमा सखियां हर वर्ष 2.25 लाख रुपये से अधिक कमाएगी। बहनों की ये कमाई परिवार को अतिरिक्त आय देगी। साथियों, बीमा सखियों के इस काम का महत्व सिर्फ इतना ही नहीं है कि उन्हें हर महीने हजारों रुपया कमाई होगी। बीमा सखियों का योगदान इससे कहीं अधिक होने वाला। विकसित होते हमारे देश में इंश्योरेंस फॉर ऑल हम सभी का ध्येय है। ये सोशल सिक्योरिटी के लिए, गरीबी को जड़ से मिटाने के लिए अति आवश्यक है। आज बीमा सखी के रूप में आप जिस भूमिका में आ रही है, उससे इंश्योरेंस फॉर ऑल उस मिशन को बल मिलेगा। साथियों, जब व्यक्ति के पास बीमा की ताकत होती है तो कितना लाभ होता है, इसके उदाहरण भी हमारे सामने हैं। सरकार प्रधानमंत्री जीवन ज्योति बीमा और प्रधानमंत्री सुरक्षा बीमा योजनाएं चला रही है। इसके तहत बहुत ही कम प्रीमियम पर 2-2 लाख रुपए तक का बीमा कराया जाता है। देश के 20 करोड़ से ज्यादा लोग जो कभी बीमा के बारे में सोच भी नहीं सकते थे, उनका बीमा हुआ है। इन दोनों योजनाओं के तहत अभी तक करीब 20,000 करोड़ रुपए की क्लेम राशि दी जा चुकी है। आप कल्पना कीजिए, किसी का एक्सीडेंट हुआ, किसी ने अपने स्वजन को खोया, उस मुश्किल परिस्थिति में ये 2 लाख रुपए कितने काम आए होंगे। यानी बीमा सखियां देश के अनेक परिवारों को सामाजिक सुरक्षा का कवच देने जा रही है, पुण्य का काम करने जा रही है। साथियों, भारत में पिछले 10 साल में ग्रामीण महिलाओं के लिए जो क्रांतिकारी नीतियां बनी, जो निर्णय लिए हैं, वो वाकई स्टडी का विषय है। बीमा सखी, बैंक सखी, कृषि सखी, पशु सखी, ड्रोन दीदी, लखपति दीदी, ये नाम भले ही बड़े सहज से लगते हो, सामान्य लगते हो, लेकिन ये भारत का भाग्य बदल रहे हैं। खास तौर पर भारत का सेल्फ हेल्प ग्रुप अभियान महिला सशक्तिकरण की ऐसी गाथा है जिसे इतिहास में स्वर्ण अक्षरों में लिखा जाएगा। हमने महिला सेल्फ हेल्प ग्रुप को ग्रामीण अर्थव्यवस्था में परिवर्तन लाने का बड़ा माध्यम बनाया। आज देश भर की 10 करोड़ बहनें सेल्फ हेल्प ग्रुप से जुड़ी हैं। उनसे जुड़कर महिलाओं की कमाई हो रही है। बीते 10 साल में हमने सेल्फ हेल्प ग्रुप की महिलाओं को 8 लाख करोड़ रुपए से ज्यादा की मदद दी है। साथियों, मैं देश भर में सेल्फ हेल्प ग्रुप से जुड़ी बहनों से भी कहूंगा, आपकी भूमिका असाधारण है, आपका योगदान बहुत बड़ा है। आप सभी भारत को दुनिया की तीसरी बड़ी आर्थिक ताकत बनाने के लिए काम कर रही है। इसमें हर समाज, हर वर्ग, हर परिवार की बहनें जुड़ी हैं। इसमें सबको अवसर मिल रहे हैं। यानी सेल्फ हेल्प ग्रुप का ये आंदोलन सामाजिक समरसता को, सामाजिक न्याय को भी सशक्त कर रहा है। हमारे यहां कहा जाता है कि एक बेटी पढ़ती है तो 2 परिवार पढ़ते हैं। वैसे ही सेल्फ हेल्प ग्रुप से सिर्फ एक महिला की आय बढ़ती है, इतना ही नहीं है। इससे एक परिवार का आत्मविश्वास बढ़ता है, पूरे गांव का आत्मविश्वास बढ़ता है। इतना काम, इतना बड़ा काम आप सभी कर रहे हैं। साथियों, मैंने लाल किले से 3 करोड़ लखपति दीदी बनाने की भी घोषणा की है। अभी तक देश भर में 1 करोड़ 15 लाख से अधिक लखपति दीदी बन चुकी है। ये बहनें हर साल 1 लाख रुपए से अधिक की कमाई करने लगी है। सरकार की नमो ड्रोन दीदी योजना से भी लखपति दीदी अभियान को बल मिल रहा है। हरियाणा में तो नमो ड्रोन दीदी की बहुत चर्चा है। हरियाणा चुनाव के दौरान मैंने कुछ बहनों के इंटरव्यू पढ़े थे। उसमें एक बहन ने बताया कि कैसे उसने ड्रोन पायलट की ट्रेनिंग ली, उनके ग्रुप को ड्रोन मिला। उस बहन ने बताया पिछले खरीफ सीजन में उनको ड्रोन से स्प्रे करने का काम मिला। उन्होंने लगभग 800 एकड़ खेती में ड्रोन से स्प्रे दवा का छिड़काव किया। आप जानती हैं उनको इससे कितना पैसा मिला? इससे उनको 3 लाख रुपए की कमाई हुई। यानी एक सीजन में ही लाखों की कमाई हो रही है। इस योजना से ही खेती और बहनों का जीवन दोनों बदल रहा है। साथियों, आज देश में आधुनिक खेती, प्राकृतिक खेती, नेचुरल फार्मिंग, इसके बारे में जागरूकता बढ़ाने के लिए हजारों कृषि सखियों को ट्रेनिंग दी जा रही है। करीब 70,000 कृषि सखियों को सर्टिफिकेट मिल भी चुका है। ये कृषि सखियां भी हर वर्ष 60,000 रुपये से अधिक कमाने का सामर्थ्य रखती है। ऐसे ही 1.25 लाख से अधिक पशु सखियां आज पशुपालन को लेकर जागरूकता अभियान का हिस्सा बनी। कृषि सखी, पशु सखी, ये भी सिर्फ रोजगार का माध्यम नहीं है, आप सभी मानवता की भी बहुत बड़ी सेवा कर रही है। जैसे मरीज को नई जिंदगी देने में नर्स का बहुत बड़ा योगदान होता है, वैसे ही हमारी कृषि सखियां आने वाली पीढ़ियों के लिए धरती माता को बचाने का काम कर रही है। ये प्राकृतिक खेती के लिए जागरूकता फैलाकर मिट्टी की, हमारे किसानों की, धरती माता की सेवा कर रही है। इसी प्रकार हमारी पशु सखियां भी पशुओं की सेवा से मानव सेवा का बहुत पुण्य काम कमा रही है। साथियों, हर चीज को राजनीति के वोट बैंक को उस तराजू पर तोलने वाले लोग आजकल बहुत हैरान परेशान हैं। उनको समझ ही नहीं आ रहा है कि चुनाव दर चुनाव मोदी के खाते में माताओं, बहनों, बेटियों का आशीर्वाद बढ़ता ही क्यों जा रहा है। जिन लोगों ने माताओं, बहनों को सिर्फ वोट बैंक समझा और चुनाव के समय घोषणाएं करने की ही राजनीति की, वो इस मजबूत रिश्ते को समझ भी नहीं पाएंगे। आज माताओं, बहनों का इतना लाड़ प्यार मोदी को क्यों मिलता है, ये समझने के लिए उन्हें बीते 10 वर्षों के सफर को याद करना होगा। 10 साल पहले करोड़ों बहनों के पास एक अदद शौचालय नहीं था। मोदी ने देश में 112 करोड़ से अधिक टॉयलेट बनाए। 10 साल पहले करोड़ों बहनों के पास गैस कनेक्शन नहीं था। मोदी ने उन्हें उज्ज्वला के मुफ्त कनेक्शन दिए, सिलेंडर सस्ते किए। बहनों के घरों में पानी का नल नहीं था, हमने घर घर नल से जल पहुंचाना शुरू किया। पहले कोई प्रॉपर्टी महिलाओं के नाम नहीं होती थी, हमने करोड़ों बहनों को पक्के घर की मालकिन बना दिया। कितने लंबे समय से महिलाएं मांग कर रही थी कि उन्हें विधानसभा और लोकसभा में 33% आरक्षण दिया जाए। आपके आशीर्वाद से इस मांग को पूरा करने का सौभाग्य भी हमें मिला। जब सही नियत से ऐसे ईमानदार प्रयास होते हैं, तभी आप बहनों का आशीर्वाद मिलता है। साथियों, हमारी डबल इंजन सरकार किसानों के कल्याण के लिए भी ईमानदारी से काम कर रही है। पहले 2 कार्यकाल में हरियाणा के किसानों को एमएसपी के रूप में 1.25 लाख करोड़ रुपए से अधिक मिला है। यहां तीसरी बार सरकार बनने के बाद धान, बाजरा और मूंग किसानों को एमएसपी के रूप में 14,000 करोड़ रुपए दिए गए हैं। सूखा प्रभावित किसानों की मदद के लिए भी 800 करोड़ रुपए से अधिक दिए गए हैं। हम सब जानते हैं, हरियाणा को हरित क्रांति का अगुवा बनाने में चौधरी चरण सिंह विश्वविद्यालय ने बड़ी भूमिका निभाई है। अब 21वीं सदी में हरियाणा को फल और सब्जी के क्षेत्र में अग्रणी बनाने में महाराणा प्रताप विश्वविद्यालय का रोल अहम होगा। आज महाराणा प्रताप बागवानी विश्वविद्यालय के नए कैंपस का शिलान्यास हुआ है। इससे इस यूनिवर्सिटी में पढ़ रहे नौजवानों को नई सहूलियत मिलेगी। साथियों, आज मैं हरियाणा के आप सभी लोगों को, सभी बहनों को फिर से भरोसा दे रहा हूं कि राज्य का तेजी से विकास होगा। डबल इंजन की सरकार तीसरे कार्यकाल में 3 गुनी तेजी से काम करेगी और इसमें यहाँ की नारी शक्ति की भूमिका इसी तरह लगातार बढ़ती रहेगी। आपका प्यार, आपका आशीर्वाद यूं ही हम पर बना रहे। इसी काम के साथ फिर से सभी को बहुत बहुत बधाई, बहुत बहुत शुभकामनाएं। मेरे साथ बोले भारत माता की, भारत माता की, भारत माता की। बहुत बहुत धन्यवाद।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on
Nifty Sensex fall for second session after a day of choppy trade. Most sectoral indices end in red. FMCG sector drags the most. Nomura calls the Adani Group the most attractive among investment-grade corporates, sees no signs of stress across the group, and says that the group can weather this rainstorm. Retail car sales come off a cliff in the aftermath of festive demand. Number of car registrations fell 13.72% year-on-year, according to November's FADA data. In a setback to the government's infra development plans, more than 40 road projects worth over 40,000 crore rupees are stuck due to the NHAI's inability to secure land for projects. This is an NDTV Profit exclusive. Investors led by People Activism Forum approached the Delhi High Court over delay in regulatory approval for the NSE IPO, urges SEBI to take action. First test flight lands at Noida's Jewar Airport ahead of its opening in 2025. Trial runs to continue till the 15th of December. China's top leaders changed their stance on monetary policy for the first time in 14 years. Politburo policy-making body of Communist Party say that they would implement more proactive fiscal policy. President Bashar al-Assad is granted asylum in Russia by President Putin. Celebrations erupt across Syria as rebels take control of Damascus, with crowds declaring the city free. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, Nifty Sensex fall for second session after a day of choppy trade. Most sectoral indices ended in the red. FMCG sector dragged the most. Harsh is joining us with a wrap of all the action on the bourses.
Well, the Nifty traded in a tight band, just about 120 points from the high point to the low point of the day. It was a tough day of trade, largely the drag coming in from the financials. The banks were slightly lower, and you also saw softness in the FMCG space, given the fact that you had commentary coming in from GCPL, which wasn't entirely encouraging at all. And therefore, you saw cuts in the FMCG space. In fact, out of the top 5 Nifty losers, you had 3 FMCG stocks in those names. L&T, on the other hand, was the one that stood out, 2% plus higher. You also had something like an SBI Life doing well in trade. So some of the insurance names, along with the heavyweight HDFC, in some form or shape insulated the impact from everything that was happening in FMCG. In the broader markets, well, it continues to be a strong market where the broader market indices are concerned. There's Nifty small cap and mid cap now up for over 10 sessions on the trot. They continue to do very well. We closed higher, around 1/3% or 0.5%, both on the Nifty small cap as well as on the Nifty mid cap. So good positive cues coming from there. In terms of sectors, we did touch upon them. FMCG slightly impacted. You had also certain names within the textile stocks which were impacted because of the Bangladesh issue, and so some of those stocks were doing well. Something like a Gokaldas did fairly well in trade, and you had CDMO stocks being impacted because of the US Biosecure Act getting in some form or shape diluted, and you had some of the CDMO stocks doing badly in trade as well. So something like a Divis Labs was also down. Broadly, that's how it played out. Those were the key themes. C Infosystems, the BSE 500 top gainers, top losers will reflect some names on the back of specific news, a CAT, C Infosystems, all of which were buzzing in trade as well.
Thanks for that. Now, viewers, earlier we also spoke to Prashant Khemka, founder of White Oak Capital Management, about the stance on current markets and his top sectoral picks.
From a domestic India perspective, the sentiment, investor sentiment particularly, was after the central elections in June, a little bit of I won't say a big setback or something, but was no longer as confident following the June elections. And that confidence, I believe, has resurfaced or is resurfacing following the recent state election outcome. Because not that state election outcomes themselves are important, but to the extent that they are an indicator for the mood of the population at this time towards the central disposition, I think it is a positive outcome from the market's perspective. So both these, I think, do present a firmer backdrop for the equity markets as we head into the next year.
Moving on, Nomura hails Adani Group as the most attractive among investment-grade corporates and sees no signs of stress across the group. Harsh joins in. Harsh, why is Nomura so positive on Adani Group?
With regard to where Adani Group is concerned, and what Nomura is saying is it's the most attractive investment-grade corporate currently. Why is that so? Let's try and unpack this a little bit. One, they believe that financially, in terms of both fundamentals as well as asset quality, the group is quite sound in that sense. the group debt leverage, according to them, and we're quoting them here, is manageable. Second, they believe that within the Indian corporate landscape, with regard to investment grade corporates, the larger landscape looks expensive versus the Adani group, and therefore they are constructive on the Adani group. Third one, compared to earlier, the group's liquidity management awareness has improved meaningfully, and that they believe is a sea change versus the past, and that of course changes their position with regard to how they view the group. Fourth, global banks, they believe, might halt new financing, but even if they do, what they are saying is, if the new financing is halted, it is going to be short term in nature, and gradually it will resume in terms of financing. Even global banks will resume financing. More importantly, the Japanese banks, the big three Japanese banks, continue their relationship with the Adani group, and that they've marked out and said is an important metric to look out for. Fifth one, indictment will not breach any anti-corruption covenants within lender agreements, and therefore the event of default clause in a lot of these agreements will not get triggered. And that has been reported by media outlets, and they believe that there is enough comfort that they will not get triggered. Last off, they're not worried about the promoter share pledge, and that they believe is again a change versus the past, and they believe the steep volatility in the stocks therefore should not impact the group as a whole.
Right, Harsh. Now, Adani Group also aims to invest around 7.5 lakh crore rupees in Rajasthan over the next 5 years. This will be across various sectors, said Karan Adani, MD of Adani Ports and SEZ, while speaking at the Rising Rajasthan Global Investment Summit 2024.
The Adani Group plans to invest over rupees 7.5 lakh crores across various sectors of the state economy, with over 50% of this investment being made over the next 5 years. Let me elaborate. We plan to build the world's biggest integrated green energy ecosystem involving 100 gigawatts of renewable energy, 2 million tons of hydrogen, and 1.8 gigawatts of pump hydro storage. These investments will turn Rajasthan into an oasis of green jobs. Beyond energy, Rajasthan is critical to our ambition to become India's largest cement company. We will set up 4 new cement plants to build additional capacity of 6 million tons per annum in the state. In addition, there are other investment plans such as developing a world-class facility at Jaipur Airport, multimodal logistics parks, and ICDs that will support your transformative plan for Rajasthan.
Viewers, now let's put the spotlight on the FMCG sector. Several stocks traded under pressure on the back of Godrej Consumer's mid-quarter update, which has failed to impress the street. Mahima is joining us with more details on what's hurting the FMCG trends.
Well, yes, FMCG companies have seen a lot of pressure in trade today. Now, this is majorly because Godrej Consumer came out with its mid-quarter update where it said that 2/3 of the Indian business is being impacted, and this is because the Indian revenue they'll see a mid-single-digit value growth versus that of flat volume growth, and EBITDA margins will be below normative range of 24 to 27%. And this is because due to a lot of factors. First off, the skyrocketing palm oil prices and overall prices of raw materials, which is hurting the FMCG margins. The palm oil prices have risen around 26% in the past 3 months and 48% YTD. Now, this is majorly impacting the margins of major FMCGs like HUL, Nestle, Colgate and Godrej Consumers. Volumes have also not been very impressive for these staples. HUL has seen a moderate volumes of around 2 to 3% in the past 3 quarters, and GCPL has seen volumes of around 7 to 8%. The trends so far have been that FMCG companies have decided not to completely transfer the cost pressure to the customers, which is why they're also grappling with volumes. Demand is under pressure. Urban consumption is seeing a slowdown. Price hikes have been taken December so far. HUL, Nestle, Britannia have already raised their prices. And lastly, FMCG might brace for a tepid FY25 overall, and companies have already, expressed a cautious outlook in the near-term growth. So this is the overall view of how FMCG sector is playing out right now and what's happening there.
Absolutely, Mahima. Now, Godrej Consumer's mid-quarter update doesn't certainly paint a good picture there. Now, moving on, FADA has released its retail sales numbers for November, and retail car sales seem to have come off the cliff in the aftermath of festive demand. Let's go across to Tushar for more.
Retail car sales in India came off a cliff in November after a tepid wedding season failed to support the spillover of the festive season demand that we saw in October. So four-wheeler sales or car sales as measured by the Vahan website in terms of car registrations declined by about 13.72% year on year and declined by about 1/3 over the year earlier to about 3,21,000 units. The sales of two-wheelers, however, rose 15.8% over the year earlier to about 26.15 lakh units. Now, the major reason that has been seen is that the festive season spillover has happened because Diwali was at the last day of October, but that was not supported by the wedding season that was supposed to help auto volumes in the month of November. Also is seen that the inventory levels did come down by 10 days, but it's still sticky at about 60 to 65 to 68 days, which means that the car makers are now staring at entering the new year, that is 2025, with unsold stock of about 2 months. So FADA has now requested car makers to pare down the inventory even further in the next 20 days or so. What is driving growth was actually the rural demand. Urban is very lackluster. In the urban sales, two-wheeler sales rose by about 9.08%, and four-wheeler sales came down by 16% in urban areas. In rural areas, two-wheeler sales jumped 19, almost 20%, but the car sales came down by about 10%. So that was the retail picture for the month of November as far as automakers are concerned.
Right, Tushar, that's certainly a weak November for retail car sales now. What is the extent of urban India's slowdown? And how can the government push up consumer demand? Tune into Big Story at 6 p.m. as we try and break down these key questions. One stock which has seen a surge of 3 times from its February lows is Paytm. After a tepid listing in November 2021, viewers, the company has seen its shares of lows. Recently, Paytm's Singapore arm is close to finalizing a $250 million deal to sell its stake in Japan's digital payments firm PayPay Corporation. Now, will this aid the stock, or what's next for the company? Harsh is joining us with a deep dive. Harsha, take it away.
We'll start right from the top, the journey itself. Paytm listed November 2021. It was a tepid listing, around 18,300 crore in terms of fundraise. 10,000 crore of that was an OFS. 1.5 lakh crore was the valuation at which they were doing this. And they, of course, a softer listing. Share price was 2150. It's never reached 2150 all the way up until now. So it's been 3 years. We've not reached that number yet. But the stock is 3x up from its 52-week low, which was in February of this year. So it's given solid returns for those who have entered at a decent price. Also, it's currently sitting at half the IPO price. What does Paytm do? And this is going to hold the key. First off, we'll try to break down the business itself. It manages payments for merchants as well as customers. So outside of that, it cross-sells loans, wealth, as well as insurance products to its customers. And it also sells or monetizes products on its existing platform, products like credit cards. That's what it actually sells on its platform. What exactly and how exactly does it operate? First, it acquires individual customers, especially now on UPI that they've had payment, the wallet-related issues, and therefore they acquire on UPI first. They also acquire merchant customers. Payment innovations that they've done is something like a soundbox. When you go to a Kirana store, largely you'll hear a soundbox helping the vendor trying to understand as to how much of a payment you've made to the vendor, and that kind of helps. And then they cross-sell higher margin services to both merchants as well as individual customers, and that kind of helps Paytm really generate revenue as well as profit. This is where a bulk of the revenue actually comes from. Financial services. Well, the current revenue stands at 3160 crore. This is H1 FY25 numbers, mind you, and it's difficult to take trailing 12 months because the bases are very different given all the regulatory issues which are coming through. 3160 crore is the current revenue at H1. Payments and financial services comprises 78% of the revenue. No surprise. 22% comes from cloud services. Revenue has actually fallen 35%. No surprise there either. The number of loans they've disbursed has fallen 60% year on year. 60% plus in fact. 65% nearly.
Thanks, Harsh, for that deep dive. Now on to an NDTV Profit exclusive. Road projects worth 40,000 crore rupees are stuck as NHAI seems unable to score land approvals. Vikas Srivastava has exclusive details.
So basically close to 40,000 crore worth of HAM projects, basically what is called as hybrid annuity model projects. They are stuck because National Highways Authority of India has not been able to provide the appointed dates. Now appointed date happens after the letter of award is given to these developers. So letter of award was given almost a year back, or close to, in some of the cases, even 1.5 years back. But these companies have still not, or these projects have still not received the start date or the official start date for these projects. Now the reason for that is under HAM project, NHAI promises to provide 80 to 90% of land at the time of the letter of award, but that has still not happened, and because of that the appointed dates have not come. So the reason or the challenges are basically right of way and compensation related issues, and also litigation in some cases, because of which the land acquisition has not happened. Now because of that, what's going to happen is that most of these developers will not be able to execute the projects which are almost as high as three times of their total order book. Now this is, according to some of the industry analysts, is expected to bring down the order books to less than 2 times. And the execution of the construction activity is also expected to go down by almost 10% in FY25 compared to FY24. So now all these issues are going to be a big challenge for a road sector, which is already facing various challenges. Like last year, Bharatmala project was stopped because of cost overruns, and no awards are happening in that. Even in the first half of this year, the awards have been very slow. So all this is going to have a massive impact on the road and the construction sector. So I mean, we expect that soon the acquisition happens and these companies get the letter of awards and also the appointed dates, as soon as possible.
Vikas, thanks for that. Now, yes, madam, a home salon service startup is under fire online after allegedly terminating employees who reported experiencing significant stress during an internal survey. A viral screenshot, viewers, of that email from the company's HR manager has ignited the controversy. The email outlined how the Delhi NCR-based firm conducted a survey to gauge employee stress levels, but instead of implementing measures to alleviate the pressure, opted to part ways with those who admitted to high stress. Now the move has, coupled with the email's unapologetically blunt tone, has sparked widespread criticism. Now social media users have accused the company of ignoring employee well-being and issue and using the survey as a pretext for dismissals. Now, fintechs are opening up mutual funds to more people, says Radhika Gupta of Edelweiss Mutual Fund in conversation with NDTV Profit's Hari Priya.
In our space, fintechs have done some good work. They've made mutual funds accessible to a much larger number of people across the country. So, it's enabled us to expand a lot without too many branch operations. So that's a good thing.
Viewers, a group of investors led by the People Activism Forum has approached the Delhi High Court once again. expressing dissatisfaction with the regulatory body's refusal to grant a no-objection certificate for the IPO of the National Stock Exchange. The investors are now seeking directions for the SEBI to approve the listing of shares for the country's largest stock exchange. The most recent hearing in the case occurred on December 3rd, with the next hearing scheduled on March 6, 2025. Now, in its filing, the forum claimed that the prolonged delay is preventing existing NSE shareholders from unlocking the value of their shares. The public is also unable to participate in NSE's profits or invest in its shares through the open market, the affidavit asserts. Now, Prime Minister Narendra Modi, in an initiative launched by LIC, launched Bima Sakhi Yojana in Haryana's Panipat. The scheme will help empower women aged 18 to 70 years who are class X pass, class 10th pass.
साथियों, कुछ साल पहले मुझे यहां पानीपत से बेटी बचाओ बेटी पढ़ाओ अभियान शुरू करने का सौभाग्य मिला था। इसका सकारात्मक प्रभाव हरियाणा के साथ साथ पूरे देश में हुआ। अकेले हरियाणा में ही बीते दशक में हजारों बेटियों का जीवन बचा है। अब 10 साल बाद इसी पानीपत की धरती से बहनों बेटियों के लिए बीमा सखी योजना का शुभारंभ हुआ है।
Viewers, NDTV Profit caught up with the East My Trip, one of the country's largest travel sites, at the sidelines of the Rising Rajasthan Summit. To understand more on the state's tourism opportunity, listen in.
So there's like a commitment of 35 lakh crores which has been done by different investors throughout the world. Even when we come over here yesterday, we've been called by the Chief Minister's office to be here and to probably see what exactly are the opportunities being available. I see the opportunities are immense in Rajasthan. There are like 83 minerals being available in the state, so you probably would not find anywhere. In terms of tourism, this is the kind of place which has a lot of vibrancy, a lot of cultural heritage. And as a matter of fact, like 12% of Rajasthan's GDP has been contributed by the tourism.
Airtel released its spam report 2.5 months after launching its AI-powered spam solution. The report has highlighted some interesting findings like the cities that received the most number of spams call and messages, the age bracket of the people who were most targeted, and much more. So let's go across to my colleague Malika for further details.
Right, Himakshi. So as you pointed out, Airtel has released its spam report after 2.5 months of launching its AI-powered spam fighting solution. And some of the key trends that were observed in the data points were very interesting. Number one, it identified 8 billion spam calls and 0.8 billion spam messages. So 10% of the entire spam communication comprised of messages. It also identified 1 million spammers every day, and through this, it could alert 252 million unique customers to these calls and could also cause a 12% decline in the number of customers that answered these calls. Now, 35% of these spammers used landline telephones. Now, speaking of the demography of these spam calls and messages, maximum number of spam calls were observed in Delhi, followed by Andhra Pradesh and Western UP. And maximum number of spam messages, on the other hand, were observed mostly from the financial capital of India, Mumbai, Chennai and Gujarat. Now 76% of these spam calls were targeted at male customers, and 48% of all these calls were received by customers between the age of 36 to 60. So the middle-aged group received the most amount of spam calls in the 2.5 months after launching their AI-powered spam fighting solution. And also devices in the price range between 15,000 to 20,000 rupees were recipients of 22% of these spam calls in total. Back to you, Himakshi.
Thanks, Malika, for that. That's an interesting report. So now, the Noida International Airport conducted the first flight validation test today. This was a test to pave the way for authorities to begin its operations next year in 2025. An Indigo plane took off from the Delhi's Indira Gandhi International Airport with only crew members and landed on the runway after necessary security checks. It was received with a water salute. The airport is located in Jewar in Uttar Pradesh's Gautam Budh Nagar district and aims to start operations in April next year. It will become the second major airport viewers in the National Capital Region, NCR, after the IG GI airport. Civil Aviation Minister Ram Mohan Naidu called it a prestigious project and that the landing was a great achievement. China's Politburo, the policy-making body of Communist Party, has announced its first policy shift in 14 years, saying they would implement more proactive fiscal policy. Alex is joining us to put this into perspective.
The Politburo, which is the policy-making body of the Communist Party, it's made up of the 24 top officials of the party. It's made a pretty big statement. It's a statement of intent. On the monetary policy side, what they've done is that they've said that they will likely move to a moderately loose strategy next year. And this is significant because this is the first such shift in policy in 14 years. 2011 was when it shifted to a prudent strategy. And the last time they used the moderately loose strategy was during the financial crisis, the global financial crisis. So it's essentially a statement of intent because it is likely to mean more in the way of monetary easing. This is something that has already come through over the last few weeks and months, but there's an expectation of more to be done. On the fiscal side, there is a small change in that they've said that they're going to be more active, or they're going to be more proactive, whereas previously they had said that they will be proactive. I know that this is primarily words being used, but then the expectation is that the Chinese government is taking into account the fact that growth has slowed down. On the inflation side, and this is the latest data that has come through not too long back, the CPI inflation number for the month of November has slowed to 0.2%, which was lower than expectations, and that provides them policy room to have easing. Early days, but one could assume at least that this is going to be taken well by the equity markets.
Thanks for that. Now, viewers, here's a news update from the Parliament. India bloc is poised to move a no-confidence motion against Rajya Sabha Chairman and Vice President Jagdeep Dhankar. NDTV's Himanshu Shekhar is joining us with more details.
This is a proposal on which several opposition parties are now coming on board. We do know for confirmation that Congress is supporting this move. Trinamool Congress and some other opposition parties which are part of the India bloc of parties are now of the view that there should be a no-confidence motion against the Rajya Sabha chairman. In fact, the senior Congress leader and Rajya Sabha MP Digvijay Singh today made an important statement after ruckus in Rajya Sabha when he came out with other leaders, and they categorically said that in our political career, their allegation was that they had never seen such a partisan Rajya Sabha chairman who is repeatedly not allowing the opposition leaders to speak in the House while he is giving the floor to the leaders of the ruling party. So this is one issue, of course, a very, very sensitive issue now. But I do know that there are several opposition party leaders who are now coming on board on the idea of moving a no-confidence motion. Now, the attempt now is being made to ascertain the views of other political parties, especially the non-BJP and non-NDA parties, to garner more and more support on this issue in support of the no-confidence motion. But I think we'll have to wait and see for a formal move in this direction. But at the moment, sources have told us that several important leaders of opposition parties, especially those which are part of the India bloc, are now zeroing on the view that the time perhaps has come to move a no-confidence motion against Rajya Sabha chairman, whose conduct, they allege, has been very partisan during the winter session of Parliament.
Thanks for that. Now, viewers, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates. But before we leave, here are the visuals of first snowfall in Shimla and Dehradun.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
The conversation about AI or the impact of AI is getting more and more polarized every day. There are views on both sides. Some think it's going to be the biggest revolution, some think it's going to be the biggest threat. My speaker on the show today is someone who's very clear, I think, in his view, and someone I'm very excited to speak to. Yuval Noah Harari is a historian. He's an author, one of the foremost thinkers of our time, and is talking about his new book, Nexus. Yuval, thank you so much for speaking with us on NDTV. Absolute pleasure.
It's a pleasure to be here. Thank you for the invitation.
So I did a small introduction of who you are, but here's something I like to do.
Yes.
How would you describe yourself for our viewers?
I'm a historian, but my view of history is that history is not the study of the past. History is the study of change, of how things change. And history is more relevant than ever before because we are in the midst of the biggest change ever in human history, the AI revolution. AI is really different from everything we've seen before in history because it's the first technology which is not a tool, it is an agent. Now, every previous human invention, when people invented the stone knife or the wheel or the printing press or the atom bomb, this was inventing another tool that makes us more powerful. Now we can do this, now we can do this. AI is not a tool. It is itself an agent, which means it can make decisions by itself, it can invent new ideas by itself. An atom bomb could not decide what to bomb. An AI weapon can by itself decide what to bomb, who to kill. An atom bomb could not invent the next generation of bombs. Like the atom bomb could not invent the hydrogen bomb. AI can invent new things, including the next generation of AI. So we are now creating something which might be potentially more intelligent than us, that might escape our control, and start making decisions about us and changing the world in a way that we don't understand. You know, it's already beginning in so many different ways, like you apply to a bank to get a loan. Previously, it was only human beings who could decide whether to give you a loan or not. Now, increasingly in many banks, it is an AI deciding whether to give you a loan or not. And this will happen more and more in universities, in government offices. People sometimes have this science fiction idea that the danger of AI is the big robot rebellion, like one day the AIs will try to take over the world. It's unlikely to happen. The real threat is that we will have millions and billions of AIs, these new super intelligent agents everywhere, as AI bureaucrats in the banks, in the hospitals, in the government offices, in the militaries, making more and more decisions about us, changing the world with new ideas that we cannot understand, and we will lose control over our lives and over the future.
Just to take that point forward, and I'll pick up the example on banks, and then we can see what the argument for is. Some would argue that the bureaucracy, as you describe it, and in the context of banks, is currently inefficient. If you have the right parameters, then this AI decides who to give a loan on for the right reasons.
Yes, absolutely.
You have less bad debt. You don't have a possibly corrupt banker giving loans to a company for a kickback or a relative, and you cut that out. So, I mean, what about that side of the argument?
I'm not saying that AI is bad. I'm just saying it's a very big change. There are many arguments in favor of AI. It could revolutionize banking in a positive way. It can revolutionize healthcare. With millions of AI doctors, so many people can't get a doctor. So if you have millions of new AI doctors, it could create the best healthcare system in history. So even before we get to the judgment, is it good, is it bad, just to understand the magnitude of the change, that for thousands of years, we lived inside a culture created by humans. All the ideas, you know, from music and songs, all the way to religions and economic systems, everything came from the human mind. Now increasingly, we will live in a world in which more and more music, but also more and more religious ideas, more and more economic models will come from an alien intelligence.
Why do you call it alien?
Because it thinks, it makes decisions in a completely different way than human beings. It's not organic. It's more different from us than chimpanzees or dogs are different from us. We are still all mammals. We share the same emotions. We share the same basic attitude to the world. Like we work in cycles. Like dogs and chimpanzees and cows and humans, we are organic. We have day and night cycles of sometimes we are active, sometimes we need to rest. AIs are inorganic. They don't care if it's day or night. They never need to rest. One of the things that happen in every system that AIs take over is that humans are forced to move faster and faster and faster because the AI never rests. You know, even in finance, we talk about banks. So Wall Street is open, the market in Wall Street, only Mondays to Fridays, 9:30 in the morning to 4 o'clock in the afternoon. In the evening, at night, during the weekend, during festivals like Christmas, it's shut. Because also the bankers, they want to sleep. They want to have time with their family. Now AI is taking over finance, and AI works 365 days a year, 24 hours. So if you want to stay in the game, you have to move faster and faster. It happens to journalists, it happens to politicians, and if you force an organic being to be active all the time, you know what happens? It collapses and dies. This is what is happening around the world. AI is accelerating everything, and this is pushing humans to the brink of collapse. Now, there is immense positive potential there if we know how to control the AIs. But the problem is that the AIs are agents, and they are learning how to manipulate us. I mean, I give you one small example. When OpenAI, the leading company in the AI field, developed GPT-4 2 years ago, they wanted to test what can this AI do. So they gave GPT-4 the task of solving CAPTCHA puzzles. CAPTCHA puzzles are these visual puzzles, like you want to access your bank. So to make sure that you're a human and not a bot, you have to identify a string of words or to find a cat or something to show that you're human. Now, the GPT-4 could not solve the CAPTCHA puzzle, but the researchers gave it access to a web page, TaskRabbit, where you can hire people to do things for you online. So GPT-4 tried to hire a human worker online to solve the CAPTCHA puzzle for it. Now, the human got suspicious. The human wrote on the site, why do you need somebody to solve you CAPTCHA puzzles? Are you a robot? It asked the critical question, are you a robot? And GPT-4 answered, no, I'm not a robot. I have a vision impairment, which makes it difficult for me to see the visual puzzle, the CAPTCHA, so this is why I need your help. And the human believed it.
So the question is, who taught GPT-4 to lie?
Nobody. They gave it a goal. They told the GPT-4, your goal is to solve this puzzle, do anything needed in order to solve it. And GPT-4, on its own initiative, first of all decided to lie to the human. It understood, if I tell the human the truth, it will not solve the CAPTCHA for me. I need to solve the CAPTCHA, I won't tell him the truth. Secondly, it invented a very effective lie. Again, this is the two abilities of AI, to make decisions, I will lie, and to invent new ideas. Nobody told GPT-4 what would be an effective lie.
Yeah.
Of all the things it could say, saying that I have a vision impairment, I'm a human being with a vision impairment, this was a perfect lie.
Yeah.
So this is a very, very small example. What happens if this happens on a very big scale, as the AIs control the banks, the armies? You know, maybe the next big financial crisis is caused by AIs, and we can't understand. Like, you go to the Prime Minister, you go to the President of the US, and you say, you have this big financial crisis, but nobody understands what is happening because it's the decisions of the AIs, and it's too complicated for human beings to understand them.
So what this tells us is that deceit is no longer just a human trait.
No.
It is something that AI can pick up. And I suppose then the question is, who puts the leash? Because AI is not going into Pandora's box. It's there.
It's out completely.
So who puts the leash on? I was seeing an interview with Jeff Bezos, who talks about how right now he's spending all of his time at Amazon looking at the utility of AI. Your biggest tech leaders in the world are obsessing about how to use AI. So who puts the leash on?
Ideally, it should be governments, but with the new US administration, this is unlikely to happen. The US is the leading power in the AI race, and in the Trump administration, it's very clear that it is not going to put any leash, to have any regulations. So this is a big danger for the whole world. We could see a repeat of what happened in the Industrial Revolution in the 19th century. In the 19th century, a few countries like Britain and France and later Japan and the US, they led the Industrial Revolution. This gave them the power to conquer and exploit and dominate the entire world for more than a century. So this is how a small country like Britain could dominate and exploit such a huge area like India for such a long time. How could they do it? Because they led the Industrial Revolution. They had the technology of steamships and machine guns and trains. AI is much more powerful than steamships and machine guns. The difference between a country that leads the AI revolution and a country that stays behind will be much, much, much bigger than the difference between Britain and, say, the Indian kingdoms in the 19th century.
So this brings me to my next question. From an Indian perspective, there is no way this country or we can be out of this race. There is no way we can afford to. And every nation in the world is going to think like that.
Yes.
So there is no intent to put on a leash. Everyone wants to be in the arms race. This is the latest weapon.
When everybody is just running faster and faster, we know for certain who will win and who will lose. AI will win, humanity will lose. Because this is the most basic principle in imperialism is divide and rule. And now the competition is not really between US and China or US and India. It's between humanity and the AIs. And if humanity is divided, this ensures that AI will win, because every time you approach a dangerous junction, you say, oh, if we develop this AI, if we don't put in safety and guardrails, this can be very dangerous. But if we slow down and the Chinese don't slow down, or the Americans don't slow down, or the Indians don't slow down, they will win. So we know it's dangerous, but we have to do it. And you ask the Chinese, they say the same thing. We know it's dangerous, but we can't let the Americans win. So we have to do it. And everybody is running faster and faster, and as a result, everybody loses.
So what would your appeal be, Yuval, as someone who is obviously thinking about the big picture for humanity as a whole? Today you're talking about this in the context of your book.
Yeah, we need to solve the problem of human trust before we solve the problem of AI. Like, what we have is it's a paradox. Like, you ask the people who lead the AI revolution, why are you moving so fast and so dangerously? And they say, we are aware of the danger, but we can't trust the other humans, so we must move faster. And then you ask them, but do you think you'll be able to trust the super intelligent AIs you're developing, these aliens, and they say, yes, we think we can trust them. This is insane. We have thousands of years of experience with humans. We know that humans sometimes lie. We know that humans sometimes deceive. But we've experience with humans, and we also know how to build trust with them. AI is completely new. We have no idea how it might develop. This is such a huge gamble. Now, if we can't build trust with the humans, I don't think there is any chance we'll be able to build trust with the AIs. So I think we should, this is a tendency of humanity to focus all the attention on solving the wrong problem, and after you solve the problem, we solved the wrong problem. The real problem of the world right now is not how to develop AI as fast as possible, it's how to rebuild trust between humans. 10 years ago, the world was in much better shape in terms of human trust. It was the most peaceful era in human history. There were wars and conflicts. I come from the Middle East, from Israel. I know this perfectly well. But you look, for instance, at military budgets. For most of history, the military budget was more than 50% of the budget of every government on earth. In the early 21st century, it went down to just 7% of the budget went to the military, compared to 10% to healthcare. Why? Because governments felt very safe. The biggest taboo of the international system was that you cannot invade and conquer another country just because you're stronger. There are lots of civil wars, but the basic taboo was kept, and this is why countries felt safe. Now it's being broken in more and more places. The clearest example is the Russian invasion of Ukraine. This is imperialism of the old style that people have forgot even what it means. People say, it's like the American invasion of Iraq. It's not. The Americans never tried to annex Iraq to the United States. It was unthinkable that the US will annex Iraq to the United States. Now in Ukraine, every piece of territory conquered by the Russian army is annexed by the Russian state. This is imperialism of a kind we have not seen since 1945. And this example is spreading. Countries around the world, in the Middle East, in Venezuela, in other places, if Putin can do it, we can also do that. Then defense budgets skyrocket.
Of course.
So we need to realize if we destroy the international order, what we get is chaos. And in a state of chaos, if we have an AI race, the winner will be AI. Absolutely.
Now, so obviously, because you talked about what's happening in the world, Ukraine, Russia, definitely what's happening in the Middle East as well. You're also a historian. How do you see this conflict ending and the huge toll it has already taken on human lives? And of course, another very polarizing debate on what's happening between Israel and Gaza right now.
Well, in Russia and Ukraine, this is very simple. Most conflicts in the world are complex. This is a very simple conflict. The Ukrainians don't want anything from the Russians. They have no demands on any piece of territory of Russia. It's very, very simple that Russia has just no right to invade and conquer parts of another country. It has legitimate security concerns. These concerns should be addressed. But it should be very clear that a country cannot invade and conquer another country just because it's stronger. It should be as simple as that. And all the countries in the world should be very clear on that point with the Russians. The Israeli-Palestinian conflict is much more complex. It's an ethnic conflict going on for generations. But there too, the peace would come from the realization that both peoples, Israelis and Palestinians, have a right to exist. And have a right to exist in dignity and security and prosperity. There are 7 million Palestinians, more than 7 million. They are born there. They have nowhere else to go. They have a right to exist in the land between the Mediterranean and Jordan River in security and prosperity. And in the same land between the Mediterranean and Jordan River, there are also more than 7 million Jews. Most of them were born there. They have nowhere else to go. They also have a right to exist there in security and prosperity. The problem is that people see only half of reality. Like they only see the Jews and their rights, or they only see the Palestinians and their rights. And you know, it's the human mind is capable of holding two ideas at the same time. Amazing fact about the human mind. We can hold two ideas at the same time. When people, both in the Middle East, but also in other parts of the world, make this accomplishment of understanding, yes, there is the Jewish people, it has a right to exist, there is the Palestinian people, it has a right, then we can have peace. We can, of course, need to negotiate, it's not easy, where the border will pass, and what you do about water, and what you do about this and that, but the deep root of the conflict is that both sides simply refuse to acknowledge the right of existence of the other side.
You know I have a little time left in this interview, so I'm going to squeeze some bits in. We've talked about really big issues.
Yeah.
Let's bring it down to individuals. And you talk about communication in this book. You talk about how a lot of information we're now receiving as individuals is just junk.
Yeah, most information is junk.
And you are obviously on a diet. I believe you don't have a smartphone.
I have a smartphone, but
you barely look at it.
But it's not on me. I just, there are certain services like healthcare, like in the airport, that now you must have a smartphone. But I try to use the smartphone instead of being used by it. It's like with food. We need some food, but too much and too much junk food is not healthy for us. So information is the food of the mind. We need some good quality information, but too much information is not good for us. Like, we need time to digest physical food. We also need time to digest mental food. If you constantly just put more in, you never have time to digest, to think, to meditate, to detoxify your mind from all the anger and hatred and greed and fear, which is, this is the junk information that is constantly flooding us. So we need an information diet. Sometimes we even need an information fast, like take a period, it can be a couple of hours or days, some people maybe even weeks, when you don't consume any new information. You just give the mind time to digest and detoxify.
So, do you ever find yourself doom scrolling before going to bed? Or you never do that?
I very much try not to do so. Again, this is basically hacking the human brain. How do you hack a computer? You find the weakest spots in its code. It's the same way how to hack the human brain. You find the weakest spots in our brain, in our mind, and this is what social media algorithms do. Like, they look for your weakness and they use your weakness against you. And our weaknesses usually are, again, it's hate, it's fear, it's greed. If there is something that makes you very greedy, oh, I want this, then the algorithms will find this out about you and then starts flooding you with this. If there is something you hate, like a group of people you hate, or a politician you hate, or somebody you hate, the algorithms will experiment, will show you this, will show you that, and then when they find, oh, you hate this, they give you more and more and more of that. So this is how they kind of hack humans and flood us with junk information.
One of the things I know you do to detox is Vipassana. It's had a big impact on you. Tell us a bit about that, and for our audiences here in India, how Indian culture and Vipassana has had a huge role for you.
Yeah, so I've been meditating Vipassana for 24 years now. I do 2 hours more or less every day, and I come almost every year to India to do a long meditation retreat of 1 month or 2 months of Vipassana. And for me, the key question in meditation is, what is reality? The mind is constantly producing fictional stories, imaginations. and they come between us and reality. Humans almost never encounter reality. We only encounter the fictions produced by our minds or by the minds of somebody else, or increasingly the fictions produced by AIs. And we don't react to the reality. We react to the fictions, to the images. Meditation is all about learning to tell the difference. What is a fiction and what is reality? Like when you close your eyes and sit down, at least for me, the question that keeps repeating is, what is really happening right now? You know, it starts with the simplest exercise of just feeling your breath coming in and out of your nostrils. Oh, now the breath is coming in, now the breath is going out. This is reality. The breath is really coming in, the breath is really going out. You don't try to create or control anything, you just observe reality. And the amazing thing is, most people can do it for maybe 5 seconds, 10 seconds, and some image comes. Some fiction comes, some memory comes and hijacks our attention. And then for 5 minutes, you roll in some fantasy until you realize, hey, I'm supposed to be watching the reality. You come back to breath. Again, some fantasy comes. And this was like maybe the first thing I understood when I started meditating 24 years ago, is that I have no control of my mind. And I spent almost my entire life engaged with fantasies and not with reality. And meditation is just an exercise for the mind, how to let go of the fantasies and get in touch with the reality. People sometimes think that meditation is escape from reality. You have all these things in politics, in business, in your personal life, and you say, oh, I just sit in the corner and close my eyes, I disconnect from reality. I think it's the opposite. That we spend most of our lives engaged with fantasies. We have no idea what the reality is. And at least for 2 hours a day, I train my mind to get in touch with reality. If I cannot observe the reality of my breath going in and out of my nostrils because of all these fantasies, what hope do I have of understanding the reality of the political situation in the Middle East or of the economic crisis or whatever? It will only be fantasy.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Welcome. You're watching the Mutual Fund Show. Now, the next 20-30 minutes, we'll be having a very interesting conversation to try and understand that if when we say more funds means better returns. Now, to help us understand this better and to get the optimum number of products in one's portfolio, Vipul Bhora, Senior Director, Listed Investments of Waterfield Advisors, joins in. Hi, Vipul. Thanks for joining in. Vipul, one thing that we both would agree on is that diversification at the product level is important. We also do know that over diversification may not necessarily be good for a product. How do you determine optimal diversification at a product level for investors?
Hi, Samina. Thanks for having me here. So completely agree with your thought that more the diversification, it certainly impacts returns at a portfolio level. What we generally recommend is that having a mix of diversification and concentration at a portfolio level, so be it large cap, mid cap, and small cap across market cap, it's best to have a strategy where there is some sort of a diversification and some sort of a concentration. Wherein we're not skewed to a particular strategy, a particular theme, but broadly at the same time we are fairly diversified across sectors. So diversification across sectors is one way to look at the strategies when building a portfolio, and diversification across market caps is something we should look at when building portfolios, and not just randomly diversifying by looking at the performance of the funds.
I don't want you to quantify the number of funds just yet, but would you tell me, how do you determine the optimal number of funds in a portfolio to achieve diversification without an overlap? And does that differ in terms of the quantum of wealth one has? So what I want to understand from you is, if somebody is doing an investment of, say, 10,000 rupees a month versus somebody who's doing 1 crore rupees a month, is the number of funds, should the number of funds be fewer for somebody with a smaller corpus and more with somebody with a larger corpus, or that's insignificant?
So that's completely insignificant, Samina. Ideally, the first question to look at is what should be the ideal market cap mix. Let's assume large cap, mid cap, small cap, and broadly diversified across 3 different market caps. The second question would be, broadly in these market cap, you're okay with max to max 2 strategies. For example, in large caps, you're predominantly okay with having passive strategies that essentially takes care of the large cap allocation. In flexi cap, or a mix of large cap and flexi cap, would be a basket which will take care of your large cap allocation. Whereas in mid cap and small cap, essentially we can quantify into 2 strategies, one focusing on growth while the other is focusing on value. So just trying to create a balance between growth, value is something one can look at, but predominantly not more than 2 or 3 strategies in a particular market cap takes care of the overall diversification and takes care of the total allocation into a particular theme, particular sector, and particular market cap.
So are we saying that 7 to 8 funds is probably a good number across market caps and sectors for an investor to consider while building a portfolio?
Yeah. So, Samina, just to take a step forward, I mean, broadly, most 10,000 rupee SIP might want to still continue building a core portfolio, and then might want to look at building a satellite portfolio. For a 1 crore ticket size, they might want to create a core portfolio and a satellite portfolio together. So a core portfolio will be 80% allocation, and a satellite portfolio can be a 20% allocation. In that context, this 8 can go to 10. But broadly, if someone is just looking at building a core portfolio, not more 8 to 10 strategies are enough to get that overall market cap allocation and the portfolio blend allocation.
Okay, so that is ideal, right? But we've spoken to so many people, even on the channel, when people write in with queries, they've got 40 funds, 50 funds. Every time there's an NFO, they get tempted and would invest in one. At what stage does holding multiple funds become counterproductive due to complexity or maybe even redundancies?
So the observation is valid. When we do come across a lot of portfolios, we see that happening. And essentially what we do is we run an overlap analysis. And that is where most clients, everyone realizes that they have 10 different strategies, but those 10 different strategies actually hold the same 10 stocks. And that's why the portfolio has not been able to beat the benchmark. So the first thing one should look at is try to reduce overlap in the portfolio. The second reason why this kind of a phenomena happens is most of the allocation or most of the investment happens looking at short-term returns. So 1 year, 2 year, 3 returns of a strategy, and hence there is this interest of buying into such kind of funds. And lastly, in every bull run, you have select themes which do very well. So more so to make the most of those themes, you have those thematic funds, and that's where the incremental allocation to the line item just keeps on increasing. So the idea is to first look at overlap. I think in that exercise, most clients will realize that there is no need to have so many strategies. They are replicating the strategies in a way, and that will lead to first round of consolidation and reduce the gap between a concentrated strategy and a broad-based strategy. So these two strategies or these two action points will automatically reduce the overall line items in the portfolio.
Why owning the market may be counterproductive, right? Because if you are trying to achieve returns that are better than the Nifty, I mean, that's the whole idea of investing in mutual funds. Otherwise, a simpler way to do it is to simply buy the index. Why is it important to have a concentrated portfolio which is also diversified? So now this is a little bit of a catch-22, right?
Yeah. So good question. So Samina, what happens is markets go through some sort of a shallow cyclicalities. The sectors also go through some sort of a shallow cyclicality. So in the last 4 years, you would have seen a lot of sector rotation. Sector by sector, we saw earning recovery, and now we are seeing sector over sector, some sort of a consolidation happening. To capture those themes, to capture those sectors, you need some sort of a concentration.
Kshitij, thanks for joining, and I don't know whether you heard my question, but what I'm trying to do is understand from you of how many funds are too many funds. The constant struggle for investors of building a diversified portfolio which is not overly diversified.
Hi, Samina, and there was some network issue, but now things are better. So I think very strangely, when I keep on meeting clients, and it's been so many clients we've met over a period of time. So idea is to diversify, and diversification is done to complement the existing holding across sectors, across asset classes, so that you should not have all your eggs in one basket, but you end up over diversifying portfolio. My sense is if you take equity portfolio basket only, then I think 7 funds are more than enough, which includes your tax saving funds, or let's say balance funds also. I think that's more than enough. Fixed income fund, depending on the maturity of fund which you require in your portfolio, let's say for 1 year, 3 years, 7 years, depending on that, you can have 3 to 4 fixed income funds also. So I think idea of diversification is to generate that extra alpha with reducing the risk. But when you get into so many number of funds which are having unique 300, 350 stocks, then eventually you're actually getting into BSE 500 only. Then I think it's better that you should buy an index rather than just expecting that your funds or your portfolio will beat index with a good amount of margin. And there are studies which have shown over past that over diversification is actually tapering your return down, not stepping it up.
You're so right. You can't own the market and expect to beat the market, right? Some amount of concentration is required. In some ways, also free lunch is, that's what's never available. So you've got to do a little bit of homework when you pick your fund managers to make a long-term bet. But let's quantify this, Kshitij. Of course, Vipul and me discussed that already. But why don't you come in and tell us, what is it that you tell your clients to do? What is an ideal portfolio mix? How many funds are a good number for one to manage, not add complexities, and of course not make the portfolio redundant?
So I'll break it down to numbers. Let's say, as I said, that when you look at so when normally we say that your all investment should come in one page. When it start crossing that one page, then you can't have a track of it. Irrespective of how many softwares you have, how many platforms you have, I think better is to look at a pure equity mix of 4 to 5 funds. That's good enough, where you can have maybe an index fund, a good mix of multi-cap focused fund, a large and mid-cap, and depending on your risk appetite, a small, mid, or a sectoral fund. That's what you can look at. Maybe if you're in an old tax regime, you want to add a tax saver. So maybe 6 is what the account should look at. I know there are a lot of NFOs which are around the corner which keeps coming, but then If there is need or a gap, then only you add. So 6 is the number of fund which you should look at. So that, let's say, many of the funds will have some common stocks, but unique portfolio level stocks should not be more than 140, 145 or 150 on a higher side. I think that's a focus approach which you should look at, and you should go with the flow of these funds in your portfolio and just add or subtract only if there is a need of doing that. So I think that's the fund size you should look at as you keep on stepping up the number of funds. Because right now, last 4 years, Samina, the markets have been really good. Everybody thinks that, everything is firing. So why to unnecessarily reduce the portfolio or let's say concentrate it further. But as our market will keep on growing, you'll find it difficult for many funds to beat the index. So I think you should look at a limited number of funds, as over diversification and the common stocks across funds will keep on reducing the return part of the portfolio. So, and my sense is, obviously it's a mutual fund we keep on talking about. On direct stock portfolio, I'm just adding that if you go more than 30 stocks, I think there are two types of risks, Amina. One is unsystematic and systematic. That's a total risk. Unsystematic risk has been taken care by 5 to 7 funds, and as I said, more than 30 stocks if it's a direct stock portfolio. And systematic risk is something which you can't avoid. It has to do with sometimes some COVID happens, some war situation, some macro things happen. So I think you can't avoid. But unsystematic risk is well taken care. But if you keep on adding more and more fund, it's like overrating or over diversifying. Then you will have 50, 100 bips or maybe 150 bips less on what you can actually do when it comes to overall portfolio.
Right. Just one quick question, Kshitij, on the same space. Do you believe that a larger corpus or a bigger corpus warrants more funds, or the size of corpus does not have any bearing on the number of funds that are recommended, or one requires to beat the Nifty and generate alpha?
In a country where you have 12% nominal GDP, if you're happy with 12% type of return, I think index is something which you should look at. You don't need any one of us, to look at the portfolio. But yes, I agree with you. Where the fund size is large, then maybe you can look at stepping it up, maybe by 1 or 2 funds. But you see the type of growth in overall equity assets we have seen across. So I think it's irrespective of whether you are into 20 funds or 25 funds. So I don't see the size of market is becoming nice. We have good funds with good amount of corpus in it. Sometimes, Amina, I will like to add this, that many of the mutual fund sizes where fund portfolios have become, mutual fund size has become really big. There you might find that the additional delta is not coming that effectively, which can achieve with a decent size mutual fund, because you have to take a bigger bet. Let's say if there's a fund size which is 50-70,000 crore, if you have to do 5% allocation also to a stock, then it has to be done in 2,500 crore of total buying. So in that case, you have to take a call whether further allocation you want to put into that fund, or you want to add something else in your portfolio. That is something. But I will never ask people to redeem, because the cost of redemption is a capital gain. And if you are a long-term investor, I will not ask you to redeem. But yes, over a period of time, if it's very, very highly diversified, then you should trim it a bit. That is what. But I agree with you to some extent. If the fund size if the corpus size is big, then you might end up adding 1 or 2 more funds.
Wow, Kshitij, I think you've done a good job of actually breaking it down and giving us actionables. And Vipul, you may want to come in on this one. So if somebody is watching this show and has decided or has realized that he has more than enough funds on his portfolio, there is an overlap, the cost of investing also becomes higher, rebalancing generally becomes far more complex, right? What should he or she be doing now? Should they be eliminating strategies of funds depending on performance to reduce the number of funds to the ideal 6 to 8 like we discussed? Or should they be eliminating underperformers? So do you eliminate based on repetition, or do you eliminate based on performance? Or like Kshitij said, maybe even your personal time horizon or capital gains or period of investment becomes important. You want to quickly comment on this before we close the loop on this conversation?
Sure. So essentially, I think this is a good time to actually look back and rebalance portfolios. And firstly, the best way to start is look at overlap. And that will be an eye opener in terms of how many funds are following the same strategies. Second, of course, certainly the funds which are underperforming and funds which we've been holding for more than 3 years, and funds which are holding for a long term, over a period of more than 3 years, and underperforming, they certainly merit some sort of an exit or some sort of a rebalancing. So to answer question, first overlap, second would be underperformance, and third then would be a right balance between market caps. Whether in the last 3 years predominantly or last 4 years predominantly, we have seen mid and small cap portfolios have done reasonably well versus the large cap portfolios. So if the portfolio is now which was 50-50, which was 50% large cap and 50% mid and small cap, in the last 4 years would have gone to 60-40, where 60% would have been mid and small cap. So that is one way to look at rebalancing portfolios. So it will be a mix of all the three parts, and that is how one should actually look at rebalancing the portfolio.
Okay, Kshitij and Vipul, I think we'll close out this one. Let's try and get a sense of what and how should one approach total market funds versus multiple funds, right? I know for a fact that when investors are looking to diversify at an asset level, if the corpus of investment is small, you could consider investing in a hybrid strategy. In that way, you get equity and debt, and that's a healthy mix. Those funds also do quite well, and especially if you don't have somebody helping you with asset allocation, these become good funds. Can the same logic apply, Kshitij, to funds in the equity space, where you invest in one fund, for example, a flexi cap fund that would give you exposure across sectors and across market caps? Or do you say, you know what, that may not be ideal? Let's look at funds across market caps, and let's look at funds across themes or, you know, investment styles. How does that work?
That's really nice, Amina. And I keep on, sharing on various platforms that just don't look at that you are into flexi cap or a multi cap or small or mid cap. On a portfolio level, just look at how much large cap, mid cap or small cap allocation you have. And this is very important. Sometimes we feel that, boss, I should have a unique small or mid cap fund. But if you actually see small or mid cap fund allocation, you get through large and mid cap also, flexi cap also, multi cap also. At the same time, I watch for that one should not stick to only one style of investing in terms of, let's say, you have a small corpus, then you should take one or two funds. You should have at least 3 to 4 different funds. And yes, it depends totally on your age, what type of, how much risk you can take and your risk appetite, how much you can do. Second important thing, Samina, here is that when you choose a fund for your investments, you should be wary of the fact that you are coming here for at least 5-year plus time horizon, and depending on what type of goals you're aligning with those funds, I think that also helps. So you should not be looking at only that if there is one fund I should do flexi cap only or multi cap only. You should, if the corpus is small also, I will always tell somebody is having 10,000 rupees to deploy on a monthly basis also, they should look at adding 2,500 against 3 to 4 funds. That's one should approach, how one should approach.
Do you agree with that, Vipul, versus a multi-cap or a flexi-cap fund versus multiple funds? Is that an option? I'll complicate this further. Maybe a couple of multi-cap and flexi-cap funds, or just multiple funds. How does one play this? Because the corpus is small. If you are getting the diversification across stocks and sectors and market cap, then why invest in multiple funds and complicate life?
So Samina, the right advice would be to have a mix of diversification and concentration. So while flexi cap strategies would diversify across market caps and that plays very well across cycles, a concentration will certainly add alpha to the portfolio. So a fair advice would be to have both, have a mix of diversified strategies through a flexi cap strategy, as well as have something which is concentrated, a dedicated mid cap strategy, a dedicated small cap strategy. That would be a right balance to generate alpha.
That's probably the right way to generate alpha. Let's talk about this a little bit more, right? And I want to talk about a behavioral aspect, because Vipul, which I think we all would agree that investing is more behavioral and emotional than actually physical in more ways than one. How Do you think that investors are more likely to stick to their financial plan when the portfolio is simpler, or as opposed to having multiple funds, over diversification? Simply put, the more complicated it is, the lesser chance of sticking to the plan. Do you agree with me, Vipul? That hence merits another reason of why you shouldn't have too many funds.
So completely agree, Samina. So portfolios which or clients which have actually panicked and have exited are those where have had over diversification, and imperially when the markets are doing very well, we see no reaction. But when markets start in the last few months, when the markets were volatile, there has seemed some sort of panic to rebalance portfolios. So a plain simple strategy across different market caps, a plain strategy across funds, some concentrated bets, some diversified bets is enough to plan a strategy to compound the portfolio over a period of time, and of course to certainly beat alpha.
Well, Kshitij, how do expense ratios and fund management fees impact the decision to consolidate investments into fewer funds versus diversifying across too many?
So, SEBI has clearly defined, depending on the fund size, there's an expense ratio which one has to charge. And as the fund size keeps on growing, you have expense ratio which is going down or coming down. At the same time, there is an index fund, Samina, where expense ratios are vis-a-vis active funds are much lesser, or maybe half of the cost vis-a-vis your active funds. And many of the investors do look into it because, whether it's 50 bips, 40 bips, it do compounds over a period of time. But my only suggestion here is that people who have time and can do it themselves, only they should look into this part. Because what becomes important is when they take a call on that, I am buying a fund, but let me look at a fund which is with less expense, because I'm here for 10, 15, 20 years and then 50 bips will compound for a long term. I think that's a wise decision which people take. And nowadays, there's enough transparency of data points which are there. So people do take into account, and that's how we have seen a little bit much more traction towards your index fund, because their expense ratio is less, and traction towards those funds which are having low expense ratio. But my submission here is, Samina, this is very important for everyone to understand that sometimes a fund size which has become very big, as I said earlier, they are not able to take bets into smaller or mid cap capish companies, whether flexi cap or multi cap, beyond one stage, because let's say, as I said, for a bigger fund, for 5% also, it becomes huge corpus. And then at that time, they have to go a little conservative. And you see that irrespective of last 10 years, 5 years return looks good. But often, if you actually analyze last 1 year, 1.5 years return, 2 years returns, for many of the bigger funds, it's in second or third quartile, not in the first quartile, which were doing really well earlier. So I think much bigger fund size, my personal view is that one should look at fund size between 20 to 30,000 crore is the right fund size which you can look at. Lesser, if there is a good fund, is also a good size, but something which is going above 35,000 crore, I think there you find that performance is taking a bit of a stack, because as the fund grows, your at fund manager level also, to move one needle, let's say you not buy a 0.5% or 1% in a bigger company, then you have to buy a bigger chunk. So I think people do take a call on the expense ratio, but then they should take this into account, that what is the sweet spot and how they can manage between the expected return and the expense ratio what they are paying right now.
Right. Too large a fund makes it very difficult for the fund manager to navigate the markets and, of course, make concentrated bets where the impact of that will be material. One last question before we wrap this conversation up, Vipul. For individual factors, we've talked about the ideal portfolio size and, the factors that one needs to track when they're rebalancing at this stage. But personal, objective and subjective in nature, risk appetite, financial goals and time horizon, how important are they in terms of dictating the choice between few broad-based funds and a more segmented approach in that sense?
So certainly, Samina, risk is individual, and of course, depending on the risk profile of the client, the market cap allocation varies. Someone with an aggressive tilt would generally prefer 1/3, 1/3, 1/3, which is 1/3 large cap, 1/3 mid cap, 1/3 small cap, and someone who is conservative might want a 70-30, 70% large cap and 30% mid cap. So risk is dependent on the individual. Of course, time horizon is something which in equities you need to have minimum of 5 to 7 years for portfolios to perform and for returns to compound. So that is on time. But broadly, what I've seen is that as portfolios get built, one thing which most clients don't spend time on is in actively rebalancing portfolios. What happens is over a period of time, once a portfolio gets built, they generally keep on holding and don't monitor it actively, be it on performance, be it on expense. And that's where constant monitoring and constant active rebalancing in between 3 and 5 years merits to do that, and that will actually help build long-term compounding.
Right, Vipul. Thank you, Kshitij. Great having both of you on the show. So, of course, you don't want to over-diversify, build a diversified portfolio, rebalance it, not too frequently, but frequently enough. Don't buy a fund, go invest in a fund that's too large, but not in a fund that's too small. So, lots of ifs and buts, and if this is your full-time job, that's good for you. If not, you should be seeking help from your financial advisor to actually build the optimum portfolio, because while investing is important, reviewing it is also equally important. With that, it's a wrap on this edition of Mutual Fund. Thanks for watching. A lot more programming on the other side, so keep it with us.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Well, good evening and welcome. And we are now just getting some breaking news. We are told that Sanjay Mehrotra is to be the next RBI governor. In fact, the appointment has already come out, and we have a copy of that letter, which essentially says that the appointment committee of the cabinet has approved the appointment of Shri Sanjay Mehrotra, IAS from the Rajasthan cadre of 1990, currently serving as the revenue secretary, as the new RBI governor of India. Now, he's been appointed for a period of 3 years. Vishwanath Nair, our banks editor, is also joining me right now on the broadcast. So, Vishy, coming as a bit of a surprise suddenly, because right. the outgoing RBI governor was set to retire tomorrow.
That's right. So, Nupur, the announcement that's coming in with Sanjay Malhotra, his appointment is for 3 years starting Wednesday, 11th of December. Shaktikanta Das's tenure was set to end on the 10th, and there was a lot of speculation as to whether there will be an extension given to Das or not. But now we've heard from the government where they've announced the Department of Revenue Secretary Sanjay Malhotra as the next RBI governor for the period of 3 years. Now, remember that Shaktikanta Das served as the RBI governor between December of 2018 and now December of 2024. So that's a 6-year long tenure. He's the second longest serving RBI governor, and a fairly successful one, if I may say, for at this stage. But yes, now it's time for a new RBI governor to step in. We'll learn a little bit more about Sanjay Malhotra over the period of the next few days. But as far as we know, he's of course a very well-respected, a veteran IAS officer from the services. He's had 33 odd experience over many departments of the ministries. I have with me Shrimi Chaudhary, our colleague from Delhi. Shrimi, if you can tell us a little bit about the latest announcement on the RBI governor.
You know, yesterday actually
when Shaktikanta Das met Finance Minister Nirmala Sitharaman, which is usually a courtesy meeting, after every monetary policy, everybody was, of view that and lot of rumors going around that he may get extension, maybe a partial extension, not the full term this time. But clearly there were, the Sanjay Malhotra and in fact some more contenders were always like there, and the talks have been going on to that Revenue Secretary might be, be next RBI governor. So 1990 batch Revenue Secretary, he has been in the government service from last 33 years, and before Revenue Secretary, he was also with Department of Financial Services. He was Banking Secretary and taken lot of banking related tasks when he was there, Banking Secretary. During the Revenue Secretary period also, he has taken lot of, important decision like withdrawal of angel tax, like other than that, corporate tax and the personal tax also decision was taken under him. So clearly he was one of the contender for the post. However, we were, not clear so far that whether government will extend the Shaktikanta Das or some new bureaucrat will take the place.
Right, Shrimi, thank you for that. So, as we were discussing, Nupur, this is a fairly major announcement that's coming in from the government, right at the nick of time. The timing of this, right, a day before Shaktikanta Das's tenure ended, you have the announcement of a new RBI governor coming in. What will the new RBI governor look forward to? Well, there are a multitude of issues that Sanjay Malhotra will be expected to come up with solutions for. Firstly, on inflation, right? While a lot of the inflation that the country is facing right now is coming from food inflation, that's not really the RBI's ambit to manage. Having said that, there's a lot of coordination that happens between the government and the RBI. So Sanjay Malhotra will be expected to ensure that coordination works out well. The second one is the growth number. Now, the Q2 growth number at 5.4%, right? That was another place where there was a lot of debate whether this number is truly really bad. Is India's growth, hampered? Having said that, the CA as well as the RBI governor, Shaktikanta Das, in the last monetary policy announcement, both of them were very confident that overall the growth is not going to suffer that badly. Yes, the RBI has revised its growth expectation. It is still above the government's growth expectation by about 10 basis points. Government expects 6.5%. The RBI is saying 6.6. So broadly, they're still saying that we will continue to be the fastest growing economy in the world. In terms of what will turn around, essentially agricultural growth will come back, government spending will improve, and thereby overall growth is likely to go up. So if there is any persistent growth issue, that will be something that will fall on Sanjay Malhotra's table, because essentially the RBI, being an inflation targeting central bank, has a dual mandate. It has to balance inflation and growth. While so far Shaktikanta Das's tenure has been managing inflation, growth still becomes a significant topic that the RBI will have to tackle in the future MPC meets where Sanjay Malhotra will take over from Shaktikanta Das. So two key issues that they will have to manage. Apart from that, there are issues bubbling in the microfinance sector. So that's something that as an RBI governor, he will have to face upfront. Unsecured lending, and of course, with Shaktikanta Das, a lot of those issues have been dealt with, but the blowback of past lending, that is something that still we need to see whether that's coming or not. Lenders are confident that nothing of that nature is happening, but we still need to wait and watch what the RBI says at the end of it. He has a team of 4 deputy governors under him who will one of whom is going to retire in January, Michael Patra, whose tenure ends in January. And the government has put out an advertisement seeking another replacement for MD Patra. We still don't know who is going to be appointed at that position, or whether Michael Patra might get another extension. He's already on an extended sort of a timeline at this point in time. Apart from him, there's T. Ravi Shankar, Rajeshwar Rao, there's Swaminathan Janakiraman. all of these are very well-revered and long-serving, bankers as well as RBI insiders. So we will need to see, what Sanjay Malhotra will be faced with as he takes over.
Absolutely. Let's get in a word from Shrimi as well. Shrimi, Vishy, of course, here was just taking us through what are the expectations in terms of the tenure that we're looking at for Sanjay Malhotra. But give us a bit of an overview of, what his past appointments have been, because he's been the Revenue Secretary, but before that also, he is a Rajasthan cadre RIS officer. So give us a sense of where he's coming from.
Yeah, so of course he's 90 batch Rajasthan cadre IAS, and he's been in the government from last like 33 years in tours. And if you see the track record of him, he's been in SECI level. He was banking secretary, and before that he was also with rural electrification REC. So the appointment is coming at a time, Nupur, when the budget making exercise is in work, and as a revenue SECI, he is also play a very crucial role in the budget making exercise. Now, when he's moving to for RBI now, the thing is that who will be the next revenue SECI now, because it's the being a revenue SECI, you need to deal with all the issues related to budget. So we are of course tracking that as well, that who will be the new revenue SECI here. But the real challenge in front of for Shaktikanta Das and also for the revenue SECI, since the budget exercise is on, is how to sort of balance both inflation and growth, and how to sort of boost consumption. Whether government is planning to sort of some measures to boost demand.
Absolutely. I was just going through the portfolios he's held earlier, and very interesting bits of positions that he's held. He's also, was the ex-officio secretary of the GST Council. He has also overseen the government's non-tax revenue sources, including income from interest on loans, dividends from public sector units, PSUs as well. So, Vishy, all of that will come in good stead when he moves into his new role as the RBI governor.
Right. Interestingly, this is also the time when the RBI is at the peak of its sort of popularity. Right. Parts of it is Shaktikanta Das is doing, but overall, the RBI has been a very pragmatic regulator, let it be the global financial crisis or the crisis that followed COVID, geopolitical tensions. In all of these times, the RBI has successfully sort of waded through all of these issues and ensured that India remains fairly at a strong wicket. Now, Sanjay Malhotra will inherit a very strong RBI. What he will also be expected to do then is to then take it forward, right? At this stage, as far as supervision and regulation go, the RBI is at its peak. As far as inflation management goes, the RBI has done a fairly good job. Currency, inflation, growth, all of these key issues that are facing India. The RBI has been very, very good with managing all of these, including, of course, a relationship with the government. There as well, the RBI and the government are working well in tandem. And this is something that Shaktikanta Das repeatedly says in all the interactions with the media that he has. The RBI and the government always work in tandem. They have regular discussions on the issues that are facing India and how to best manage them. As Shrimi was pointing out, this is coming at a time when the budget exercise is taking place. So there again, there is a crucial role that the RBI has to play. The RBI is the money manager for the government. So if the government decides a certain amount of money it needs to borrow or lend in the next financial year, that's something that the RBI runs, that entire process, right? So it's important. It's an important position, and somebody from the Department of Revenue coming in and taking over will be sort of a key blessing, because of course they are already aware of what are the discussions that are going on between the Finance Ministry and the Reserve Bank of India. So that will be something that will be helpful. We are coming back to the era of bureaucrats taking over these key roles, like for example the RBI governor also. In the interim, we had two governors who came from outside the entire government machinery. Then Shaktikanta Das took over, who's a veteran, sort of lifelong career IAS officer. And then after Shaktikanta Das, now we have another veteran, another veteran IAS officer coming in.
Now, quick word, Vishy, on the achievements of Shaktikanta Das. The new incoming governor will have big shoes to fill.
Yeah. So if you, for people who don't remember, March of 2020, when the COVID crisis sort of gripped India, at that point in time, Shaktikanta Das was about 2.5 years old in the RBI governor's chair, right? He took over in December 2018, and we're talking about March 2020. During that period of time, it was crucial, to keep the RBI running, right? He did that. He ensured that first and foremost there is going to be work from external locations, because people couldn't enter the RBI at that point in time. What he also ensured was the fact that the banking system had enough liquidity so that people who needed credit could get credit. People who could not repay their loans, they got a 6-month extension on their repayments without being classified as an NPA. It also did not blow out. Like in the past, what we had seen is that every time restructuring took place, the banking system was left with a huge load of NPAs that came later, right? But as the RBI governor, Shaktikanta Das ensured that there was management of that stress portfolio without it affecting the broader sector too much. Some of the smaller lenders did face some amount of impact, but it was bound to happen. It was a global pandemic, right? So first was that. Then in 2022, which was fresh from his next reappointment, was when the Russia-Ukraine crisis took place, and the RBI had to step in because currency markets were going haywire. There was also issue with the oil prices, which were rising consistently. So the RBI had to act, and that's what they did. They came out with a surprise rate hike, and then they went meeting after meeting, hiking the rates till about 250 basis points. They raised it from 4%. The repo rate went up to 6.5%. So they waited till then. Then they had a huge, long period of just waiting, right? And it's key. In the last monetary policy, I was talking to the governor during the press meet, and when I asked him, clearly you have a growth sort of bias in your speech as well as the indications that you've given, considering the GDP growth number for Q2. Why is it that you're holding on to the status quo? And he says that in the life of a regulator, there is no room for knee-jerk reactions. Shaktikanta Das is a believer of waiting for the right opportunity, right? And that's something that is very difficult to come by when it comes to global central bankers. Some central bankers have had to hike, then cut, then hike again, because decision making was just so complex at that point in time, and maybe waiting could have helped, or maybe their domestic conditions did not allow them to wait. Having said that, Shaktikanta Das did a fabulous job as far as India is concerned in ensuring that that is continued. What he also manages to do is that stakeholder communication, whether it be the Paytm issue, whether it be